Hello, guys. How we doing? Good to see you all. I will stop the strobe because it might be, a bit too much just here. Just give me a sec. Let's go. Actually, you know what? You guys can vote for the color you want here. We can do colors of the rainbow. So give us a vote. Red, blue, green, purple, yellow, variants of that. Let me know. But yeah, good to see you guys. Happy Thursday. Good morning to everyone. Definitely evening for me, but morning for you guys. I'm going to chuck some music on here. Not sure who's joining me or not tonight, but we will see. Good to see you guys. Sigma, how we doing? Where's LJ? I'm right here, brother. I'm right here. Here we are. How we going? Ty, good to see you, mate. Good morning to everyone. How we doing? Unbiased trader. What do you mean I'm late? I'm right here on time. What are you talking about? Don't be silly. Henry, mate. Henry, how we doing? I hope you haven't had too many storms or weather stuff up on that side of the city. I know ours, it's been a bit windy, a bit of rain here, but I saw it was a little bit different for you guys up there. So hopefully that's all right. But yeah, everyone, welcome to the Fivers live trading room today. We'll jump into the charts in just a second after everyone piles in. Morning, Scott. How we doing? And yeah, thank you very much. Thank you, Unbiased Trader. I was going to say, mate, dude, all the weather forecasts were meant to be for some pretty heavy rain, some of that North Queensland tropical cyclone stuff to actually get down here, but haven't really seen it. It was a bit humid, bit overcast for a while, but no actual rain. I would actually like some rain to cool it down, just like you're saying, scorching sun all week. Exactly. So good morning from Kenya. It's in the afternoon. Good morning, brother. Morning, Derek. Good to hear. How we doing? How we doing, Bright? Morning is morning. On the golf course there, I see. Wonderful. Is that a golf course? I don't know. It looks like a golf course. That grass looks very manicured. So, but yeah, we'll jump over to the charts in just a sec. Let me swap over the screen. So, today, guys, mate, throw me anything you guys are looking at or have questions about or charts you want me to analyze or whatnot, and then I will also run down what I'm looking at. Just let me bring up my personal data stuff for news and everything else. Been very busy today, all day today, guys. So been in a bit of a rush. Okay, so first of all, data tonight. That's what I was going to start with. So we got week-on-week unemployment claims tonight, and we do have the New York Empire State Manufacturing Index tonight coming out as well. So do not mistake that as being a minor. Some of these news, depending what website it's already you go to, someone will say it's either minor or very medium impact news event, but that will actually be very important. It goes towards ISM prices, PMIs, that kind of stuff. So these are actually the front-running indicators to that data. So do not miss that as well. As per typical, we have week-on-week unemployment claims. We've got some of the other portions like business outlook survey from Philadelphia Fed. And then we do have a couple Fed speakers tonight in the AM my time. We've got Richmond Fed Barkin speaking tonight as well, later into New York. So that's what we have to look out for tonight as far as the scheduled data. Of course, if you guys, any of you guys trading CAD as well, we do have housing starts, which is relevant. Obviously, housing in particular in some of those kind of countries like Canada, Australia, New Zealand, is far more impactful than places like the US because we have a floating interest rate for housing, for mortgages, versus the US, which is, you know, people get like a fixed 10, 20, 30-year mortgage. So very different overall. Oh, Mike, dude, you've done it? You've done it? Oh. Okay, please tell me, Mike, where'd you get in? Because if you're long right now, this might be good. This might be good. Especially in the past while, we've actually had this drive up. This is the 5-minute chart. Let's go out to the 15. So I take it you might have picked up one of these bottoms per knowing your strategy and approach. You might have actually cleaned up pretty nicely on this. So tell me, please do tell me your entry. Yeah. Henry saying Brent breaking the 15-minute base downwards. Okay, well, I've got West Texas here, and then we'll cross over to Brent as well. So I will say oil is one of those controversial things right now. Since we've had the Venezuela thing, all this kind of stuff, we've had a number of you guys asking about oil in general. I have still very much been on the downside for oil. I do not see any upward pressure in terms of supply demand for oil. If anything, we have more supply coming online. We've got all the same status quo stuff as far as OPEC, as far as Russia selling oil on the back end to China in sort of aftermarket type avenues when they're not meant to be per sanctions, etc. I don't see any reason for oil to rally at all. My prospect, I think, when we first had this at the start of the year was basically 62 down to 55. And we've basically gotten that rally to 62. This is West Texas. Obviously, we'll look at Brent just after. We're looking at West Texas right now as far as the implications for the Venezuela occurrence is more relevant to West Texas oil. So that's the American direct oil. And I believe I went over with you guys as to why Canada may be one of the biggest losers for oil. Since through, I don't have the data for 2025, but 2024 was the US bought 128 off the top of my head, billion worth of energy related resources. Majority of that was oil, right? So reason for that is since 2010, 2011, when we had these kind of ideas around oil being very scarce and we were going to run out of oil in 2020 for the whole world. And then all of a sudden we invented shale and fracking. And then that oil was dug deeper. That produces a lot of sweet crude oil, right? Versus the refineries are built for a heavier, more dense crude oil, right? So to put this in simplicity terms, the lighter oil is considered sweet, denser crude oil is considered sour. So to match that up, they buy a large portion of oil from Canada, which is denser, heavy, sour crude oil, and mix that in with the sweet crude oil to get like a medium output. But ideally, the refineries are built for slightly more heavier crude oil. Now, the thing we had with Venezuela has a lot of dense, sour crude oil. So if they are now taking over control of that, they will be shipping a large portion of that to the US to increase the efficiency of those refineries and do whatever they're going to do with Venezuela, pushing some of that monetary gain back to the country. And I don't know how they're exactly organizing this. I don't think they do themselves yet. But yeah, on that stance, all this does is overall increase the potential capacity of oil to go to the market right now. And you also have Trump wanting to suppress oil prices, one for inflation and for just general consumer costs, right? So he wants the double thing of what consumers and the public sees versus also what the actual political economic numbers come out, as far as like the Fed and the input prices to the Fed decision as far as interest rates. So he's spoken publicly about that many times to keep prices down, and that's very much the direction that we have right now. So that with the Saudis, everyone else, and the Russia thing is kind of a side war. Now, the other portion with the Russia thing is the US now having that control. They now have further leverage over Russia, potentially, because Russia is obviously part of big oil specter right there. That also weakens their position in Ukraine. Net, oil will be controlled by the US. They're already the heaviest producer, and now they've increased their capacity to do that. So same if we go to Brent. We've basically got the same dump. So for Brent, I would be looking for like a 55 to 66 kind of range over the next period. I don't think we'll be pushing beyond here at all for Brent. That does not make sense as far as demand going on right now. And the same thing for West Texas. This is typically the one we look at because it's probably the most active with Trump right now. But yes, downside potential, very great. So down towards 52. Righty, enough about oil. But yeah, Henry, definitely. So the 15-minute breakdown as far as oil, very good. I like that. I like the general downside tilt, basically, of selling rallies on oil right now. There's a lot of chatter in the greater finance community about oil now all of a sudden finding a level to go higher. No reason for it. I also equally love finding a nice place on oil and taking a good long and getting those swaps. So I'm very much looking for that long side, but right now it is just not presenting. So, okay. Going back to Mike, you bought at the bottom, bought down here. Okay. I know you did. You're a good man. You're a good man. You know what you're doing. 4603 to 4609. Dude, that's solid. You pretty much got the straight run through here. So 4603. Yeah, that's what I thought. That's exactly what I thought. That run through here, the build up. Boom, that's perfect to your structure. And then right up to 09, which is just within the safety level below those heads. That's a classic Mike trade right there. Now waiting to see if we get sells back in again. That is interesting, to be honest. Because I mean, gold has been great and also hard. As far as when we get into hard, when I say is when we get into this kind of mid-range, that's when gold becomes very hard. So as a bunch of you guys know, we map this out as far as using the standard deviation channels, and you guys can see how this is a really nice indicator for both your long trades to exit as well as consolidation periods for the next run higher, right? As we were talking with Dirk. When you get into that middle range in gold, it's dirty. I always hate it, right? So I always prefer the buys from the lower end and then continue to hold that to the upper end. or vice versa from the extent, pulling back into fair value, finding some kind of support level like we did through here, and then potentially either taking profit or observing a new buy opportunity through there. So gold right now, I gotta say, Mike, unless we start breaking the current momentum, I think we'll get a pause here because we've got some moving averages. The momentum has stalled over in general, overall. But I would start to say this is the kind of trade that I would ultimately preference, like a long-standing long trade right up to new highs, right? So that is the type of thing that I would start to preference. And then you find, gold tends to like round numbers, especially once you're in free air, because it's very much a humanistic standpoint as well. You got to anchor onto some kind of point, and it tends to be round numbers overall. So somewhere around that 47.40, it looks like we will get towards 5K much sooner than most people expected. It's being vaulted by the Venezuela actions, as well as Trump's subpoena towards the Fed from the DOJ, which he has influenced certain peoples to do so. So I would say, prior to that, obviously I gave you guys my expectation for gold was probably about 5,200, where we sort of settle the year, probably get a peak price about 5,500 to 5,600. I think that might be a bit higher, might need to be pushed up another 500 points either side. Settlement price towards the end of the year might be around 55, 56, and peak price around 6K. My only question around this is that this is getting to a very extreme valuation as far as the total valuation of the asset, as far as all capital on the planet. So what's the, I think we're close to, 45 trillion for gold? Okay, that's not very helpful. Oh, dude, I gotta say, I hate that. I don't know what version of Gemini they have implemented in when you just make a basic Google search and it brings up at the front the AI search. It is terrible. I often read that, I'm like, that's completely wrong. Well, we're well beyond 30 trillion. So the total, global capital base is 130 or 140 trillion now, I believe. So gold at 30 trillion, which this is talking from a prior time. So for us to go to 6K, be upwards of 40 trillion. I know someone else can check that math, because I'm just Googling this right now in real time. And like I said, I just read some of those stats off the Gemini AI assistant right there, versus going into all the deep research, which is clearly wrong, because I have these numbers somewhere else. I think they're on the laptop, however. So, but and Henry was saying, I got to catch up way faster on chat, guys. Sorry. Henry was saying before, and Trump saying he won't intervene so far as on Iran's protests as execution supposedly ceased. Yeah, look, the Iran thing is a whole nother question. I, to be honest, hope he doesn't try to press on that. I think Iran is a bit more sophisticated than both the general one, the investing community realizes, And I mean, you got to say the administration knows that, but there will be a heap of push to say this happens or that happens, and it's because US entrants have come in, and that's why this is happening. And you could get into this weird mixed picture where it's not so clean cut for the US, as though they just alleviated Venezuela for existence, for example. Right, so that's when it gets very messy. You start to bring in the greater UAE, as well as that whole region in general. That would not be good. That would be very, very irritating and difficult to manage and deal with. And then that is when we will have different outcomes for things like oil and all sorts. Raf, how are we doing, man? I'm doing well, bro. Good to see you, mate. And I can see Mike saying hi to you. This is ages ago now, but I'm trying to catch up. Sorry, guys. So, Cam, how are we doing, mate? How are we doing? I'll have to get down to the coast, like we were saying a couple times earlier. We'll have to do something for sure. It'll be fun. Alrighty. Trump going to invade Greenland. Gold definitely has more upside potential. Yeah, so the Greenland thing is obviously people are weighting it more as a potential to actually happen. Since we had the Venezuela thing, I don't think it actually will. It does go into the whole NATO type situation. I can't quite figure out what the exact angle of Greenland is. Is that the current time of being, the US has reduced the number of troops and the degree of infantry and military presence in Greenland over the past couple of years. They haven't increased it further since, ratcheting up this rhetoric. I don't see any benefit to them taking it over or doing this kind of weird stuff. I think it is more of a saber rattling type situation where Trump's trying to say to other players that, again, that kind of unpredictable, I'm kind of crazy type element that I'll do whatever. And then I think he's trying to also portray it in that it doesn't become this like taco type thing, that he needs some wins to say, no, he is crazy and he will do random stuff. Because if he keeps playing the same game, just like the taco thing, Trump always chickens out, it loses its value. So if he wants to keep playing that same game and have that same impact, he needs to then come back and do something weird, like Venezuela, and people are like, oh, he's still playing the same game. And then you don't quite know if he's really kidding or whatever, or he's actually going to pull the trigger. So that definitely seems to be what the case is, because the US could easily, place troops there, place a military base, have as much presence as they want. It's not going to harm the people of Greenland. It'll be no different, and you keep all the sanctity of the country and ownership and all that kind of stuff. And yeah, it's quite a weird. I don't quite get the angle. It seems because there's no direct angle from getting Greenland. They can already do that because they have that partnership. So the only thing seems to me more of a I'm willing to do crazy stuff to adversaries rather. It's a very odd positioning. So we'll see where that goes. But yeah. Someone was saying the problem with the standard div indicator is that it adjusts to current price data and thus suffers from curve fitting. So it always looks good on the chart because the constant adjustment. Yeah, I definitely agree. So this is also something he spoke about on the Monday as well as yesterday with Dirk when he asked me to go over it again. That is why I get the best fit that I see as far as usable execution at about 120 as far as the length for the look back period. Now, as I was saying then, the point is to go into the lower time frames, not just use the standard dev channel on its own, but use it in combination with a secondary derivative of some kind of execution point, or a third or fourth derivative. Coalesce that together with your trading strategy, and then you'll get some execution points. The same way, if you go to high time frames, you're pretty much just, it's another way of viewing the ATR essentially. And I've also gone over the standpoint of using a standard deviation. Obviously in finance in particular, you have long tails, right? So you can't take the thing as gospel. A traditional bell curve in finance does not exist. It will exist in certain periods of time, and then after that is dead, right? So you always want to take that into context of what you're looking at, be aware of that it may be missing some kind of data. But the idea is it gives you like a guideline for what you're looking at right now. And so that's kind of how you go with it. So it's not like a one fits all and you just run that. You then combine things with other market structure, whether you want to run moving averages, VWAP, something else. You might take options into consideration depending what level of sophistication you want to get into. So as I've said, this is just my trading view on here. I have a couple of indicators on my personal accounts. It's much more sophisticated. I have a bunch of things going on and it's a bit chaotic. But for me, a lot of it is past data. It's not actually always present now, but having it on the charts will make it look like chaos to you guys. So that's why I use TradingView to try and demonstrate the stuff. But yes, I definitely agree with that. Now, as long as you know how to use the expansion over time with that for curve fitting and take that into recognition, then you can use it appropriately, definitely. Do you want me to toss you in, Rich?
Yo!
Richard Butler!
Everybody!
Wait, hang on, we got some music here. We need where's the drums?
I'm just jumping in for like half an hour just so that you're not alone, mate.
Yeah, thanks, man. Thanks. Yeah, I don't know who's meant to be here today. I have no idea, but it's just me. So either way, we got Rich.
It's gonna be me, mate. Like I'll be with you just a little while, and then I'll see you later. You've jumped in so many times when I was alone, so may as well just return the favor. What's up, everybody?
We're doing good. Everyone in chat's doing good, it seems. I've pretty much caught up on chat right now. Henry was saying we're talking about gold market cap before as well. So yeah, 32.125 trillion. I gotta say, Henry, I'm definitely sure it's bigger than that. I feel like it was 30 back in like October. I think it's closer to 40 now. I'll have to double check, but because I was talking with Dirk overall, so we'll see. But also, yes, guys, please, you got to help us get to 100K. So if you guys are just joining the stream, or this year you've jumped in, you've discovered the fivers, please give us a like, subscribe. You can find us here every day, Monday to Thursday, and I believe in the future will be extended a bit more as well. So you can get all your assistance, whether you just want market updates, all that kind of stuff. You've got a bunch of beautiful hosts here who've been trading for a long time, for many, many years. And so, yeah, help us with that. It's also the 10-year anniversary of the fivers. So if we can hit 100K on the 10-year anniversary, that would be the icing on the cake, or the cherry on the what is it? Not a banana, cherry on the sundae.
Dude,
that's it.
It's the cherry on the sundae. It's the cherry on the cake. It is the cherry on the whatever. Like it's that little topper at the top just to make that extra sweetness.
There you go. So yeah, we appreciate you guys. I hope you guys are having a good time. We've got a great community here. Obviously, not just us guys, but with the larger community in Discord, that kind of stuff. Make friends, build your own little teams. You guys can work together and talk together and chat and form, find friendships, all that kind of stuff. So subscribe, like, it helps us along in a great way. So pleasure to have you here overall.
Wow, what is this, LJ? Like this is not the crazy LJ. This is the very, I don't know, like how can I put it? The thankful, you're always thankful, but like you're usually like, yeah, no guys, let's go, let's nail this. Now it's just like very subdued, very friendly, very cordial. Dude, don't be like that just for my sake. Like you can go crazy. You can tell people smash that like button.
It depends. I mean, you gotta bring some variance. You can't repeat the same thing every day, right? But,
fair. Keep them on their toes. Like nobody's not gonna know which LJ they're gonna get on the day. Is it going to be crazy LJ? Is it gonna be Doc Lock, or is it just going to be, is LJ reserved, very soft spoken?
Yeah, it depends what's going on, how chaotic, how much sleep I've had, that kind of stuff. Right now, dude, I'm sunburnt as anything. That's the other thing I was noticing on, how we've been talking about getting back into fitness and stuff. I'm just noting I'm sunburnt all over from going for runs now. So I was like, oh, hopefully that's...
I saw myself the other
day as well,
because it's summertime for us as well in South Africa. So summertime is generally outside time as well. I'm pretty sure it's the same way across the world. If it's summertime, everybody's out. But you kind of like, you don't always take into consideration how much UV radiation you're getting, at that time. Yes, it's hot, but it's hot for a reason. So UV radiation is pretty high. If you didn't put on your sunblock, mate, you're going to be as red as a tomato, like the two of us are at the moment.
And that's the other thing with UV, it's very different to heat, because it's the same thing. I first went to Australia. So some of you guys might know, the ozone has always been above Australia. So one, it's already hot here. Plus, then we've had the ozone being expanded, increased UV, that kind of stuff. It's contracted over the years because we banned what was the PFCs? I don't know, whatever it's called. Whatever gases. There was a specific one.
Yeah.
Anyway, so that has contracted, but now it's mostly, since it's contracted, it used to be larger over Australia. Now it's mostly over Tasmania. And so when I went to Tasmania year before last, I was like, oh, it shouldn't be that much worse. And me living in Australia, I went there and I got burnt to a crisp. I was full red, burnt day one. Because I was like, oh, okay, we're here. We'll just go explore
from day one.
Place. So I'll find out what stuff. And the whole 2 weeks that I was there, I was just burnt to a crisp, just red. And I was like, no way, dude. I live here, and it's not that. Surely it shouldn't be that bad. And it was extra worse. And so if regular Australia is worse, Tasmania, if you guys go there, sunscreen up, because you will look ridiculous otherwise.
Yeah.
Right. Yeah. So there you go.
Oh, it's the chlorofluorocarbons, the CFC gases.
CFCs, yeah, that's it. There you go. Yeah.
Or as they call it, greenhouse gases. Propofol, propellants, that's usually where they're from. They're the ones that kind of like, they bind with the ozone and then they drop down, depleting the ozone layer. Lovely stuff, isn't it? Global warming and whatnot.
Fun times.
See, you marked up a trade on gold. Are you actually in a trade on gold right now, or is that just
not right now? So this was after Mike was talking about his trades on gold, about going YOLO all in, right?
Yes, modest Mike being very modest with his trading.
Yeah. So he actually got it. He got in through here, roughly where we are. And then he's jumped out before this level already, per his trading strategy, which is what I marked up. I was like, that's what I expect from Mike's trading approach. But we were then talking about in a larger context, as far as the standard deviation chain, that kind of thing. Of Mike was then saying he was looking to short. I was saying from here, this is probably actually where I'd look to continue jumping on longs overall for momentum.
Mm.
I think we've had the consolidation through this price range, and we're pretty much building up from the next leg higher overall. Probably at this stage more likely than some kind of drop to, these levels, 200 moving average, some of this price support, especially until this high is broken. But if you got that broken, then I'd look for it.
456. I think I have the same
Yeah.
zone. 458 to 456, 458 to 457 is what I have as a potential area of interest.
Yeah, exactly.
Yeah.
So from here, I would have the preference, given current momentum, to go to the upside, especially when we still have silver will load. Like this thing is not stopped. Like we had the dip low before. And mate, I think we're on track for 100. This
Do you think so?
is a bit ridiculous, but I don't think it should, technically or fundamentally or for any other reason other than just observing price action. So not in reality, but in reality, we're actually seeing this price action. So it becomes one of those arguments. Sorry?
We've had a bit of a deeper pullback than normal on silver.
Yes, and this was somewhat similar to what I was saying to when we were talking about it with Dirk on stream. I was saying, if you guys want to keep going long, yes, this will probably keep going long, but do not get fooled that you won't have random dumps in between. And I was trying to highlight, just like when we had that 8% dump on gold and then another 5%, and we ended up like 14, 50% down in 2 days. The only thing is silver will be that plus some, right? Because it's higher beta. So, and it can be very aggressive and much quicker. So it won't be in 2 days, it'll be in 2 hours.
Yeah.
Only for it to rally back up again as well, which will increase your frustration.
Yes.
And that's where you can get the FOMO type stuff that I got blown out on this, only for it to come back and now want to re-enter, exit, re-enter. And that's how you destroy your account, of course.
Yeah. I mean, you can have a look at silver and you will see that every single time that it reaches a new all-time high, there is a bit of a pullback and then a push up into all-time high. So even on your chart, this channel that you have drawn up right now, this ascending channel, every single time there's a new all-time high, there's a bit of a pullback, continuation again, back to a new all-time high. So all you need to do for the way that the price has been currently moving is to wait for all-time high to be created, wait for the pullback, and then the confirmation of we're done with the pullback. And then just get in at the bottom or as near to the bottom as you can, and then just ride it for an all-time high again. Wait for a candle closure on the hourly or something like that. Get out. Don't try and like hold it like crazy, because you're going to have pullbacks, and then you may have one like what we had this morning, where it's a little bit deeper than expected. So I would say don't get in on the high, the all-time high, and then expect it to carry on just rallying, because it's gonna do a bit of a pullback, because that's what it's been doing. Just the pattern kind of like continues the whole time. Gold is a little slightly different, I would say. Gold has this tendency of going to an all-time high, kind of staying there a little bit, maybe dipping down a bit, and then continuing up, as an example. So don't assume because gold and silver run similarly that it's going to be like that always. So I think that, exactly like you said, don't be surprised if there's a little bit deeper of a pullback than expected, because it can happen. Definitely can.
Yeah, and it goes back to this comment before with the curve fitting, which I addressed before. So that's why you got to go up to these higher time frames. So now we're on the 4 hour, and you'll see that as not too ridiculous. It's just pushing that to standard div. But when we did have the excess push just through the end of the year, just before New Year on the 29th, and that massive collapse, right? Now, the same deal, hence why I was saying you got to measure this out, not just on the shorter time frames, but go from the 5, the 15, the 1 hour, the 4 hour, the daily, and it will give you a good perspective of the actual expectation. So you can see on the 4 hour, we've really just come back to the middle portion of this +1, +2, and -1, -2 standard deviation channel. Now, if you look on the 1 hour, like we were before, we've massively overshot that. So if you're just looking at the 1 hour, you might have been like, oh, that's massively overshot it. But if you get a 3 standard div, which is roughly what that would come to on the 1 hour, plus you see that pulling back into the middle point on the 4 hour, and you've got like a moving average or some kind of secondary derivative or a third derivative, maybe a multitude of other indicators or some kind of implication that would give you reason to continue purchasing into the momentum, that's when you want to take the trade, right? So that right there is what we want. There was one other question, because I just need to jump up for a sec, if that's all right, Rich, and then I'll
no problem, mate.
come back in literally 3 seconds. Yep.
Yeah, no problem. So this one from High State is saying, I want to ask you one thing. Do you still doubt yourself? I have been profitable for a full year. First of all, mate, congratulations that you're profitable for a full year. And I see last November's finished in drawdown and I'm frustrated. Okay. Let's unpack this. First and foremost, congratulate yourself on the fact that you are profitable. That's awesome. Second thing is, realize this. Profitability is very much like the market itself. It's cyclical. So you will have periods where you're very profitable, things are going in your way exactly as expected. Your strategy works perfectly. However, there is days and times where you have a little bit less profitable experiences in the market, and your strategy itself could potentially have like a little bit deeper drawdown than expected. So you have a month like November where you're experiencing drawdown and it's frustrating you. So first thing first, realize that this is normal. This if you're profitable, it doesn't mean that you're going to be profitable every single day, or by extension every week or every month or even every year. You will have periods of drawdown and pullbacks where things are just not running as maybe you would have expected. But it's normal. It's the most typical thing for profitable traders is to go through periods where your profitability kind of like dips ever so slightly. Now, the frustration part, that is an internalized thing that you're going to have to like kind of look at. Frustration is a normal thing, but it's what you do with that frustration that really matters. It's like saying, there's a guy on the road, I'm driving right now on the highway, and a guy like just changes lanes right in front of me without using an indicator, and I have to slam on the brakes. Now, let's completely remove all of like the dangers and all of that kind of like stuff. Let's just focus on the emotion. The emotion itself is, I'm going to be livid. I'm going to be absolutely annoyed by the fact that this person just did this irresponsible thing, just like bashing into my lane. I have to react, and now that could have resulted in something serious. It didn't, okay? And for this example, it didn't turn into something serious. So, is that your cat?
No, it was actually my... it's this building, okay? It was actually the water system. It also does it just occasionally now. I don't know what they changed. They had to come... I don't know. My partner calls it the whale. It sounds like a whale going like... Yeah.
I was just like caught off guard by that. I honestly thought it was like your cat. Anyway, back to the example. So here you have this person. Here you have this person who is doing something, and you don't know why. And this person is impacting you. So what you're going to have, a natural reaction, is it's going to be anger, it's going to be road rage, whatever that emotional experience is that you're going to have at that moment. You're going to have it. All right. Now, you have two choices, pretty much. You can allow this emotion to ruin your whole day. You go home, or you're on your way to work, you go to your workplace, you yell and scream at your secretary, you yell and scream at everybody at work, you're just annoyed for the rest of the day. All because this one singular moment kind of disrupted your day's flow. Well, the opposite thing that you can do, and which I think is probably the healthier option, is realize that this thing that happened is not because of you. It's something that happened to you, but not because of your action or because of your input. It's an outside force that is experiencing itself, and you were just kind of like there while it was happening. So experience the emotion, this frustration that you're feeling about being in drawdown. Just experience it, and then make the decision to say, you know what, I'm not going to allow this one moment to destroy months and months and a whole year, in this case, a whole year's worth of work that you put in to become profitable. Don't allow this one moment. So make the conscious decision to say, you know what, I realize that this is something that can happen. It's a natural part of the journey of being profitable and, you know, staying profitable. You're going to have drawdowns. You're going to have pullbacks. It's going to happen. Experience the moment. I'm done. I've had my little frustration. I'm just going to move forward. Leave it behind you, and you carry on. It's probably the best advice that I can give, bar the idea of like physically having you, you know, take the reaction. You can't stop the emotion. All you can do is choose what to do with it afterwards. That's what I would say.
Yeah, definitely. You don't choose what happens to you in life in general. You choose how you react. Right?
Yes.
So, and then it's always the time differential and the actions you take in that time between something happening and you sort of moving on to the next stage. Because anytime something happens, if you really sit back and think about it in like a third person, not in the moment, because often in the moment you're too heated. But if you did sit back prior and go, okay, this thing is going to happen or might happen. How long is it going to take me to get back to baseline and then just get back to what I need to be doing anyway? So your success is always going to be modulated by how much you can compress that time into a smaller and smaller space between something unideal occurs, and you can process it, get through it, and then take the next best action. You know, I'm sure you guys know someone that something happens to them, and often you might even be like, that doesn't really matter, it's not a big deal. But a week later, 2 weeks later, 3 weeks later, they're still harping on it, and you're like, dude, I have 10 times worse the troubles or something, or etc.
Yeah.
And it's always a subjective thing per what someone has experienced. But the thing is always to remember that the more you can compress that time and just get on to what needs to happen next. Sometimes with some situations they might be very difficult. You do need to take that grieving process or something. Grieving is probably a good idea or good example of, you know, actually losing a loved one or something. But if it's something like a trading event, it's gone, it's done. You don't have to have that thing. You'll have many going forward, and the shorter you can compress that to and get back into the proper flow and structure, you will do better, right, overall. So that also reduces the time that you might be unsettled and potentially more susceptible to over trading or over leveraging or aggressive trading or all these unhealthy habits that are not going to assist you going forward. But at the time they feel good because you want to just do it and change it, and you're kind of angry and you know, but we can come back to baseline. That will help you going forward.
It's very hard to make a rational decision while having an irrational moment, or it's very difficult to make a logical decision while at the height of emotion. So if you're in a heightened state of emotion, you're going to make a emotional decision, and when you go and look at it afterwards, you're going to think, maybe I overreacted, or maybe I underreacted. I don't know. But yeah, agree with that 100%. So high status, best thing that you did now was you vocalized it. You put it out into the ether, you know, into the world. That's the first thing. Just acknowledge, I'm frustrated. I'm annoyed by this. Awesome. Yeah. You're more than allowed to, mate. Like, nobody's saying you're not allowed to be frustrated by something. You're frustrated. Great. You've acknowledged it. Now, what are you going to do with that frustration? Leave it behind you, mate, and then you move on. Natural. It's what the Lion King. It's the circle of life, mate. It's part of it.
Yeah, yeah, and then just don't go over there. Don't go to the dark area. That's bad. So
The Shadowlands.
that's where you don't want to build
Yeah.
grievances for too long. You want to move forward, right? That's the idea. So
Yeah.
How do I say your name? Theodore Theodore
Ochev.
Ovchev? I'm sorry, I'm probably
Theodore
pronouncing this terribly.
Yochev. I think it's Theodore,
Okay.
as in Teodor,
Yeah,
and then
that's what it seems like, but just
Yochev.
a different language. That it's So Trump envoy says to US and Greenland likely to reach beneficial agreement, and Trump signals he'll hold off on another attack on Iran for now. Do you guys think this, with this headline, gold will pick up today? Now, arguably on that headline, that would be technically net, not, how can I, what is the opposite of beneficial? I've just blanked on that. Net,
What?
negative, I guess. Yeah, but I was thinking another word.
There's a bit
Net
of
negative.
Yeah.
Yeah, there's a better term. Net negative for gold overall. But the thing is, just like with what Trump did with Venezuela and with the Fed, as far as obviously pushing whoever in the DOJ to
Excellent. There we go.
press something, against the Fed. Whilst markets might not be heavily reacting right now, it will still be in the background, right? So there is definitely the market has kind of got used to Trump doing these things every 3 seconds all over the place. You can't keep repricing assets every 3 seconds for this, because he'll come out and do something else right away and it changes everything again, right? So the sensitivity to these types of comments has very much changed. If this was back in, I don't know, June, July, August last year, it would have been very active trade activity, right? But right now, the market has just lost that sensitivity to it. So I would say still keep an eye on it, because I don't think it's the end of the story, but arguably that is net negative to gold. We did see gold and silver have those massive pullbacks today. That is part for that reason. Same with silver through here, right? But as you can see, we've rallied right back up. So everything is very much still in play. People are still keeping an eye on all of this stuff going on. Hopefully the Iran thing does not expand deeper, involve other countries, and become an actual problem. But with Trump doing what he's doing and potentially getting more aggressive, who knows at this point? It's going to be a very by-the-by, play it day-to-day type situation. So,
Yeah, very much so.
I need to scroll down on chat because I just realized I'm way behind. My bad. I think you just picked up on that as well.
Yeah. It's just like I also just saw
sorry.
like the numbers of like comments just like picking up.
Yeah, no, I hadn't scrolled down, so it said everything was like 2 minutes ago, but it wasn't. And so Henry said this was like 16 minutes ago, but yes. So as I've highlighted, silver is to gold as ETH is to Bitcoin. So it's a much higher beta type asset. They follow similar principles to a degree, but have slightly different characteristics. And then one goes up, the other one also goes up, but when one comes down, the other one tends to get hit much harder, and vice versa. On certain occasions, through certain periods, though not all the time, the higher beta currency will run harder. So you will see higher percentage gains on something like Ethereum on occasion, but then it will be dead for a long time. So just like silver has been dead for a long time, and now we get these massive runs, and then people think it's going to keep going, and then it's just dead again for a long time. So there you go.
Shiaka Joseph is saying, "Hi guys, greetings from Rwanda." Dude, it's nice to have you in. Thank you for being here. If you haven't already, like and subscribe.
Let me
literally just above this moment, mate.
Oh, it's above the previous. Oh,
Yeah,
yes.
literally
Oh,
above
I
100.
see. I see. I already scrolled down past. Sorry, my bad.
Any idea on UJ? There's a few people asking. VJ as well as Shakas asking Joseph. I don't want to mispronounce your first name.
I did just do that, yeah.
Asking about UJ. What are you seeing on UJ, mate? I'm seeing a bit of a. We had a bit of a pullback yesterday. Significant pullback, but we've come into an area of interest around about 158.21 to 158.13 ish, and this is on the 1 hourly.
Yeah, I was going to say, so, I mean, UJ we've been talking about for a long time now, same with Dirk, for certain macro fundamental reasons. It has every reason to drop. We should be much lower, technically, but we haven't. So, sorry, I should say fundamentally, not technically. So technically, we have continued to rise end on end. Now, there is a big mix as far as the fundamental macro type structure in the background beyond that, per the political structure, where the US, so basically, the weaker the Japanese yen is, puts more pressure on China, which is beneficial for the US. And this is why
Yeah.
we had this weird back and forth thing with the trade talks with the US and Japan, and potentially as Japan being the first country to get a trade negotiation, some kind of agreement right there. Now, has been ongoing, and they have had certain agreements on certain pockets, but then the rest has been ongoing. I'm sure they probably actually have a firm agreement in the background, and all those that need to know do know. And then, as far as publicly, hasn't been represented. So, right now, to be honest, I mean, dollar yen keeps going higher. The levels that were the extreme levels is around that 160 area. From both the Bank of Japan, the Ministry of Finance, companies, massive companies in Japan like Toyota, all the big manufacturers, whether it's tech, whether it's auto. Beyond here, it becomes very much a problem for them. So you could argue anywhere up here is where you would want to start to look at shorts or start to at least take an increased confidence level of technical structures for shorts, because you may see the intervention again, just like we did have a couple of years ago. Well, not a couple of years ago, it was a year ago. Let's hide all that stuff. Where when we first got to up towards this 160, these various bouts through here now, when you zoom out, look kind of minor, right? But this was from intervention, and we had smaller bouts increasing to larger bouts all through. So there will be a give and take, kind of a push point, leverage point, that this will start to come down. And we do still have this, if I get rid of the standard deviation channel, there's this massive gap right down here. It goes all the way back to October that we never filled. And once this does start to collapse and come back into line, that would be the first key target that people look at. And it will probably accelerate very aggressively to get down there. Technically, as far as the interest rate differentials per JGBs on the short end and the long end, plus combining with US yields, the relative fair value for dollar yen would be closer down to 127, 128, which is also in line with these levels. These prior levels going back to 2023. So right now we're not seeing that. We almost were on the cusp of breaking down through there. You can see we've got this like triple bottom, but that would be the next thing I'd be looking at. So just like we're at the tops right here, look for some larger multi-100-point move to go lower. Trading in the near term, you just go technical and you go off whatever data that we have coming out. And do be expecting, however, if you go to bed, if you guys are in Europe or the US or any other time frame that is not Asia,
Active during Asia,
there is there's often a large run higher in these pairs during Asia, and it has been repeated again and again. So do not get caught out by holding short trades overnight. That's what I would say. Overall, I don't like dollar yen. I'm going to wait until we get a extreme top. I've given up trying to short this thing for 6 months now. I'm net up very extensively, but
still.
it hasn't come to my full expectations. So
Yeah.
still made a good amount of money, but just not what I expected overall.
Yeah. LJ, I'm gonna hop out. I'll be back in an hour or so for my segment with Will. So I don't know if Will is going to join you now for like a half an hour or so. I'm not sure. But yeah, I'll see you in an hour or so.
All right, hang on. I'll see if we might see if we can get a special. All right, Jonathan did message me just a little bit ago that thing I can't come. Hang on. Let me just give me 1 sec before you go.
Oh, mate, like you take your time.
We'll see if we can get a special for you guys in chat.
I need to get WhatsApp on my PC.
Yeah, you definitely will. Yeah. It's much.
I can't be like sitting here going, "All right, guys, let's just," and then it's going to look horrible. So
much easier.
Yeah.
Okay, I'm just waiting on a reply. Let's see. Give me if you got like 4 minutes.
Yeah, dude, I can sit here.
Yeah. Okay. Cool.
I mean, technically, I have got nothing else to do. It's just I don't want to overrun.
Just trading. Yeah, of course.
I don't want to overrun my time on the stream and then get like, hey.
It won't be that, but I know what you're saying. Don't worry.
You know what I mean.
Yeah.
Tim Sheldrick saying, in my experience trading all-time highs, which I don't like, the retracements are deeper than expected. Well, that just means that you expect them to be deeper. So technically for you, they are expected. Yeah.
You take the escalator up, the elevator down type situation. So yeah. Like this was back when we were talking about gold and silver before. So then I'll just quickly, like, I'm so behind. I'll catch up on chat, guys. Sorry. So yeah, Henry was saying you can't choose what happens to you, but you can choose how you react to it. Exactly what we were saying before, for sure.
Yeah,
and then
literally LJ said it.
Henry said LJ said it too. Yeah, exactly. There you go. Then Tim saying on this topic, when I learned the expression of going on tilt, and that was a real thing for other traders, it helped me pull myself out of it. Accepting drawdown as a cost is key. Stick to the plan. Exactly, dude. Every single trader on the planet is going to go through drawdown or through losses. A lot of people think when you start out becoming like a trader and trading well, you make money all the time and that's it. But you don't. That's not how it works. No. Just mathematically as well, when there's a buyer and a seller, someone has to win, someone has to lose per se. And basically the net thing is that you're trying to win more than you lose, essentially. So, and that what makes a good trader. And overall, the objective of markets, financial markets altogether, why they exist, is to try and appropriately price assets to their true valuation, given the underlying fundamentals, conditions of the real economy overall. Now, as we see, sometimes these things disconnect. The prime example is stock markets, where a lot of these companies are priced on future profits, just like you've seen with Nvidia or something like that. It's worth trillions of dollars now. They are making very good money, very high margins, but it is based on like a future multiple. That's why you get like a price to earnings ratio, and it might be like 23, 25, 30. It's because they're actually worth that many times what they're actually earning. But the price is their future gain to where they're going to be, and you want to invest now and hold that, and it will be worth your money to hold that, and eventually you get paid out rather by raw stock increase or by dividends or something else.
Yeah.
Right? And that's how markets work. They're always now casting and future casting for the forward outcome of things. Now, things like FX, commodities are much more near term versus stocks being a bit longer term, but similar deal. Yeah.
So yeah, it's that what do they call it? It's that drive to zero. It's the idea of everything is trying to find its balance, but what is that balance? That balance is how much it is worth in reality versus how much it's going to be worth in X amount of time. So it can be very confusing to a lot of people, but the idea is that cyclical, and not exactly to the point that it's just running up and down, up and down. There's cycles to it. There's buying cycles, there's selling cycles, there's cycles of peace, there's cycles of war, and all of it. Everything in life kind of like just goes with this idea of a cycle. And the thing is, it's that strive for balance. It's that strive for, you don't just want to have good years, or you don't just want buys, because there is two partners. There's two sides to this coin. If you're only buying, who are you buying from? If you're only selling, who are you selling to? So you want that participation. You want that there's a buyer, there's a seller. So you want good times, bad times. The quote. So it's always that strive for balance, and it's just where is that balance point, and where do you see yourself on that? When it comes to gold and silver, dude, it's going up. Everybody can see it's going up. Does it mean you're only going to be buying? No. There will be periods where you can sell. There will be periods where you have to sell. There will be periods where people want to sell because the price has reached a point where, like, well, I've had enough of this. I'm going to start taking my profits off of the table.
Exactly. So just like this, I do agree. I think we'll keep reaching all-time highs. When you look at this on a 15, you might be shorting in between the recent price action, right, in real time. Now, as soon as you go out to a 1 hour or longer, you're like, we still have bullish momentum overall, right? And then depending on how you trade, whether you guys are more active in the lower time frames versus the longer time frames, and when any of you guys have questions, just try and preface that. What is obviously your approach might be a little bit more sophisticated with certain aspects that you add, but give at least a general time frame as to what you're looking, because then we can nail it down to the large, broad complex of typical strategies within each time frame, and then hopefully try and help you. So I know you need to go, Rich, so that's okay if you want to bounce. Yeah. I'll take it over for now. So
are you gonna have your guest? Are you gonna have your special guest?
I'm not sure. I'm still waiting, but we'll see. If not, I'll run it solo. So
all right, mate. I'll see you in anyway for the handoff. So I'll be in on my slot. I'll make sure to drop in a little bit earlier so you can have someone to talk to if your special buddy doesn't arrive.
Yeah, I appreciate you, Tony. Thank you.
All right, no problem.
Cheers,
all right,
Rich.
guys.
I'll see you soon.
I'll see you guys in an hour and a half ish. See you soon.
Right.
Cheers.
All good. Ciao. Alrighty, guys. Oil. We can definitely go over oil again, for sure. So, and like I was saying before, if you guys have anything to drop by me, definitely do it. Drop your questions, drop whatever marks, that kind of stuff. Any of it, all good. I'm gonna put a little bit of music on. We'll reduce the volume just a touch. That should be good. Let me know, guys, if that volume is okay with the background music. Just a bit of background ambiance over here overall. So we were talking about oil markets earlier. Now, I still see oil markets coming a bit lower. I think they're going to be stuck in this range. 62 is basically my top for West Texas, right? 62 down to 55. I see no reason for oil to actually gain, at least given all current conditions, right? There was an idea that we would, and we had the Venezuela thing, and we have seen some gains from there. But when you actually package the entire spectrum altogether for oil, where is it? We just have more supply, equal demand, potentially diminishing demand overall, and no net change as far as the underlying commodity. So oil is very macro fundamental driven, etc. So don't expect some kind of like other currencies or other assets where you get some technical break and you just keep running. It's more anchored down to earth. So I actually do agree with the selling pressure from 62 from here. That would have been my selling point. I think, I don't know if it was Monday or... Oh, it would have been Monday. It definitely would have been Monday that I think we were talking about this after the Venezuela situation. They were saying from 62, I'd probably look for sells. And basically look to these prior tops of price action. And it'll be pretty much the same deal on Brent, obviously, but just with a slightly different actual net price, of course, because there's a differential. But they move basically hand in hand, and overall West Texas would arguably have slightly more downdraft. We need Akram on the live stream. Dude, that'd be good. We could see if that can happen actually. Well, I'll find out, Henry. Maybe we could do that. We could definitely do that. But yeah, guys, like, subscribe, share, smash that button right there. Like I was saying earlier in the stream, we're on the 10-year anniversary of the Fivers. This is a long time. That's a decade. That is a decade for a company. For any company at all, that is a long time. And we're also coming up on 100K for the live stream. As far as subs, see you guys every single day. Hopefully bring you guys some good info, analysis of charts, macro, all that kind of stuff. Some days it's more active, some weeks it's more chaotic. We got Trump, the Fed, everything else. Right now we're settling into the first week, second week of the new year. It's always a little bit more quiet. I'm sure, as many of you guys have seen, a bunch of the FX majors have not been moving that aggressively. It's pretty buy to buy. I'm sure any of you guys trading like euro dollar, Aussie dollar, pound dollar, etc., you can just trade, very structurally from the technical standpoint. But yeah, as we ramp up into the year, it will get more chaotic for sure. So definitely like, subscribe, check in with us every day, guys. And if we can hit that 100K subs in the same time frame of the 10-year anniversary, beautiful. And I know very much that when we do, we're going to have a massive giveaway for you guys for that 100K. So lock in, rally up your people, get us there, and then we can deliver you more stuff. Definitely helps us out. So Olvi was saying, since I started learning trading, I was surprised of how many people view day trading. There is so many videos calling it a scam that I almost quit in being afraid that people are just going to take all your money. Yeah, definitely, dude. That is one of the probably most difficult things that most traders actually come up against. That it is very easy for people to jump in. It is very easy. Anything surrounded with any kind of monetary return attracts a lot of poor individuals. People that are not well-intentioned, put it that way, right, over time. So you guys have probably seen the stuff with e-commerce or Amazon FBA or SaaS businesses, all this kind of scammy, kind of scummy, whatever. They want to sell you that dream type aspect versus actual outcomes. Now, the difference with them, with trading, being around for much longer, is not a flash in the pan type event, unlike, you know, social media popping up and then it becomes saturated, that kind of stuff. Markets have persisted for decades, centuries, will continue to. You have that differential, and then obviously you still have to learn the craft, right? And yeah, it makes it very hard when you are trying to learn. You start with no knowledge, and you want to just you see someone, you think maybe they have that idea, and then there's a lot of people scamming and doing weird stuff and trying to differentiate between who is legit and who is not. Can be very hard. I started learning out long before all of that started and began teaching myself. So I can definitely imagine observing that stuff now in real time, once I've already been trading for over a decade. Yeah, must be very tough, because a lot of these people sound very, very convincing. They're very confident in what they're saying, and they often show you stuff that seems really good, and it's not sustainable. So this is where you need to learn those, just like any industry profession, learn the core fundamentals of how something works. So same with the markets, where there's a buyer and a seller. Why do markets exist? They don't exist for you to turn up and press buy or sell and make some money. There's a reason why we have markets globally, and they actually serve a function and a purpose. Understand those underlying fundamentals first. Understand who the big players are in them, why they participate in the market. Understand the things that these participants that are participating, why they make certain decisions this way or that way, right? Which will come down to your fundamental macro data. Learn all of that stuff, and then I would say go to technicals. Now, most traders will start out technicals first and just trying to, you know, trade some chart structure, which you definitely can. But if you really want to build a holistic foundation for trading, for financial markets, for understanding the global economy, why this exists, why it operates, why we still have this as a society globally, then in my opinion, you would actually do it the other way. And then lastly, go down to the technical type aspect, which is probably one of those things that you will not hear from other people. But I approach things much more from a scientific background of, you know, just like, you know, physics, chemistry, biology. You want to understand the underlying principles, how things work, and then you're able to design whatever it is, right? You'd have to, if you went to work for a pharmacy company, you're trying to develop drugs, you got to learn chemistry, all the basics. You're going to need some physics is also applied in chemistry, just basic physics, but there is some math and that kind of stuff. And then you learn to design drugs or that kind of stuff for a pharmacy company. So for a pharma company. So same deal, I would say, with trading, which is probably exactly what you guys will not get from anyone else. Now, if you started the other way, that's completely fine, but because it's much easier, you can see the stuff right in front of you, but definitely go back and understand exactly why things are happening. Because if you can delve into that and get a deeper understanding, you'll make better decisions overall, plus accompanying your general technical trading, all the standard rules that I'm sure you guys can find. And then that will increase your P&L overall. Let me catch up with this stuff. So been looking over gold, still keeping back to 46.52, be an interesting area to buy. From Scott, 46.52. 52. Wait, 4652. Isn't that above where we've been? That up here. Or do we mean 45? Oh, 4562. Sorry, I'm reading that wrong. That's my fault. My apologies. Yeah, I mean that's just above this high. So yes. Though with that, like I was saying when we were on the larger time frame with the standard deviation channel, this is where I was saying you try and drill down into one of the lower time frames, and you can see through here, you've got this higher low, higher low, higher low. This is what we marked out as the potential time frame for this to go on one day. But I will now get rid of this just so we can demonstrate this stuff. Let's put that back on. So this is the type of thing where you get some kind of logic where you got higher low, you got consolidation after a break of structure, right, to a new all-time high, and you've consolidated nicely. You haven't reached these lows at all, and it's a slightly higher low, slightly higher low. We've gotten to the extent of the standard dev bands, both on the plus side and on the negative deviation side, and then you seek a buy higher, and that's when you get that next leg higher. So the same thing you could have applied with that would have given you a similar deal down here, where you had this pullback up after a drawdown. This would have consolidated. I don't obviously have the chart in front of me of this, but you could have ran that with the next break as these would have been running through there and get the higher upside. So but yes, 100k subs for 10 years. Come on. All right. Okay, I'm almost up with chat, guys. Sorry about that. So we're out here. So Jacques, I assume it's Jacques. How do you deal with being on tilt? I passed my first eval in a month, but now I'm halfway to my max loss level. Yeah, so with that, because he said two things. How do you deal with being on tilt? So if you're saying that you passed your first eval in a month, but now you're halfway to your max loss, are you trying to say that you're halfway to your max loss because you believe you've been on tilt? That's going to be different to reaching that point and then trying to stay off tilt because you got to that point, right? Or was being on tilt what led you there? Of course. Now, honestly, getting halfway to max loss is very common. Very, very common. So if you do get there, what I would say with just what you presented is treat it as though, basically say you pass the eval, right? And say you're now live, I assume. Treat the remaining that you have. If you got half the equity drawdown left, treat that as the full. Let's assume you're on a high stakes. You got 10% total, 5% in a day. And so we're going to say you've ran down 5% and you got another 5% left. Treat that remaining 5% as the 10, right? So now you've got 2.5% in a day. Now that is something that you will have to have self-discipline over, obviously, because no one will cut you off for that except yourself. But if you just now, as you lose money in the market, what all best traders do, they don't keep the same like 1% per the starting balance of the account. They keep 1% of the current equity, right? Or you might say, I have 10K total. So if I'm going to risk 1%, it's kind of like 10% of your total risk. You might even start out risking 0.8 or 0.7. Okay. So now where you are, where you've got 5%, you do the same derivation and go and start risking, instead of doing 1% when you had the full ball there, you're going to half that to 0.5. And then you're going to say, I also have a fraction of the capital altogether. Now, if you had the full mark, instead of going 1, you might go 0.8. So right now you go 0.4 or 0.3. If you do that and you get a couple good trades, right? 0.3, 0.4% risk, and you got like a 1 to 2, or you might find some 1 to 3 trades, you'll pretty quickly get back up to baseline, and then you can continue building. So the idea is always, if you start to lose money, reduce your exposure overall, because you want to start minimizing the losses as you keep going down. You don't want to keep increasing that. You don't want to do that martingale type stuff where you double up. That is the quickest way to going in the bin, right? So that's how you want to do it. So reduce your exposure, and that means it will be slightly slower to get back up to flat. But the main thing is that you survive. As long as you survive, you can keep going. You will make profits. Trading is not about making big gains and profits. It is about surviving, right? Just like, Warren Buffett says, first rule in markets, don't lose money. Second rule, don't forget the first rule, right? It's not about making money. It's about not losing money, essentially, right? So if you can survive longer than other people, you will, over time, probably on average, make money, because you have demonstrated that you can survive. You have those certain characteristics to protect capital, which will allow you to also gain capital incrementally, right? So that's what you want to do. It's not this flashy buy a Lamborghini tomorrow type thing, or in 3 months or whatever that people come up with. That's all this stuff is typically, there might be a fractional percent of these people have done that, and because it does happen, right? But most of these people you see on, whether it's social media, online, that kind of stuff, it's normally them forging the picture, trying to copy that same thing because it's beneficial to their bottom line through other side products, etc. So if you see someone doing that, but they sell nothing, it's probably legit. But if you see them doing that and they're trying to sell something, it can be legit. There's plenty of people that do still do that. I don't want to rag on everyone, but a lot of people are trying to play that kind of game, and you just got to have some skepticism. So, Hobby's saying the problem is that everybody talks about 95% of traders quit within a year, but when you think about it, 1 year is not enough time to be proficient in any field, not just trading. Dude, 100%. A1 statement. Absolutely agree with that. So just like if you guys think about, you go into trading, it's going to be like any profession. It's going to take you some years to learn. If you start, I don't know, you go to university, shortest degrees are like 3 years. And then even when you complete a degree, you go and apply for a job and work at a firm, you're not going to be the most knowledgeable person there. You're starting now at the bottom. It just gets you in the door. So you got to think about that being a similar thing with trading. And, you got other degrees that are much longer. Law will be much longer. Medicine, much longer. Surgery, even longer. Even you've got technical professions, like you go and do welding or something, it might take you some time. So the idea that people jump into trading, I think they're going to pick it all up in 3 months or whatever, is very rare. And just like we know it can happen, like I was on the back of the prior question, there's some people that are like 15 years old and they skip half of school, go to university, they're like savant types and whatever, and they progress in a certain field. Now, often there's certain humanistic drawbacks that they also have troubles with at the same time. But it can happen. So it can happen in every single degree, or trading or a business. There's certain people that start a unicorn company, and within 6 to 9 months they've raised 10 million, 20 million, 50 million, and within 4 to 5 years they started at 19 and they made $1 billion company, right? I mean, we all know who these people are. Some of the largest companies right now, but that is not normal. Most people fail again and again and again and again, 10, 15 times over, and they might get small exits of like a couple mil for various companies, but they don't, crush it to that level. So the same thing might happen in trading, and same thing with you guys. Start trading, your strat works. It works for a year, 2 years, you make some good money, then you start losing money, then you start questioning why you're losing money. Is it because you lost discipline or something, or is it the market, or who knows, whatever. And that's where you need to start. That's why people talk about journaling and taking this data. It's not like you're writing a journal where you go to bed at night and be like, oh, this happened in my day. It's in the case of, in the future, the market regime or something else changes, that you can go and look back that, no, I was doing this correct. And so it's not actually my approach, my discipline, my work ethic. It's the market conditions have changed, and thus I need to alter my approach to the market to make good work, good effect, take advantage of the new conditions, rather than right now they're getting hampered or battered down, and they might have been primed for the old conditions rather than new conditions, right? Henry's saying, surely you had a look at, dude, I'm trying to catch up on this. I'm still so behind. That was like 10 minutes ago. Surely you had a look at organic chemistry for GAMSAT. Yeah, I did. I did. I did, Henry. God, dude, I almost so very closely never went into trading at all and just went into med. Because I was meant to sit UMAT and they got sick in grade 12, right? I'm pretty sure I've explained this to you before. And then after that, I was meant to go sit GAMSAT. And then started trading and sort of just toss all out. But I did go through all the bits and pieces to be like, okay, what am I actually looking at here? Because of course, GAMSAT's a bit harder. So, Jacques was saying, I'm at that level because I was tilted. Okay, so you got there because you tilted. Okay, all right. Got it. None of the no risk, no Ferrari stuff. With that, there's an element to be said for that, right? Very few people that have done anything exceptional have not taken some degree of excess risk or, some kind of excess exposure, right? You kind of need to have that element. Now, it's more, rather than risk or exposure itself, where people quantify that into like a financial exposure or risk to assets or something that you're doing. I would actually say it's more of a mentality thing. You need to keep that mentality of that personally, but then the fundamentals of the things you're actually doing in front of you need to be very in line. They need to be very measured, very secure, very handled well, and not erratic, right? So risk normally would indicate a lack of control, typically. Obviously, when we talk about risk in markets, it might be a little bit different because risk is not always erratic. Kind of the same way that when you talk about in science, like a theory is not really a theory. It's kind of as close as we can get to fact, but it's not quite fact, but very different to theory in general speak, right? So I would say definitely keep that mentality. But if you have that mentality and then run your ship in front of you very tight, very fine, very orchestrated, look at things, measure things as much as you can, you will be able to progress. You can measure where there's downfalls, pitfalls, troubles, things that are hampering or impairing your progress. And then you can go back and see, okay, how could I do something different, or something might account for that. Now, it might be something in your actual trading approach or your preparation to the market, trying to get informed on what the macro or fundamental data is, the news, or, maybe you do better at a different market session, your approach might work better during Asia, might work better during London or New York. And maybe Asia for you is at like 1 a.m. in the morning or before that. But maybe you go, hey, if I want to trade, that's what I need to do. Get up at those times. Or you decide that's not functioning for my life. Therefore, I need to develop something else that will work during London and New York when I'm up at normal person times, depending on where you live in the world, and shift that around. Right. So there's all those kind of weird dynamics like that. But if you have most of that stuff nailed down as well, when you do see the kind of no risk, no rari type element, it will give you the cover to actually sometimes punch into those trades, which otherwise you wouldn't, because you've been running a very tight ship across the board. And then you go, okay, gold's been running pretty hard recently, so is silver. I have all my finances, in line. I've been making some good profits from the market. Because I run a very tight ship here, I'm now going to be able to afford to take the risk that I might side part some extra money and take a larger chance on gold or silver running higher. And then you could have bought gold or silver silver in particular, from 50 or 60 or 70 or wherever it was, and keep running this thing. And same with gold, from below the 4K up to here. And you might go, I'm running a tight ship everywhere else. All those trades are going well. I've got this one more aggressive, risky trade over here for gold. I'm going to hold it up towards 5K, and you can see how you go with that. And that's where it gives you those, you're running a tight ship, plus you get these excess abnormal gains from certain trades that do pop up through the year. There's normally particularly like 3 or 4 really, really, really brilliant trades every single year in certain assets that are bonkers. Whether it's been silver, it's been gold, you have Nvidia, you have the bounce from like the NASDAQ or the S&P after Trump. There's a bunch of them that do turn up, but you have to be able to time them and have the capacity to do so per the rest of your living expenses, costs, conditions, right? And so, as well as having the ability to fund it, which is normally only going to happen because you have all the other stuff in check. So that would be my biggest recommendation. So even with a lot of hedge funds, major funds like that, often a lot of the trades come from like 2 to 3%. A lot of the profit comes from 2 to 3% of all trades, right? So the rest of the trades are all kind of a bit of churn. And then there's these really massive trades that absolutely clean up for the fund. And so if you can start to approach the market that way yourself, you'll get a good income, good living standard that is, repeatable, reliable. You can, project it forward, but then also expect kind of like a bonus per se from these other type of trades. So I think I probably went on with that for too long, but there you go. It is probably one of the biggest things, because if you get a couple of these, that can pole vault your entire trading career altogether. Because say you make 50K on one, then got progressive trading through a year, you're now at 100K. The next time you've got a lot more capital to deploy, you can make 200 or 300. You do that 3, 4, 5 years in a row, and that's how you get up to $1 million plus 2 mil, 3 mil, and stack this stuff very aggressively. But you're actually being very, very selective in doing that. Whilst the compounding of that income seems very aggressive, you yourself are being very selective, very particular to make that happen. All right, let me scroll down, guys. Okay. Something about protecting is about willing to lose yourself confidently. Yeah. I mean, you always have to have the expectation that whatever setup you look at might have trading is a probabilistic game. Nothing is 100%. So there's always a probability that you will lose. And I would also say that when you enter any trade, if you aren't able to reasonably gauge the probability that you actually succeed in this trade, you should probably not be taking it. Like if I had to, you took a trade and I said, okay, what's the probability that this potentially comes in your subjective view, right? And you go like, dude, I got no idea. I just took the trade. Probably not a good idea, because then you don't know. It would indicate that you don't have any idea whether it's like an A plus, an A minus, B plus, B type setup, or if you just took a trade because it kind of looked kind of cool, right? That's a whole different situation. So the more you can try and accurately get towards that on a day-to-day basis, you will do better, and you'll be able to scrap certain trades, and you'll look at it and go like, okay, if I really had to assume, is this like a A plus or an A or a B setup? I really like this trade. But when you really start looking at some of the other parameters around here, whatever indicators, something else, prior market structure to the left, you might go, in my mind, I wanted to believe it was an A trade, but it's probably more like a B or even a B minus, right? And if you start to pull out some of those poorer trades, you'll do much better overall for your P&L. So, we got some guys in the background. Do you guys want to come in now, or you? Yeah.
Yo.
How you doing, lads? How we doing?
Since
yo, was good.
Welcome back, I should say, brother. Welcome back, Rich. And how are we doing, Will?
Yeah, good, man. I was going to pop in earlier, but I've just finished a beautiful sort of like noodle soup that the missus cooked. So, truth be told, mate, I was in a bit of a food coma for about 5 minutes, 10 minutes. So I was going to join at like 11 a.m. And then I was like, no, I got to give it 5 minutes. Otherwise, I'm just going to fall asleep on stream.
No, that's fair. That's fair.
Dude.
Yeah, what's good though? What's news?
I'm having this annoying error with TradingView where I'm trying to collapse my watch list, and then it just keeps me that I don't have the permission to perform this action.
On TradingView? That's really weird.
Yeah. Like, what is this all about?
Especially when you have a version of like TradingView that is free, right? So
no,
what do you mean you don't have permission? Yeah, I know, but even if you don't have the subscription, it's free. It's not like there should be any instance where you are blocked because, right? You know, you get what I'm
this
saying?
is like what? Yeah. What's going on here? Why don't I have permission to collapse this thing? And the thing is, I can open up another like watch list, no problem. The moment I want to like minimize it, it says you don't have permission.
Yeah.
Come on, man. Why not?
Yeah, no, it's ridiculous, dude. I've never encountered that, so no idea.
I am using the app. Maybe it needs an update.
I always use it from the browser, so yeah.
The browser eats up too much RAM, mate, because it's the browser itself and then the RAM that the application takes as well. So the application is awesome for it.
Yeah, the trouble is I always, pull in other like tabs and that kind of stuff, right? Which then otherwise I gotta, quit my screen, add a screen, that kind of stuff. Because if I just have my actual full computer screen, it's too big.
Yeah.
So the resolution is like for ants.
Teeny tiny. Jacques is saying the same thing as well. I just checked it myself. I'm also getting the same error. Okay, so it's a TradingView thing. It's yeah.
Okay. There you go.
Yeah, I was just saying, speaking of full TradingView screens, you guys would have been in heaven where I went. Where did we go? Wan Chai? We went Wan Chai earlier, and oh my god, I was in like computer geek heaven. There were like monitors everywhere. There were like internal parts to computers everywhere, like new laptops, new PCs, and I found like a load of portable monitors. that I can actually fold up with my laptop and put into my rucksack, so when I go away I can take it with me. And they were dual monitors as well, and they were pretty good price. And then the missus said to me, "We can get that cheaper." I was like, "What do you mean?" She goes, "Tomorrow go here and then we'll get it cheaper." So I was like, "No," but it's there now.
You're like, we'll go to the source. No,
So
like
I'm
the
waiting
direct
now for
source.
tomorrow. Yeah.
Yeah.
It better be cheaper tomorrow, otherwise I'm not going to be happy.
Even is saying TradingView is broken
see.
right now. Can't even put alerts. It seems as though TradingView is having some problems.
Problems. Interesting. I'm too, like I
Yeah,
said, the
sounds like
Wi-Fi's
it, yeah.
okay at the moment. So I'm just too scared to open up any form of terminal. The markets haven't been doing what I want them to be doing. I want to get involved in gold, but right now, oh, in fact, I'm just looking at your screen. Whose screen am I looking at? LJ. LJ, you in a gold buy?
This is what I was mocking up before when Mike was in here talking about a trade. Like, he took a trade through here, and I was saying, I'm pretty sure where you took it from was basically here, and it was. And then he got out at like 09 or something. And I think he took a further one. But
Yeah,
Mike's,
I really want to get
Mike's
in
stuff
on
is
a
very,
gold
yeah, he's very like short term, get in, get out.
Yeah,
micro,
but yeah, exactly. Very much like myself. Like, you know, it's. I don't know what to say there. Like, I want to be get in, get out, but at the same time, I see like a lot of potential for gold to really be moving up.
Yeah, that's why I was mapping this out as far as like we've been talking about the standard deviation change the past couple of days on Monday, plus yesterday with Dirk, that kind of stuff. So I was saying you sort of wait for this after we've hit these top levels. This will expand with the new wicks. But overall, you want to see some kind of consolidation, get towards the lower bands, and then look for a move higher. And then often you'll, take a charge to the top side band, which in this instance would be about 4740, right? So that's where I was mocking that up. And you've got the higher low, higher low, higher low going through there. And then you can go down into a lower time frame on something like the 15-minute. Jump in there, and there you go. So right now you might expect that since we're heading towards the top, we might not just run through here. You're probably more likely to waft about through here and then eventually come up. That's basically the general idea of what we were talking about with that trade.
Yeah, nice. I missed my buy opportunity on gold. So my buy I was looking at was around about the candle close on the 15-minute of 4609.35.
9 through, so like just so buy this level. So if I zoom in,
the close of the breakout above,
so just through here.
That's where I wanted to be buying, but obviously I missed it. I'm going to see if I can get, hopefully, I mean, I'd like to see a retest down to a similar, doesn't have to be the same level, but a similar level. If we can come down to a similar level, I'm going to be buying. And in fact, that'll actually be my first trade this year, which would be really good fun. And I can take it on stream today.
Yeah, I think from here, either we have to...
I'm not happy.
Yeah, I think we have to either just break out straight from here, or I think it's a move back into here and then kind of up. And potentially
your second line is where I'll be looking to trade it.
Yeah, this level like down here. That's primary. That's where I'd ideally get in, somewhere around that 45-90 type area, ideally.
Yeah, I don't think it's going to come back that deep. I think it's going to come down to retest that level, that second level that you've just marked out. Yeah, there. Yeah. If it comes down to that level there, that's a beautiful buy for me on gold.
Yeah, so that's also what I always try to do. Like, I'm skimming out the same trade and then give, like, if we just continue running, a probable outcome, sort of what I would give the highest probability to happen, and then the extreme, which would arguably be ideal, assuming the trade does continue, and mark out sort of those 1, 2, 3, sometimes it's 4, almost 3 kind of segments, and then design the trade after that. So, yep.
Martin, Rich, you saw my yesterday NQ trade. I was crying how it snapped back. I actually didn't, Martin. Let me go and have a look quickly at it.
What's the NASDAQ stuff for today? Is this was it F9 to refresh? Was it F5?
Don't press the wrong button. Who knows what that other button, that wrong button could do?
On which thing?
Wage, I guess 25. So it's 25492 for today.
So Martin, I can see the trade that you marked out. Okay, you were on the 4 hour yesterday. Okay, let's go to the 4 hour yesterday. Just have a quick little. I'm just gonna put it quickly on this on my trading view.
Yeah, that's interesting. So I was just gonna say the options level is about here today. So some kind of bounce like that.
Have we got any like news out that I need to be paying attention to right now?
Week on week jobless claims. That's pretty much it. We do have some of the manufacturing indexes, which are normally as like a secondary portion, but they have the same impact as a high impact because they're the precursor to the high impact data. Which I don't know why they still print them as like a minor. I guess it's because it's like a state index, but these are some of the largest states which feed into the majority of the primary number when it comes out. So we have those two tonight. Plus the Philadelphia Fed business activity. And then we do have from the Fed, we have Richmond speaking tonight, and as well as Bostic.
Okay, yeah, we have news.
I don't know how much,
30, which is 1p.
Yeah, I don't know how much we'll get from them as far as wanting to keep it kind of low key, especially after the Friday thing from the DOJ. You know, I'm sure they all have like a kind of semi, let's just not say too much until we get to the next meeting type situation. That's what I would expect. But you might get the chance that one of them decides to go like, nah, I'm going to start talking about this stuff and talking about what we're doing and that. So definitely worth keeping an eye out regardless.
Martin, yeah, I'm having a look at your NQ trade of yesterday, and oh, dude, that's unfortunate. Like, it looked good on the hourly. On the 4 hour, it looked a little, whoa. So just confirm this was the right entry point. So 25,392 was your entry point, and then your stop loss was at 25,360, and then your take profit was all the way up at 26,100. On the if I go down to the 5 minute as an example, it looked good for an entry, like really good. Like it came down, wicked, and then you started pushing up. But then we had this like really unfortunate little dip back. I'm hoping you weren't like too risky on this one, you know, like too overzealous with your risk on this. Very tight stop though. Do you normally go this tight with your stop points? I mean, this is a 21-hour trade.
Yeah. This is a
21-hour trade. That is crazy. Now imagine if this went in your way. You'd be laughing, mate. But still, no. Yeah, that's crazy. Imagine.
There's nothing better than having a really tight stop loss and oh no, come back. Yeah, there's nothing better than a really tight stop loss with a risk management strategy that is appropriate to that, because then when you go up and when it starts flying, you're like, whoa, 10-hour trade pending. But then when it like just wicks you out and then moves in your intended direction, it's like that's the moment where you're like, I really should have given it a bit more to breathe, you know, a bit more space.
Yeah.
Martin saying 0.25% trade. He thought it was, he thought that because Nvidia was had news, it was going to rocket out. Unfortunately, it didn't. But I understand why you wanted to do this. On the lower time frame, like on the 5 and the 15, and so it's one of the things that I do like about having an EMA on NASDAQ as an example. Until we've broken some sort of like structure, I would probably not get into a trade at all. So in this point, even on the 15-minute, even if I just remove the EMAs that I have up, very little in terms of a structure shift pushing it higher. Now down over here, it makes a little bit more sense to start considering highs. I understand your rationale. You were like front running the idea of price going up due to Nvidia news. But yeah, I probably even... No, there's nothing wrong with the trade that you took. You had an idea and you stuck to it. So yeah, I'm not going to...
yeah, I was 100% right. As well as if you stuck to your plan, that's even better. Yeah. Like if you can stick to your plan, it doesn't matter what we think about it. Like you vent to us, rant with us, tell us how much you hate what's just happened to you. But as long as you've just stuck to your plan, like what we say and the input that we have really doesn't matter.
Yeah, I'm always looking at it from like how I would have traded, and then I think, oh man, this is crazy. Like, how could this person have done this? And then I have to like think and be like,
yes, oh my god, you lunatic trader.
Hold on a second. This is his strategy. The reason why. So, be that guy.
Yeah.
And stuff like Nvidia has been a monster to the NASDAQ, but the whole AI landscape now is starting to become more. It's mature, a little bit more diverse, where you're going to get more of an averaging out from. You do have other companies properly trying to compete. Even just across the really technical stuff, without going into this for like half an hour, with Google trying to compete with OpenAI and take over and service, all this kind of stuff. So it will be more distributed across the AI broad spectrum rather than just video running things these days. Are you guys getting feedback?
I'm getting a little bit of feedback.
Is that you, Rich?
Hey guys, it might well be me. It's not normally.
I think Rick's input volume's a little bit loud, maybe.
I think it's a pickup because as soon as you started talking, it went away. So I think it was picking up background stuff. Yeah.
Oh, possibly. Actually, yeah. No. Now it's gone completely now.
Yeah. So I think it was just what's that setting called where it picks up?
It's the atmospheric sound that it picks up. So
whatever it is. Yeah.
I know what you mean. It's like.
Okay, so Rich, talk to us, man. Let's hear that beautiful voice and see whether or not little echo
to it.
Speak to us.
Richard, you
give me a sec. I'm just trying to figure out. I normally come on with mic and no headphones. If the feedback continues and you do get a lot of echo, just let me know. I'll put some headphones on. I've got these massive cheap, they look like some kind of space margin.
Well, I was going to tell you that it's absolutely perfect, but now I kind of want to see him. So, dude, I'm getting a really bad echo coming through.
All right. Well, we all know that Will can't be trusted, right? I want to say good morning, but I have a feeling that it's only morning for me, isn't it?
It's
I think so.
1 in the afternoon for me, so it's definitely morning for you still.
Wow, I'm the only person.
It's currently 25 to 8 at night for me.
What is this? Sorry, I see LJ doing a.
I was just responding to a comment without speaking. So this was the larger trade. Since you were asking before, that top side would be 47.40 for gold. Just so you know. Sorry, Rich. I didn't mean to. I was trying not to interrupt you. I was trying to do it.
Sorry.
Trying to do some.
I thought he was dancing.
That was some interesting 70s dance.
That way to the chart. So
That's what I thought was
How's the feedback? Do I need to adjust something on my side? Just conscious that
Rich, dude, you're perfect, man.
legend.
Just the
No,
way
yeah,
you are.
you're perfect.
You're
Yeah.
perfect, Rich, and your voice is amazing as well.
Wonderful. That's because I haven't got flu anymore. That's the main thing. So we're what, second week now? Second trading
That's
week?
fair. You sound a lot better since the last.
It's because I sent Rich the pills, right? You took those pills, Rich?
Yeah, those Australian.
So I was
Magic
going to say
Aussie pills.
we're second week now, 2026. Are we all in a position where we're absolutely steaming ahead with our trading processes, or are we still bringing that baggage from 2025 into this new year? I set myself this resolution that this year is going to be absolutely different. Trading is going to be amazing. And you know what? What I've realized is that I have practiced repetition so many times through last year that I'm still acting on the same kind of behavior patterns as last year. Now we're up for the year, but the way I've done it is still not best practice. And I'm just kind of striking myself pretty harshly with that. So it's an opportunity for us all to say, you know what? Are we up this year? Are we down this year? It doesn't really matter. But are you getting the result you should by trading your system perfectly? Now I was saving this for a slightly later date, but I'm gonna give a little bit of insight on it. Now, I have this scoring system that I do as a trader, and I call it my Amazing Trader document. And I score myself on 10 different assets. Now, each one of these assets is a critical skill that a trader needs to excel in their trading career. And I score myself between 1 to 10 for 10 different things. And then I take a collective score. Now, the highest possible score I can get is 100. That's if I hit a 10 out of 10 for every single subject. 10s don't exist. So my highest possible score is a 90 out of 100, right? And this could be, for an example, how well are you aligned with your funding? So I'm gonna actually challenge chat with this. And I want you to think for just a moment and think, what level of allocation are you trading at the moment? Are you trading on demo because you're developing your edge? You need a little bit more time. Are you trading on maybe a 5K, dipping your toe in the water? Are you on your way to 7 figures of funding because you know your edge and you're pushing it aggressively? So if you had to score yourself out of 10, and 10 being I am king ding-a-ling of my funding, I'm aligned perfectly, let us know in chat where you would be between 1 and 10. What I recognized in my own trading is I'm coming in at about a 4. Now, that number being so low gives me feedback that, you know what, I'm not aligned with the right kind of valuation. It could be that I'm overfunded and I'm nervous because I don't know my edge. It could be that I'm underfunded because I have a great edge and I'm not really pushing it because I'm afraid of being wrong. So just an opportunity to gain some information around, you know, are you allocated on the right kind of funding? Now, this is just one area that I score myself out of 10. The second score would be, how well do you know your strategy? Now, if we don't get some feedback in chat, I'm not going to give you these 10 categories, okay? We're going to save them for a later date on something very, very special that we're going to be releasing. But I have 10 separate areas, and the idea is every week I just review it, I see what things are holding my score down, and what's the action step to bring it up just one single point. And what I recognize is that my score, and I'm going to say this because I'm a trader, not just a coach, I'm also a trader that has been actively involved in the markets for 7 years. My score now has reached a level where it is critically low. And what's happened is my trading has been pushed to the side through life being super, super busy. So my job in 2026 is to bring that score back up. And the byproduct is I'm going to be the best trader I've ever been because I'm going to know my strategy better. I'm going to be aligned with the right kind of allocation. My risk management, both personal risk management and prop risk management, is going to be dialed in. My psychology, my time organization, all of these, you know, the trade copy I choose to use, all of these things which slowly, you know, you only need one weak link in a chain and it breaks that whole momentum. And if you have a psychological gap or a limiting belief, that's enough to derail your entire trading career or keep you stuck in circles. So it's just one of the things I've been doing some mental exercises in 2025 towards the end of it in an attempt to get my score up to the highest it's been. Now, it's a very ambitious score. Set myself on a target this year to score 85 or higher out of 100. So I'm curious, you guys have been trading for a long time. If you had to pick one thing inside your trading that you know is the lowest possible score, why? What would it be? What would you score it? And why? Question goes out to Will first for picking on me earlier, saying that I was giving loads of feedback.
I will just before you start, Will, I'll actually come back and join you guys again. I just need to jump out for 1 minute. I gotta run downstairs. I'll come back. Okay. I'll see you guys soon. So,
what a great way to
can I
avoid
swap over to your.
Yeah, what a fantastic way to avoid a question. Wow.
Yeah.
I said I'll be back. I promised I'll be back. Okay.
Okay. Yeah, we'll wait for that. We'll hold our
We'll be
breath.
back.
He's
All right,
so-
see you guys
Do
in a
you
minute.
know
He's
what
going
LJ's weekly score is? It's a weak bladder, isn't it? That's what it really is. He's got us off to the toilet.
No, actually, I have to go down and let someone in, but yeah, but close enough.
It's
All
all,
right, I'll see you
it's all
guys
those
soon.
caffeinated drinks he's drinking.
Catch you in a bit.
Right, that's a fantastic question. That is a great question. Before I answer it, really quickly, I'm not going to bring my chart up on screen because my Wi-Fi is holding on by the thickness of my hair currently onto stream. My Wi-Fi is holding on, so therefore, I'm going to let you know without bringing. I will bring my chart up, but I'll bring my chart up after I've answered Rich's question. I'm about to enter a trade. If this 15-minute candle in 3 minutes time can break above the previous candle and close very bullish, if it can close bullish, I'm gonna open up a 0.2 size order on gold. However, I've also got 2 more pendings a little bit lower down, so risk management is going to be massive. My data is going to be turned on my phone just to make sure that I can analyze my trades just in case my Wi-Fi drops out, because it's going to be one that needs market watch. So I am going to be watching that trade, just to let you know. But enough about that. I will show you that once I finish once Rich has finished answering Richard's question. But yeah, Rich, where is my trading? Bro, this is the first time I've placed a trade this year. This is the first time. I'm still on the pit lane. I'm still on the side of the road in park. I'm looking forward to placing my first trade this year, and hopefully I'll be able to be like, yeah, boom, I'm back in the game. But right now, I haven't even got off the starting block. Where would I rate it?
Yeah, so
I lost a lot of it.
What is the one thing that brings your trading down heavier than anything else? What would that one thing be? If you had to highlight just one area that you're like, you know what, I've kind of limped along in 2025 with this one thing. It's about time I shed a little bit of light on it. What would it be?
Execution.
Okay.
I think I'm very confident in my strategy, and I know what I'm doing. I know how I'm trading. I think now, because I refined it so aggressively to be profitable on live stream, I'm lacking the confidence to execute off live stream. And I feel like it's hurting the progress of my other accounts. And I feel like I've got other accounts in pretty good profit at the moment. Some are getting ready to pass phase 2. Some are getting ready to pass phase 1. Some are getting ready to get a payout. And they're in good stand. They're healthy. And I feel like I'm not sort of filling my full potential because, like I said, I've refined it so aggressively that I'm now profitable with 100% only trading on live stream. So therefore, I think my off-stream accounts are taking a bit of an arrow to the back on it.
So what I'm hearing is you just need to stream 24/7. That's what I'm hearing. Just quickly before we dive into this a little bit more.
You know what? I think you hit the nail on the head, man. I'm currently trading from Asia, which you know what that means. I can trade Asia session, London session, and New York session, and then sleep Sydney session. Sorted.
Completely. Just before we follow on with this a little bit more, I see that Peter says, please adjust the sound. Can you give us a little bit of feedback in chat? If there's something with the sound specifically that's not amazing at the moment, let us know exactly what it is. We'll see that we can get this sorted on our side. So, Richard, what would be that thing? The mechanical robotic trader that is Richard, that always has these wonderful methodical answers. I'm going to press your pain point, and we're going to put a little bit of light on what is that thing that's just not quite a 9 out of 10 for you.
Well, there's actually a lot of things that's not like 9 out of 10s for me. I think I have the same kind of view as you do, in the sense that nothing is ever going to quite be a 10, and nothing will ever quite be a 9. But it's more to the idea that I don't think it's not achievable. I just think that if I were to achieve a 10 in that thing, I think I would kind of stop looking at it and stop working on it. So most probably it would start drifting down again. What about my trading I think is lacking is, and I think the score would probably be about a 3, and that is my journaling. My journaling of 2025 took quite a bit of a back step, and I'm not entirely sure why. It's not that I'm not journaling, it's the quality of my journaling that has taken the dip. It's, you look at a trade and you're like, okay, cool, this was my entry point, this is what I was feeling, this is the mindset that I was in, did I eat well, all of those things. I used to do all of that, and now these days it's, did I follow plan? No. Done.
Yeah,
Did I follow plan?
Yeah, I think it's the one thing that trading can't be simple at. Like I think, in fact, all of us right now on stream talk about simplicity in trading. I think that's the one thing that you shouldn't simplify is your journaling. I think journaling shouldn't be simple. That should be a complex part of your trading journey, is because it is such a complex topic.
So yeah, my journaling I think has suffered severely, and it's I have no one to blame apart from myself. It is just laziness on my part. I'm not putting in the requirements as I should be. I'm just going to be straightforward with it. The idea is that I'm just lazy with it. That's it. I'm just lazy with it, because in my mind it's like, okay, I have a mechanical system. My system, I know exactly what my expectancy is. I know when I'm not meeting my expectancy, and I know when I'm over my expectancy. So, and I do know that they kind of, you have an upper band and a lower band, and you kind of like drift around the mean average. So I have all of the statistics, but when it actually comes to, sitting down and going, okay, today was a bad day because, and then give reason why it was a bad day. And maybe on the flip side of the coin, today was a good day. Why was it a good day? Wow, I slept well. I'm just not I'm just not giving the due diligence to that side of my trading. And that is, and the funny thing is, I was looking at my stats for last year, and I noticed whenabouts this started happening. And it was just about coming out of November, going into December. So I did really well with my not backtesting, my journaling throughout the year. Getting close to November, there was just like this, I don't know, this laziness that started creeping in, and you can see the information. It's like, oh, okay, everything is done. It's full sentences, like 2 blocks full on Microsoft Excel and whatnot, and then all of a sudden you just see like 1 sentence, even a shorter sentence. 1 word, not even filled in, just, I agree with Will. There's certain things about your trading that you just can't simplify. And I am all about simplification. And I think that you can simplify something to a point, but you can simplify something to a fault. And I think that that's kind of like where I am with my journaling. It's just like, it's bone idle laziness. Let's call it what it is. And it's at like, don't worry, it's not all that important. It's not all that important. Yeah, it's gonna bite me in the ass at some point. I can guarantee you that it's going to kick me something fierce sooner rather than later.
It's like a knocking noise on a car, isn't it? And you're like, it's not loud enough right now. Yeah. I need that rumbling, that kind of back end that keeps sliding out casually on the corner. I mean, Will, that'll be normal for you, but for the rest of us,
standard.
The back end sliding out. That's is that a bad thing? Or?
Yeah, I was gonna say that would be normal.
Yeah, I was gonna say, are you trying to put it out, or is it just because you have an overly powered rear-wheel drive car?
we both own BMWs, so
yeah. I was gonna say it's just in our blood.
in the day. I had a beautiful E30 325 back in the day.
Nice.
Beautiful two-door.
What year as well?
Nice.
That was a 89 on an F-Reg with a it was red. It had an M small body kit. It was Alpina. It was really for a 19-year-old. And I think this was about the time when Tokyo Drift was just being released in the cinema.
Mate.
See, you know what I did on the way home. Yeah.
Tokyo Drift was like 2003, I think.
6.
Was it 2006?
I remember exactly because it was when I was very into cars, and it was just after my dad passed away.
So Tokyo,
my cousin went and took me to see it as like a trying to make me happy, that kind of stuff. So I remember that was one of the most.
Tokyo Drift was one of those things.
When I was young. Yeah, it's like very cool.
So, right, to finish this trail of thought ever so quickly, before we go off talking about cars, because we can do this all day. For those of you who've just joined us, we were talking about identifying what's the weakest thing in your trading. What would you score it out of 10? Now, Richard Butler said, you know what, journaling, I would give a 3 out of 10. Will said execution on live stream, fantastic. Off stream, it wanders a little bit. Now, whatever you've identified in chat as being the weakest thing within your trading, what would be the action step to just bring it up 1 point? So for Richard Butler, it would be journaling. And it would be, Richard, what's in one sentence, and Will, this goes for you as well. LJ, this could go for you. What would be, in one sentence, the action step? And this is the work we're all avoiding. This is the work that we don't want to do. But it's the easiest point that we could increase our trading by just doing this one thing. Richard, shoot, what is that action step that would just bring your journaling score up to a 4 instead of a 3?
One sentence. When journaling, provide context immediately.
Okay. Will, execution off stream, what would you go for? What would be your one sentence just to bring that up just a tiny bit?
Don't be lazy. I think that's what it is.
Okay.
I think I'm just too lazy to have the mental stress of trading outside of stream. Like, I feel like streaming is my sort of mental focus time, and when I'm done streaming, I'm like, I'm done for the day, yay. When it really is like, what are you doing? You're leaving profit on the table.
When you
like,
need
get
to
back
do
in
the
the game.
Trading.
Yeah, that's when you need to be doing your trading. Not, get on with it. Get back into work mode.
Yeah, you've only done one part of the job, and now the other.
Yeah, exactly. Yeah, 100%.
Yeah.
Okay, so and this is the important bit. This is a rhetorical question. This, right? If I was to come along and give you an extra $100, $200, $300 every single week to just carry out that simple task, would you be more motivated to do it, or would you be less motivated to do it? If you say less, I'm going to give you a slap, because there is only really one correct
Of course,
answer.
you'd have to be more.
Why are you doing it in the first place?
Logical, yeah.
No,
But many people aren't, because you don't have someone saying exactly that I will give you this. If you do this, you will get that. Normally, it's up to you yourself.
Yeah.
And it becomes this hidden thing where if people only just did this one thing, they would actually get there, but they don't realize it because there's not that overbearing overseer pressing it on them. It's up to your own validity to actually do that, carry it through, and not just for like 1 week or 2 weeks or a month or something, but actually to do it for 12 months or 24 months. And people do it for a while and then it slips.
Yeah, I was going to say, that's the biggest thing, is everyone has the motivation to do it. It's the consistency and the discipline to keep it going when motivation disappears.
Yeah, and that's the next step. If you knew that you could unlock that next version of you and earn these extra financial returns for doing that kind of work, most of us would already be doing it anyway. And so we end up stuck. And when we look at it, we actually have to realize, you know what, we are where we are a lot of the time because we're avoiding doing the thing that's going to bring us to that next level or help us change that lane or level up. So when we look at these wonderful traders and we say, wow, I'd love to be like that trader, What we don't see is the iceberg that's under the water level of the foundation and the work that that trader has put in. And it's just about being aware enough to say, you know what? Where's the biggest hole in my boat right now that just keeps bringing in water? And fixing these things one by one by one. And it doesn't have to be overwhelming or overbearing, but fixing these things one by one by one was the difference between me busting challenge accounts and getting funded. It changed, the result changed because the behavior pattern changed. One thing I was learning about late last night, it was like 11:30. I should have been in bed, I should have been asleep, but I was watching content on YouTube, and I was really encouraged by this idea that as children we have a logical mind, and it's a conscious mind, and it's an open funnel like this, and it takes in all these different ideas, and over time, through repetition, it installs these ideas into a belief system. Now, this belief system acts typically as our cage, and it keeps us in an environment where we adhere and we behave based on the beliefs that we've got in our mind. And it was like, okay, so some of us have bad beliefs, some of us have bad code, some of us have a bad system that is just one tiny code, and it ruins the whole system. And it could be in your trading that losing is bad. That might be your belief system that the world has installed into you for years and years and years, and you're doing everything you can whilst you trade to try and never lose. That was me. That was me in the first 2 years of trading. I was like, profitable traders do not lose. Let me rephrase that. A revision of that 7 years later is profitable traders lose really well. They control their losses, and they don't let their losses affect the way they feel enough that they're then going to go and revenge trade their ass off afterwards. And so it's like, okay, challenging what is subconscious about me that stops me from wanting to journal, from wanting to develop my edge, from wanting to execute off stream. And what we realize is very often it's these beliefs that we have that just keeps us stuck in the same loop. And so one of the best tools that I've recently learned to change that is repetition. Now, 2 years ago, I was probably 2.5 years ago, I think I was the best trader I've ever been in terms of that trader score was the highest it had ever ranked out of 100. One thing I'd done for a year straight is I had a document that was a refined set of notes from trading in the zone. It took me about 4 minutes to read. I literally would know that thing on like the back of my hand. I read that thing every single day for a year, and I installed into my subconscious mind this new belief: trading is a probabilities game. I don't need to know what happens next to make money on this trade. It only takes one person to mitigate the outcome of my next trade idea. I've never traded from such a sense of calm, peace, and confidence. And literally trading was the easiest job. I turned up, I knew my edge, I clicked the button. There was almost no emotional fear or FOMO or revenge trade because I had installed at a subconscious level an idea, an identity that I behave to. And so I'm picking back up some of these best practices. I know it's a little bit of the deeper work, but I mean, it beats sitting there all day screaming at a trade going, why is this going against me? Why is this going to my stop loss? And then feeling all that fear, that anger, that frustration, and then feeling like we want to get even with the market. So it's just something that I'm becoming a little bit more conscious of. You know what? Where was I at my peak? What was I doing? And now I'm no longer at that peak. What's the learning opportunity? What brings down my trading? And what's my next action step to bring that back up? And the cool thing, you can do it all on your own. You don't need a guru to sit there and say, this is what you do and hold your hand through it. You just sit down quietly and say, right, what's my next step? And we can all do this, and we all have to take responsibility for it. One of the worst loops I fell into in trading was mindlessly executing the same thing with the same problems, and I basically went break even for too long. If you're not happy with your results, a lot of them are within your control to fix the behavior issues first. And then if you're in drawdown after that, it's just market doing market things. It's just the market being rude, right?
Yeah, because that's the other thing where we didn't get to me as far as giving that score, right? I would say my trading wise.
What's your thing?
Yeah, so this is where I think, I mean, maybe I'm muddying it up with putting too many differentials in there, but as far as trading wise is probably 9-10. But then as far as outside personal stuff, other things bleeding in, taking, withdrawing time, etc. But as far as your person work on trading, execution, all that kind of stuff, right up there. But the other things, as far as being matched, are probably like a 3 out of 10 or something. And then that bleeds into the carryover. Even if you're running like a 9 or a 10 as far as your trading, it gets hampered because of outside stuff. And then that brings that down to, say you subtract that, if we just want to do basic stuff, down to a 6 net between the two. So I think that's important as well with the trading versus the life stuff as well, because you got to manage them both, right? Just like a business or anything else. And also to recognize that, because sometimes people try to blame their trading or their process as the reason, rather than recognizing outside stuff, or vice versa, that they think that outside stuff is not a problem and not recognizing that that's actually impacting their trading as well, which comes down to like a self-awareness type aspect, right? So that's where I would put myself there.
So what do we need to do? Shut the door, lock it, hide away from the outside world, and just stare at the screen for longer?
No, not quite, but just as far as I mean, you'll know yourself, Rich. I've talked to you about this before. I'm taking the steps to manage that stuff into a more streamlined activity, which I'm well on the way and have been for a number of weeks, months now. I'm sure, as you guys know, I've been underslept for some time, for some months now, all the time. So that is now correcting. So we've gone up from probably like a 3, maybe now to a 6. And then the idea is to get it to an 8 or a 9 in the next month or 2 months. And then those things come together and then they're in harmony and synergy. So it comes back to that psychological aspect of being in rhythm across all life aspects of other things that are going on, whether it's general life stuff. Also health is always the big one, as we always talk about, plus your trading, and they all complement each other and wrap together, right?
Yeah, dude, I've only dealt with the lack of sleep, and I know that's enough to knock you massively off your game.
Dude,
So
you got a new bub, so I mean that's fair enough. That makes sense for you.
Yeah, but life happens and it leads into trading, and trading isn't a small task. Trading is like carrying a 40-kilo anvil, and then all of a sudden life happens and another 20 kilo gets put on top and another 20 kilo, and it gets to a point where something's gonna drop. And I've seen traders, I've experienced it myself, where we try and trade through these chapters of our lives, these more volatile chapters, and most of the time it doesn't result in the kind of favorable result we want. What it does is it puts a magnifying glass on our trading. So when we win, okay, good, I feel a little bit better. When we lose, it's that crushing feeling. It's like, why has everything got to go wrong at the same time? And I've had to take time out of trading where it's just like, you know what, it's not been the right chapter to try and reach new equity highs. We all go through it, man. We all go through it, and it's awesome to hear that they're pulling now from a 3 to a 6, 6 to a 7. If you can get 8s and 9s across the board, mate, you'll cook.
Oh, dude, definitely. Like we're saying, like how we're starting off the year, I've definitely got a big year ahead. Obviously integrated this stuff into last year. A little bit of bleed over, but we'll be there very shortly. And hopefully I will have some stuff for you guys in the chat as well. You guys will be the beneficiary of that also. So
awesome. Well, just quickly, I can see that chat has been analysing, just like we would analyse the charts. Chat has been analysing us. We got the unbiased trader saying Richard W is the humble one, William is the Mr. Naughty, Richard B is Logic Survivor, and LJ the Professor as well. So we've been nicknamed officially by the chat there.
What the hell is a Logic Survivor?
I wonder if we can set nicknames. I know that. I think we can. Should I see if I can set my nickname to Mr. Naughty?
Well, I'm Doc Block, so yeah, you probably can. Yeah,
you have to.
We do need a little bit more
jump in again.
insight around Logic Survivor. What is Logic Survivor?
I feel like I feel
Survivor.
like Rich, it's the survivor part that you're not happy with, right?
I don't mind the survivor part. It's just like, it makes it sound like I'm a logic survivor, as in like I was suffering from logic and I've survived it.
Yeah. Maybe you're suffering from over logistic.
Yeah, it's possible. It's possible. But I
To
do
be
agree
fair,
with all of them. Definitely humble one, Mr. Wells. Yes, most humble person we know. LJ is definitely a professor. He's gone to uni, so more than I can say.
He's clearly the most qualified of us all.
Yeah. And then Mr. Naughty, yeah, that makes 100% sense.
I suppose
it
so.
Kind of does. Yeah, probably enough.
I'm a cheeky man. What can I say?
You cheeky little bugger.
I'm a naughty boy. Oh,
Naughty man,
fair.
naughty man. I did just want to bring up it's just going back to the car thing, and then we can drop it after, obviously. But Paulie, dude, that's the exact car I have. It's a 330. It's not a CI though. It's the 4-door. But it is an 04 as well, 2004 plate.
Right, yeah, the old M3. Oh, what a honest to God poetry. What a poetic car. In fact, going back to the Tokyo Drift, bro, that like I was probably I was really young when I started watching that, but I was probably about 16, 17 getting into the car scene. My first car was a rear-wheel drive BMW, and the minute I watched Tokyo Drift when I was old enough to be able to get behind a car, yeah, just the first thing I did was just absolutely blow that clutch.
Yeah, fair.
I can imagine
instantly
you
burnt the clutch out.
trying to like play
Yeah,
with
no, it was literally, it was like brake on, clutch down, red line in, brake off, rip the clutch up and just throw it around in circles. I ended up having a steering pump go. I burnt the clutch out, and I must have gone through a set of tyres like they were going out of fashion.
Yeah, nice. I will say the BMW I have now was my first car. That was my first car, and I've kept it, and ideally I will keep it so long as, however you can keep it running for the next 50 years. If there's companies that make
I was gonna say for as
old
long
school
as
aftermarket pieces,
nice.
we'll see.
Rich,
But
what was your first car?
Sorry?
What was your first car?
Do you know I had a Mazda, a little Mazda that was a 1983.
Nice.
323.
323 or 626.
It was a 323. I'm really impressed that you knew that.
My gran had a silver Mazda 323 1980 something model.
Dude, do you have to do me like that? Your gran had the same car as my face. You could have come up with anything. You could have been like, you know what? There was this group of like racers. They all had Mazda 323s with big exhaust.
Unlike you, mate.
I can confirm it did a top speed of 93 mile an hour. That was me.
Yeah.
Well, okay. If you want to feel better about this, she bought it brand new when it was new.
That's
Wait,
fair.
what
Dude,
color was
they are mega cars. They're still on the road today. They're good cars. All those Mazdas, really good. Definitely.
My first car was a Peugeot 206 GTI, a red one.
Oh,
That's decent.
no, it's not. Dude, Rich, you're a mechanic. A Peugeot 206?
I'm not a mechanic.
Come on.
Rich was the mechanic.
Yeah, that's what I'm saying. Rich used to not Butler, other Rich, not Richard. Rich. I don't know. We need two separate Rich and Richard.
First car. They're pretty sensible as a first car. Very similar to the Saxo VTS, I believe. And wonderful until you come into a roundabout and lift the throttle slightly, and then you're looking out the side window because the back end just decides to oversteer. It was. I had one of those as well. Got a picture of it somewhere. They're back in the day, right? Back in the day.
Nippy,
man, I found it old now.
It was a nippy car. Anyway, I don't really miss it, but it was my first car that I purchased for myself. So,
That's fair. Okay.
Unbiased trader.
How much did you pay for it?
Oh man, now I have to think back. When I bought it, I think it was 100,000 rand.
Then,
So
USD or whatever.
so yeah, in rand it was 100,000, but like I'm trying to remember what was the exchange rate back then. I think for the dollar we were closer to $7, so like 14K US.
Okay.
Back
Yeah.
then. Yeah,
Yeah.
give or take.
Yeah, I can see that. Yeah, fair. I don't know if
Yeah.
Rich is sorry, Will is actually here, or I keep removing him because he's bad. All right, we'll see
He
when
jumps
he
in
comes
and jumps out. His internet is a little wonky.
I think I bought my car for 5 Australian, which is roughly 3.5 US, but now it's worth about 15. So I did it up and
Yours appreciated, yeah.
Yeah, and yeah, there's less of them. Australia's also different because we have a lot less cars. Like a lot of the stuff that is very cheap in the UK, for instance. Probably similar for you, Rich, as well, because there's less total cars. It'll be double and a half in the UK. 50% and a bit like 4% of the price in the UK versus here. It's supply and demand, that kind of thing. Right, so, yeah.
Yeah, some of the earlier Fords, man, some of them were upwards of 30k in pounds now. Like 1980s Fords, like just all went bananas.
Yeah.
My first car was like £300, £350. It was like a really cheap first car. Just
Absolute boggo type, just terrible. Just it happens to run.
Yep.
It got an MOT. You're not sure how it did, but it did. Right? Like that's it.
Unbiased trader is saying a logic survivor. They analyze, they don't react blindly, they stay calm under pressure, they solve problems step by step, they survive challenges by thinking clearly, not just feeling strongly. Dude, are you like a psychologist or something? Like what? Like I'm way more of a logical thinker, and I try not to have emotional, have emotions control me. My wife used to complain that I used to bottle like crazy. So there's an emotional reaction and I'm just like, okay, you know what? I'm not going to deal with this now. I'm just going to like put it in a little box and the box is going to be way over there and that box is going to start stinking up and then it's going to explode and then I'm going to have one of my like days.
I think we're similar in that, but I just don't let the box explode,
The problem is if you keep putting everything in a box, the very first box that you put down becomes the last box that you deal with because you keep stacking boxes on top of this one box and then something starts stinking and you don't know where it is, so you start raveling boxes and then you realize this is not the problem. Okay, I'll put you back in the box and I'll deal with you later, and then you eventually get to the one that was the root of all of this like issues that you've had. Not a very logical way of going about it, but anyway.
Yeah, but that's trauma, right? You have an issue, and then you just stack and layer on top of it, and then you complain, "Hey, I'm overtrading." Like, why am I overtrading? You're overtrading because you're feeling these emotions. Where do the emotions come from? They got a trigger. The trigger's got a root, and the root is typically that trauma that we would talk about, right? And I literally thought you're explaining trauma, like. But it's hard to dig down to the exact root of it and figure out, why am I just suddenly stacking all these random fact? And I'm going to find a way to tie it into trading. Many years ago, many years ago, there's a big warehouse, and inside this warehouse was thousands of chickens, and the chickens would lay eggs on the floor, and the chickens were meant to lay eggs in the coops in the middle. And the guy said, look, when a chicken lays an egg on the floor, it tells all the other chickens, hey, go and lay your egg on the floor. And he said, so what would happen is we would end up with 20, 30, 40 eggs all in one area that should have been laid in the coops. And it's like a behavioural pattern that stacks up. If you have a corner that's cluttered in your house or in your life, it's so easy to go, I'm just going to go and chuck this extra dirty bowl on the side with all the other dirty bowls. And so if you have a bad trading behavior that happens and exists within your trading, it's so easy to go, yeah, but I did it yesterday and I got away with it. And that is how you make an egg analogy match up to trading. Hopefully I've done it seamlessly without getting caught.
I didn't even know you were not talking about trading there for a second.
I walked away and heard about chickens. I was like, what is going on? Come on. Yeah. To ring the buzzer. I was like, okay, chickens. Right. No, but yeah, that's 100% correct. Like it's those small, I think the same way we were talking about before, even when people first come into trade. I disappeared. Whether you get like an incremental first best experience, almost like that gambler fallacy thing, and you got good returns immediately, so you're very interested in continuing that, versus you get that death by 1,000 cuts thing, which is very much what you were saying, and you leave certain things to the side, and it builds and it compounds and gets worse, but it's very insidious because it's very small. It's not killing the whole thing, but it eats into everything you're doing, right?
Yeah.
That's kind of what you were saying with that.
And if all the other things around you are laying eggs in the corner and you're doing the same, like it breeds the same behavior pattern, right? Hey, all my friends aren't profitable. Do you think you're likely to break that mold when they're all setting examples of like no stop losses, revenge trading, FOMO in accounts, trading news? And I'm not saying like all these things on their own are account killers, but all these things specifically are harder to build and manage risk around. So when you know, it's take a what is it they say? If like I'm gonna PG this, but if 5 of your friends closest to you are, come on, finish it off for me. I need a PG version of this.
Five closest, like you are the average of your 5 closest friends, right? That's how it goes, right? That's what you're trying to say.
Yeah.
Yeah, so just because my friends are all smoking cigarettes doesn't mean I have to smoke a cigarette.
Yeah,
but
on
because
average,
my friends are smoking cigarettes,
you're
on
gonna be more
average, I
likely.
would probably also start smoking cigarettes.
Yeah.
Yeah.
Whereas all your friends are worth $1 million, and you're the one guy that isn't, chances are you're gonna be, oh hell, I need to do something to actually catch up with everyone, and you get up to $1 million. And by that time that you do, they might be at 2, 4, 5, but at least you got to $1 million. And maybe that's too large a number, depending where you live, that kind of thing, right? Obviously, that kind of stuff. But the same principle stands. Same with health, fitness, whatever it is.
Yeah, and that is why we've all decided to become LJ's friend.
Hey, there you go, guys. Tune into the live stream. There you go. That's become the average of us all. Here we are.
I don't know if people want to become an average of us all.
I think it's pretty good. You got some.
Also, guys, while I'm here, really quickly, while I am here, I just want to let you guys know that I have been tapped into a trade. I unfortunately cannot show you because the minute I tried to share it on my screen, it just crashed completely, and now I'm having issues.
Okay, so do us a favor then, Will. Tell us where you entered,
again,
and then I will put it on the screen for you.
Yeah, give us the numbers, and we'll
and then I will put it on a screen.
Point. I entered in at 4615.06.
So buy, I'm assuming, yeah. What did you do? A buy or a sell? Oh, he's gone.
He sold that.
All right, so
sure.
was
1506.
when he no, he's back. Right, he's back.
Yeah, I've also sent you a screenshot on Discord just in case I do cut out. I've got 2 pending orders.
506.
Yeah.
And your stop loss is 4613.
But I will also say for you guys here in chat, is your best opportunities right now to throw Rich in particular a question. We don't get him here all the time, right? As regularly as some of the other guys. So it's a very special event when Rich turns up. So definitely throw him a question right here, right now, if you have anything to toss Rich's way that he can help you with. So,
But not chicken related.
Why not? You brought it up, Rich.
You're the chicken
You wanted to
expert.
talk about chickens, so let's talk about chickens, guys.
I feel like we've set a trend that traders are going to come out and go, right, I only need to be friends with profitable traders. It's going to set a horrible standard that a lot of unprofitable traders are going to get kicked to the curb and left on their own. Look.
I think the primary question is, what came first, the chicken or the egg?
I think scientifically they've proven that the chicken came first because the chicken has a specific enzyme in that they produce that was found in the egg, and it would then mean that if the egg were to be produced, it would only have that enzyme or that specific protein in the shell created by the chicken. So scientifically,
Yes, I like your very. This is where we get the logic thing, and same with you and me. So, and yes, that would be the thing. But then also, if the egg is a genetic deviation from the original chicken, which is what breeds new animal variances, right? Then the egg would be first, but we don't know how that actually happened, I guess.
So if we're saying evolution,
Up for debate.
if we're saying evolution, then we're saying that the dinosaurs were chickens.
Yeah, so
they evolved.
the next point comes to, what do you define as the original chicken? Because the only way you can then pinpoint one or the other is the original. Who was the original chicken?
It's KFC, mate.
So we
KFC is the
we gotta
originator, I think.
Ask the colonel.
We should ask the colonel. He was there.
You gotta ask the colonel.
Who is the king of chickens?
Oh, 4-1, not 4-7. Okay, so Will, I've got your trade up here. I'm going to assume that it is a 1-to-1. So
you're long currently.
yeah. So this is the idea, probably aiming for around 4-6-32-ish. And we will never know because Will is smirking at his screen.
I would assume. I think he would have a tighter stop loss. Not gonna lie. I'm gonna assume it's actually run your cursor slightly higher, or I'll try and
So this is the one that he sent. He sent me a message saying that this was his stop loss.
That's where he's
It's a
into.
discretionary stop loss. So the thing is with, even though he's not here, I'll speak on his behalf. Even if price were to start pushing a little bit lower, he would probably not leave it to hit stop loss. He will probably close out once this swing point over here is probably closed below, or even that swing point
that's what's
there.
Yeah, I was going to say that's basically where I thought he'd actually put a stop.
Yeah.
Knowing Will, how he trades that would, but he just starts with it there, but it will just
So this is
close it.
effectively that worst case scenario in the event where everything fails, my power is out, I can't get onto my phone, there's no signal, I have to have a stop loss. But
So it's
in
more out of
actuality,
protection.
yeah, but in actuality, his stop loss would most probably be here, and that is generally where he would want to exit should discretion take over and say, this is where you exit.
Yeah, because you might get like a drop down to there, especially gold. It wicks a bit further. You don't want to get stopped out because of, even though it's just wicks a bit further, but the structure continues. Yeah, that's totally fair. But yeah, that is exactly where I thought.
Yeah,
knowing Will and watching Will how he trades, where it would be. So yeah.
Yeah, that's one of the fun things, and I know Richard Wells has also said that if you spend enough time with another person on a live stream and you trade together, you really pick up their like nuances about their trading. You'll see it.
It was like
you sometimes even see their trade before they see it, and it's just like, Rich, here's a trade for you, and you're like, oh yeah, you're right, and then
it was like when Mike jumped in briefly. When you jumped in briefly as well, when I was on earlier, right? And I was like,
oh yes, yeah.
Mike, I know exactly where you entered. I know how you trade, whatever. It would have been right here, blah, blah. This is the thing. You'll be going for this or that. There you go. So, yeah, definitely. Definitely. Will is trying to get back in, so hopefully he's got a. Nope, he's gone. As soon as he got in, disconnected. We'll see.
William, the account
Rich.
manager, Dave.
Yeah, I was going to say, Rich, though, do you have any other either extension of your prior inputs earlier or anything else you want to present to us today?
I've got a couple of things that we'll be running through in the Discord. We've got a coaching workshop call in there and a Q&A session, which is going to be running in a little over 3 hours from now. So if you're not in the Discord, if you're a Fivers trader or you've got access to the hub and you're registered as a Fivers trader, if you go into your hub, you'll see a little Discord icon. You click on that, you get access to the Fivers Discord, and you'll see at the top of the Discord on the left-hand side, it says events. If you click on events, it will tell you everything that we got planned within the Discord throughout the week. And you will be able to register and get a notification specifically for the events that you're interested in. So within there, you've got Victor's workshops, which the Quas Fu master himself, where he talks through order blocks and quasis, head and shoulder patterns. You've got LJ and Akron sessions with the infamous duck race, which I have been begged to do the duck race within the coaching sessions, and I'm like, hands off, I'm not going to do that. That's your guys' gig. So we'll often do the it's always every Friday. Often that rolls into stuff like NFP, that kind of stuff. We'll give your pre-NFP breakdown, any of the other New York session data, or a weekly market roundup off center of NFP, everything else going on. But yeah, sorry, continue, Rich. No, they're brilliant sessions to be a part of if you want to start gaining a little bit more insights into the fundamentals of the markets, or even just gain access to some of the Fivers team more specifically and ask a lot closer questions, because you can gain, like I say, we have a little bit more attention in there. And then you've got the coaching sessions, which we do on a Thursday and a Friday, and they're led by myself as well. That's a really good place where we start looking at mindset. I try and lean away a little bit from strategy stuff. We can go through strategy stuff if you want, but more specifically looking at mindset, performance statistics, kind of data around traders and insights that we don't typically share too often within the YouTube stream. So if you've got any questions or anything that you want to dive into specifically, or just listen in on the back end, that'll be starting in 3 hours 15 minutes from now. They should run for an hour. I'm often in there for well over an hour, and then we give away because they're a lot of fun. They're kind of a nice chill space where we just connect as traders and we talk about the real stuff that we all experience day to day today. If you're going to do this and sit in a room on your own for most of the working day and stare at these candles and try and create meaning from them, then sometimes you can go a little bit mad. You can even start talking about chickens on a live stream. So it's good to keep balance, and they're a really good safe space for us to do that as traders as well. So everything I've got sort of planned, I'll sort of hold for those calls a little bit later on. If not, we're going to be off on a tandem, and I'm going to be cutting into the next person's session, and I definitely don't want to do that.
That's right. So definitely one of the best places for you guys to get like your best point of contact for Rich is in those Discord calls where you can ask him direct questions. It will normally be a little bit more, closer contact type of environment. He'll be able to answer you directly. Depending on the situation, sometimes you can jump on mic. Depending on the number of people, that kind of stuff might get too chaotic, but that'll be up to Rich allowing that. Same thing with you guys and myself on Fridays. I also do that with Void or Akram. You guys might know from the Discord as well. You guys can jump on mic personally, speak openly to us directly, and we can go through a bunch of stuff. So same thing with Rich as well. That's your best point of call. Jump in there with him, engage with that, and he can help you out. Any kind of troubles you guys are having, like Rich was saying, primarily looking at a bunch of the sort of mentality, how you're approaching your trading rather than direct strategy stuff, but obviously they're kind of linked together. So sometimes it will bleed over. That's a primary directive. So any guys that are, having, not even that you're having issues with that, you're actually doing well, but you want to level up to a further level. So it's not always that you're, doing bad or something. You want to go to the Rich is directly here to do that for you. So definitely tune in for that.
Wonderful. I'm excited for it, guys. I'm going to have to dip. Thank you ever so much for that. Richard, been a pleasure to have me on, LJ. It's a pleasure as always, mate. And traders, trade well, trade safe, manage your risk, and do not copy other people's trades. If it's someone else's trade, Victor says this wonderfully. When I see a move in the market that goes and it creates that FOMO, I just remind myself that was someone else's trade. Yeah. Trade your pen, not anyone else's. And I'll catch you all soon. Thanks for having me. See you soon.
It's nice. No worries.
Thanks.
See you, Rich.
Yes.
We'll see you in your session a little bit later, and then tomorrow as well. And then there were two. It seems as though Will is really struggling.
This guy, we got this guy here. No, we got three now. Rich, look, I brought him up.
It's the ghost of William Past.
It's because he has to go and like make the potatoes for the jail, and he's got to go do some cooking. It's part of his
peeling action.
Yeah.
He has to make sure that everybody gets their slop, mate.
Exactly.
Yeah, Will is struggling. Will is really struggling with his Wi-Fi at the moment.
It's all right. I'll hang around.
You've got LJ and myself to keep you company, at least for a little while longer. I actually want to talk about Will's trade just for a second.
Definitely.
Now, please don't assume this as it's my information. I'm just going to kind of like see if I can have the same rationale as what Will had with his trade. And this is my rationale as to why Will took this trade. Okay, so first and foremost, we were in a downward, by the way, 5-minute or 15-minute. This is where we were. Yesterday's highs, we started slowly moving lower during the Tokyo session the whole of today. Okay, so a downward trend on the very lower time frame of 5 minutes coming in from last night into this morning. From market close for the dollar, or for the rollover, let's rather say, from rollover all the way down into the lows of Tokyo. We were bearish. Great. So what then happened? We created the low of the day, which is all the way down here at 4,580 to 4,582-ish. Okay, so that is the low. Then what happened? We had a very local high point over here. There's all of these local high points. Every time where it starts pushing lower, every swing point basically is a high point. Now, every one of these swing points is effectively an area that potentially can become untested if we are to change from a bearish structure to a bullish structure. And in this case, this is what happened. We had this local high point down over here, which can also be considered a little bit of consolidation. We're not really getting massive movements all that much. We're getting effectively a double low as well as a double top. So most recent local high point, eventually what happened during the end of Tokyo, we eventually created a higher low in relation to this previous, a higher high, sorry, in relation to the previous high. But we still hadn't broken these points over here. All right, so just keep that in mind. So what happened then was we tried to make a new low coming out of Tokyo, which failed, and we eventually started creating a new high. So basically, coming out of Tokyo, we have the low all the way down here, and we have a new high that technically has been established. Then from here on, price is trying to push lower, trying to break these recent low points, which it did, but instead of having a follow through, pushing it lower, it actually went up and created a new high. So you're effectively in it is a bit sideways, but it's also effectively on the much lower time frame, a little bit more bullish going into London rather than the bearish structure that we saw coming out of New York session last night, going into Tokyo session this morning. So with that in mind, now we need to kind of like figure out why would Will want to take a buy specifically. And what I can see is that we have a little area over here that price was struggling to really pick a side. And then eventually we started to push a little bit higher. We have the high that was broken, so we've created a new high on these points. And at the same time, we're also creating on the lower time frame higher lows. So makes sense. Now the idea is, once this high point over here got broken and closed above, Will is not going to enter a trade immediately, let's say up over here as an example. He's going to wait for price to come back down again to retest that last breakout point, and it so happened to be in a base area as well. So his assumption is most probably that, okay, if price were to come back down and it starts slowing down as it's reaching this area over here, that might be a good enough spot to try and get trade, with the expectancy of most probably trying to reach this higher point as he likes to refer to it, as his low-hanging fruit. But also in general probably sticking to a potential 1-to-1. Now here's the interesting thing. If he had his stop loss at these recent lower swing points, like LJ, you've seen Will trade, generally where he would put his stop loss. This is his discretionary stop loss all the way down there. But if he were to have his stop loss, for argument's sake, close to or just slightly below this recent swing point, and you look at where the high point is slightly lower, you get a 1 to 2.9 or a 1 to 1.3 R trade, which is very much still within the typical area where will be looking for a 1-to-1 as an example. Even if his risk is all the way down there for, let's say, 0.5% risk or something like that, in general, he's probably only risking about 0.25% with the idea of making about 0.25%. Now,
so the larger risk portion is more a protection for the account versus his actual discretionary idea of where it would actually exit something. So say, I don't know, Trump came out and said something and it was just a blip in the pan, and the price runs down, he gets stopped out only for it to come back up. That is definitely one of those ideas where having that extended stop loss, as long as you still put everything in line, is a very good idea, because it protects the account given those outside things that you cannot predict. But within the trading operative of what structure you're looking at, that would probably be the kill level. But you don't want to get killed on something that is arbitrary and just flash in the pan and then it goes back. So I quite like that.
Naturally started moving its way down instead of suddenly, like with news impact or something. If it slowly started moving its way down, and it did eventually break Will's let's call it his discretionary stop. His initial discretionary stop. If it were to break and close lower than here, he's most probably wrong about the direction of this trade. So it just makes sense. So, and instead of him saying, okay, I'm risking 0.5% all the way down there, and I'm gonna let it absolutely just take me out when it reaches that point, he knows at this point over here he's just wrong, and there's just no point in him holding the trade anymore, because the likelihood now of it coming back to take his profit is a lot lower, and it's a much higher probability that he's going to get stopped out.
Yeah, and it gives you an allowance of, like you're saying, discretion in terms of maybe you didn't get quite a perfect entry, right? And so there just might have been one more structural pullback before it actually starts running. So you're also being humble in a sense, saying that I am not trying to pick the exact top or bottom of whichever direction I'm going. I'm giving a bit of variance on either side to this level. Hence, I'm going to structure the trade as far as the management that I can go much lower than my defined dead level.
Yes.
Right? And then if it does come to that, I can look at the market structure, see how the market is actually performing, and go, okay, is this just general market activity and it's gone a bit further than I personally subjectively perceived, or is this actually a change of structure and I need to get out, right? And so it gives you that second order inference to make a second decision, either to stay in or just get out. I like that a lot. It's really good.
Yeah, I think it's a very interesting way to ensure that, first of all, you're staying objective, because how often has this happened? And a lot of traders have most probably gone through this whole process where they enter a trade and then we start drifting closer and closer to our stop loss, and then you're immediately thinking, "Oh no, the end of the world! I should close this out." But in reality, what is happening is this movement that you're seeing, it's just giving you breathing room. It's giving you space to just not react suddenly and say, oh, I must get out now because it's going closer to my stop loss now. Take a bit of time, have a look and see, okay, let's be objective about this. Is this really the structure that's forming right now, a bearish structure in this case? Or is this more of a pullback and then a continuation? And it just gives you that little bit of time. I know everybody wants, I don't know why I keep doing that. I know everybody wants these kind of trades, you know?
Yeah, we get that. It's
we are
absolute banger. Yeah.
Like they can happen, fair enough, but
guys, I think I'm actually sorry. I think I'm good. I think I've connected to my mobile data. I think I've actually managed to make that. I can see you guys. I can see you and hear you. Oh my god, I feel so much better. Hello.
We were just discussing your trade, Will. We've been
breaking down your trade the whole time. So with certain assumptions, but I think we both know your trading style enough to have done that, right? Yeah.
Guys, I am so sorry for those viewing right now thinking, what is Will doing? Like, he's on and off, on and off, on and off.
That's right. Look, you've changed country, literally, and so you're trying to settle, and sometimes it doesn't go.
Yeah, I mean, look, there's teething issues. There are teething issues, to be fair, but I have gone ballistic at the landlord, like beyond angry at the landlord. So yeah, it's better. I've said to him, I was like, you sort this now. I'm moving out end of the month.
Yeah, fair.
And I was like, you can source an angry Will as well. I was like, you sort it.
I mean, you're very reliant on your Wi-Fi working, properly. So I would be a little bit annoyed.
Yeah, annoyed. Annoyed's an understatement.
I was being.
It's the same thing. The same reason I wanted to get out of here. Same deal. So
yeah.
I can respect and understand that, and you can't do anything. And
I know that's the worst thing. It's not like I can do something.
Yes, very frustrating.
It's embarrassing because it's more than frustrating, man. It's embarrassing because yes, I joke about, I can be quite fun and like Will Davis, Mr. Naughty and all that lot, but I pride myself in professionalism. I pride myself in being available and professional and the best of my ability possible. So when this happens to me, it infuriates me. Like genuine rage inside me starts boiling when it's out of my control. But hey guys, thank you for enjoying the stream. Glad you enjoy it.
It is definitely a frustrating thing, and especially if you add that frustration on top of I've moved, I'm in a new country, I'm still required to do all of the things that make me my income and all of that stuff. But now, not only are you struggling with those like nitty-gritty things which you are not supposed to be struggling with anymore because it's 2026, and why are we still struggling with Wi-Fi, and why are we still struggling with infrastructure for the internet and whatnot? I can't believe this. How is it still happening?
Yeah, exactly, man. Exactly.
It's like my camera yesterday was just black, so like we had the contrast thing where it was too bright. Yesterday it was too dark, and so when Dirk was on, I feel so bad that I was trying to jump in the background the whole time, but I was completely black. The whole screen was black, so I just would have been a voice speaking, and that's it. Yeah, so I had to delete all the Microsoft inputs for camera stuff altogether and re-download the original stuff.
But, the joys, mate. The joys. So tell me, Rich, how is my trade doing? Because I don't have any idea.
So right now you are sitting about I would assume you probably went roughly around 0.5% risk in total, but it's sitting about $2 $2 ish. Yo, what's up, Aaron?
Hello? Oh, sorry, I was muted.
Aaron,
Okay.
good to see you, bro.
How are you guys doing? How you been?
Good, man. Good, man.
What's
Good
good,
to see you.
good.
I hope your the start of your year, 2026, has been good.
It's been
It's been
great,
good for you.
honestly.
Good
Yeah,
to see you
it's
again, man.
been amazing.
Actually, like,
Well, looks like you made it.
just about.
He did.
I'm now.
Yeah, just
streaming.
about. He's still we're trying to figure that out. He's
I don't know if
still
you can
there
see that.
fine.
That's
from the
my
previous stream.
data. I'm hotspotting my laptop right now. That's how bad the Wi-Fi is here. My mobile data hotspot is better than
I
the
thought
Wi-Fi.
the
I
internet
thought
in my
China was
building.
meant to take over as far as, tech, internet,
So-
AI,
bro, so-
everything. Come on. Get some,
I'm waiting to see it.
right?
I'm gonna go back to the UK, and when they're like, oh, the Wi-Fi tech, BYD, all these, Asian technology firms, etc., they're all taking over. I'm gonna laugh at them,
Well,
and I'm gonna go, nope, they don't even have Wi-Fi in their building.
Surely, wait, though, you're running a VPN, right? Yeah?
No,
Well, that might be your first point of call, because that will help.
I'm not. Yeah, I was gonna say I'm not even running a VPN right now. To be
Yeah,
fair,
I was about to say. So you will have to do that as far as just, it's just a bandwidth type issue, if not. So
So are you guys in any trades? Anyone in any?
Bill,
we were
Currently in
analyzing.
gold buy right
Yeah.
now.
was in a gold
trade.
buy. Okay, interesting.
Yeah, this is
Yeah.
gold trade.
I have no choice. Like, I'm in one. Yeah, I am in a bit.
Maybe
Martin,
I like it.
Martin is asking, Richard, do you see anything today on NQ? So I'll have a quick little gander here on NASDAQ. So I had a little buy on my personal account. I didn't trade any of my funded accounts or evaluation accounts or anything like that, but I had a little buy coming out here on the 5-minute. So I did enter a buy just on the close of this candle over here for a 1-to-1, and it was also a very quick trade, done and dusted. But when it comes to NASDAQ at the moment, on the 5-minute, we're very bullish over the day. On the 15-minute as well, we've been very, very bullish for today. So we had this very long, drawn-out pull down yesterday with a bit of news, pushing it out a little bit lower. But in general, it seems as though we're having a bit of a recovery today. And I've got this area of consolidation, which was the whole of Tokyo session, as well as the beginnings of London session. I have this area that I think potentially we could have tested. I made this one up earlier, and we're now at it right now. This purple one here is a little bit of a higher time frame support and resistance. We've had multiple reactions off of this area that just to me seemed like a good enough area to, if we were to come to it, we might have some sort of reaction. We're either going to break through it or we're going to bounce off of it. Right now, we've broken through it on the hourly at least. So to me right now, I'm kind of stuck on the fence. We have quite a bit of slowed momentum around about this area, which is just so happens to coincide with this area of consolidation of yesterday. So technically, we are slowing down where we slowed down yesterday, the same place. So am I going to see a lot more downdraft from here? It can happen. However, if I go over to the higher time frame, we are still within this ascending triangle almost, still very much ascending.
Sorted, but I see what you're saying as well. Yeah, that basically, even if you bring it down to that prior piece, because you technically negate distortion from the Christmas period, which is not as many active participants. We didn't get quite the drive higher, but we have had consistent uptakes. Now, I will go and say the same thing that Richard was saying. through this area is a point of both we've had support and it's also a break point where we've seen large pushes through that price point. So roughly comes into where we are now. As far as this kind of stuff, I would prefer to see a slight drawdown and then a pick up higher, unless somehow we get the data coming out tonight with week-on-week claims that gives us a certain jolt, and then with that jolt we get momentum. So this comes down to the probability distribution for the 0 DTE options pricing today, which is slightly lower than where we are. So that tends to gravitate. You get that pull down. That also happens to come in. These are the trades that I do like, when it happens to come in neatly with prior support and resistance. So we've got resistance from those high levels and the support through there. And that's when it's really good to lean on as far as a preferential buying point. Now, obviously, if the data comes out in a different way, maybe see these levels break through here, we want to join the rally. However, I would say, especially from the data tonight, it's relevant data, but it's not as big as some of the other major pieces. So if we get a push through here, it might only just be a marginal higher spurt, and then you potentially come down anyway, right? So given that, the preferential piece, at least from my view, would be to look for some kind of entry on that lower piece for us to go higher overall. So NASDAQ, S&P, I think does go higher through this year. I've taken that stance, like I said, from Q3, Q4. I was unsure going into the start of this year, but I think that's where I'm sitting. I think we do go higher. Given all the data, I can't find a reason for it not to.
I'm inclined to agree with you, LJ, when it comes to NASDAQ. I think that there is...
Unless AI falls apart, that's the only thing that would disrupt it. Because even the broader, outside of AI, broader 500 have increased profits, reduced costs, reduced employment costs, everything. When I look at, like, even if we have a recession or a crash, they'd be okay. Which is one of these really weird aspects, which it primarily comes from the thing from COVID, that all these companies were in such distress that they wrapped up their balance sheets so tightly because they didn't know what was going to happen going forward. They brought that in, and then they've continued that going forward still. It's all good. And that gets really weird because normally it's not all good. But when you actually look at the data, you're like...
Then it's just like, oh, this actually does project pretty well.
Yeah.
Why?
Yeah, it's like when you're mentally forecasting a negative, but then you look at the data and you're like, I feel like that isn't right, but it clearly is.
I think that's also part of why the people that Trump has put around him this time are very sophisticated individuals that have had hedge fund positions, mutual fund, whatever. Like they're really going on macro fundamental stuff, all that kind of stuff. They are not unsophisticated. They deeply know what is happening. And so for them to go, okay, yes, we can press on the way that you want to, and they know that, given the math, we can do it. Exactly that. And we've seen that play out further and stay stable. So before they would have been betting essentially that it would have stayed stable. Now we've actually seen it has stayed stable. Same with inflation, everything. So that's when eventually you got to call, even though this is a weird time, that's what's in play and that's what we're seeing. And at some point you have to go, it's a bit weird, but trade it as you see it. Even with you guys, when you guys trade on that lower time frame, etc., that it's the same principle. And you do also have that with the macro and fundamental stuff. At some point you have to go trade what you see type thing.
Yeah, and I think that is pretty much the takeaway that I've had with the market is just trade what you see. Because more often than not, you can go in with a certain expectation and then be completely proven wrong, and then that's going to impact you, and you're going to think, oh no, you're going to doubt your next trade, that kind of like thing. Just trade what you see.
Yeah, so a perfect example is obviously the Japanese bond market. That's the most egregious one right now, which that one is so egregious that it will have to come back in line regardless of this stuff that we're talking about. This is a bit more gravitational than just stuff can plod along, right? But at the same time, it's always that aspect of, it's almost like the Michael Burry thing, where he's like, okay, I can see the housing sector is going to crash. And it does in 2005, and it's 2.5 years later before it actually does, right? So timing is very hard with some of these large macro fundamental things. And the contrary to that is that sometimes you can start to develop an idea that nothing's happening. It's going to be very long, and then it isn't, and it comes instantly. And so this is when you have to keep up with stuff week to week, month to month with macro fundamentals and keep iterating and keep adding to that perspective. So yeah, interesting. But right now, technicals, I think running everything is my major input for now. So
yeah, I know. I'm inclined to agree with that. We have a very interesting question
here by the fundamentals itself.
Yeah. We have a very interesting question from Jurat asking, Top Step versus 5%ers. Which one is better? Let me ask you this, Jurat. Where are you currently? Who are you currently watching? You're not watching the other competitor, are you? No, you're watching us.
You're at the fivers.
Yeah, you're watching us, mate. The fivers. Dude, the fivers are better. Always. In every aspect. There's no debate.
Yeah. So
I'll be honest, I think even
in America and you are banned because of certain regulations, then fair enough.
No, I mean, extenuating circumstances put aside.
Yeah, exactly. So though, you do trade futures slightly different to CFDs, that kind of stuff, but there's not one that is better than the other, to be honest. It's the same way as should you trade FX or commodities or should you trade stocks, right? It's not
exactly
one better than the other. It's what you understand better, what is more natural to you. Maybe you have a great enjoyment in reading the prospectus for NVIDIA, for all the AI companies. You got a real interest in that. So you trading the stock component of the AI complex and potentially quantum computing as a fringe element or something like that. You're like, I not only can make money from this as far as the trading aspect, I actually enjoy the knowledge and learning about this stuff. Now, some other people might want to trade FX, and maybe you're interested in, macroeconomics, that kind of stuff. So there's not one better than the other. They're just different. It's like saying gold or silver, or euro dollar or pound dollar, or euro yen versus Aussie dollar or something. They're just different. And so you got to pick your select, get involved in that, what feels most natural to you, and what when you spend the time on learning, getting in depth around whatever market it is, that feels more natural and you can put more energy and it's not draining to you. Right? You might not want to learn about Coca-Cola's sales to this country and that. Like, you're like, dude, I don't care. Right? You find another market and you're like, oh, this is cool. Tesla's doing something and like, oh, Elon said this and they're going to ship out this many.
You want to find a market that you are kind of believe in.
Yeah, something that will engage you, right? That's something that you can get.
Just piques your interest.
There's nothing worse than like reading up on the fundamentals or looking at the technicals like that. High. Why? Because like robotics in China have increased. If you're bored of that, you choose an asset class, you choose a pair, you choose a currency, you choose a whatever commodity, you choose something that suits you, both analytically, as far as charting, as far as fundamentals, whatever tickles your fancy. And whatever makes you think, oh yes, I like this, that's what you trade.
Yeah.
However,
it's almost like collectible as well. right? With
Yeah.
some people do shoes, right? You know, collect Nikes, that kind of stuff, blah blah. Maybe
Yeah,
you don't
fair.
care about Nikes and shoes or like fashion stuff, but you do care about Pokemon cards, and you're an ace on Pokemon
Yeah, exactly.
and arbitraging stuff. And those two markets, they're kind of in the same, doing the same thing, but very different stuff. Like you might, I don't care about, you know, 1997 Jordan Air Force One, but like that doesn't mean anything to me. But a 1999 Charizard does, right? And you're like, oh, that's cool. Now I
Yeah,
can get
exactly.
nerdy about it. And if you get nerdy about it, that's where you'll make the edge.
Yeah.
So the same thing in trading. It
Yeah,
might be
it's the same with like.
we have the fivers here. We also have trade the pool, right? So if FX isn't your thing, you can, yeah, go to trade the pool, right? But it's finding what feels good for you, what you can get interested in, and it's not draining and detrimental to your energy complex whilst you're trying to spend this time actually putting in the work, right, to get a result.
I just want to say
Yeah.
this.
Yes.
There's a comment from Miss K90, Miss K911 saying, "Who's top step?" Exactly. Who's top step? Followed up by
Who's
DJ saying, "Top step is a futures prop firm, but this is the interesting part. This, in my view, the Fivers has the highest credibility, and to top it, the track record of the Fivers is unmatched, no cap." DJ, you're getting comment of the day, mate. This is comment of the day.
Yeah.
This is seriously the kind of stuff that, well, they don't have to know that we're paying you for. No, I'm joking.
They don't need to know that you're on our payroll.
This is the kind of comments that we love to see, mate. Like, it has always been the Fivers' viewpoint to be a good actor in the market, to be a good, honest,
A good egg.
platform.
And
So-
that's part
when
of
you see
why
this, it's
you guys have
amazing.
been asking for some time when's futures coming, and there's, you know, it's been delayed and there's a bit of time, a bunch of stuff to work through. It's because they want to get it exactly wrong to give the best conditions
Exactly.
for you guys.
Or
Yeah.
we could
Questions.
just release it to you guys, get it completely wrong, shaft it completely, give ourselves a bad name and a bad reputation, just ruin everything we've built for the past 10 years.
So I would say it's almost like Apple when Apple does stuff late, right? But when they do it completely right, and they
worth
typically make it the best on the market. So that's what you guys can hopefully expect from the futures, that kind of stuff. So I know a bunch of you guys have been asking all the time. I get in the Discord as well. I get a bunch of DMs, all of that. It is coming. And the only reason it's been delayed is because it's trying to be perfected, streamlined to every
Before
it's
release.
basically it's for you guys to make it as best as possible for you guys. So when it comes through,
Yeah, exactly.
mega, right?
Right, guys, I've got to shoot because, like I said, I'm using my hotspot, and that's the last thing I need is my hotspot to run out, or like my data to run out towards the weekend as well. So that, I think that'll be a big So so guys, I'm gonna love you and leave you. It's good that, you know, I was able to hook up to my hotspot. Worst case scenario, if it happens next week, while still waiting for them to fix the Wi-Fi, I can still jump onto my hotspot and I'll send them the bill. So guys, thank you so much for joining. I think we nearly had 300 of you watching today, which is absolutely mega cool. One thing I do want to plug just before I leave, the episode that everyone has been waiting for, the new season of Funded Freedom, has officially been released yesterday with myself and my brother. We traveled. I'm going to give it away. We went through Italy. Day one got released yesterday. I'll tell you what I'll do. I'll drop the link really quick. I don't know if that's dropped the link okay.
Indeed.
There we go. So I've just dropped the link down below. If you guys do want to check it out once the stream has ended, stay in the stream. Don't go anywhere because we've got some fantastic people joining. But once the stream has ended a little bit later on, there is the link. Go ahead and check it out. give us a big thumbs up on the video and put a nice comment below. So just thought I'd let you all know it has been released. I know that a lot of you were looking for it.
Yeah, you guys go check out Funded Freedom. Great show to watch. We've got more episodes, everything coming through. You guys might see myself and Will in the future. There's a bunch on the back end to get through. So the more that you guys like jump in, engage, see that you guys like that, we can do some more crazy stuff as well. It'll be a lot of fun. So definitely go check that out, like Will said. But thanks, Will. Thank you for coming, bro. See you next time.
Awesome, Will.
Take care, Will.
Man's
Aaron.
frozen.
Yes.
Mate, we didn't really catch up with you because
Yeah, it's okay. You know, I don't want to interrupt you guys when you're giving advice. You know, I like hearing it.
Oh wow, we've got Pedro in as well.
Hey, Pedro.
What's up?
What's up, Pedro?
What's up, everyone?
Okay, I will actually work on a thing this weekend to get like a non-copyright version that we can do.
Yeah, we can play whenever, the ding dong bell gets rung, or whenever Pedro wants to come in, he can just have his little like WWE walk-in song.
I like it.
Yeah,
I like it.
Yeah. Exactly, we'll do that for sure. I will have to say, adios, ciao for now, guys, and I will see you guys tomorrow in the Discord, or else on Monday. But do come in and join the Discord. You guys can get me directly there, plus Akram as well, and jump on the voice chat, ask direct questions, all that kind of stuff, in real time as you want, and you'll have me for a while. So see you guys there. If not, until then, Monday. Ciao for now.
Thank you very much, LJ. Thank you.
Bye, LJ.
Cheers, guys.
Cheers, LJ. And then there were three, Aaron and Pedro. Pedro, you're interstate. Aaron, are you staying on for a little while longer?
Yeah, definitely. I mean, we need to catch up, right, Richard? Come on. I've just gotten here.
Yeah, you just gotten here. When you had your opportunity, I took it away from you. I'm so sorry.
No, you're good.
Aaron, how have you been?
I've been great, honestly, Richard. I've been very focused on my trading as well. And that's been going well. You know, I told you I'm going to start trading futures, if you remember it.
I remember it.
I passed my eval that I bought, and I'm currently up 800 on the live account with the futures account. And I've also managed to secure a payout on my Forex live account as well, twice this year so far. So it's been well, man. It's been well. Good trading this January. How about yourselves?
Oh, dude, first of all, congratulations on the evaluation account with the futures and then getting your payouts. This is what we mean when we're talking about sticking to your process, and the results will follow. So, love that.
Thank you.
Pedro, you wanted to say?
Mine is a bit the opposite. It's quiet so far. So I'm having a bit of a slow beginning of the year. But all good. That's kind of the approach that I was already a little bit expecting for this year. I kind of mentioned a little bit with Jonathan on Tuesday that not exactly swing trader, or because I'm not really seeing myself as that, but at least looking more for high probability trades, higher time frame, that the trade may last for a few days, maybe up to a week, and those are the opportunities. Some of those actually could have happened yesterday on the yen. On some of yen pairs. Unfortunately, they happened at a time that I was not at the market, way too early, like 6 a.m. or 7 a.m. in the morning, and I didn't manage to catch any of those short opportunities. And I need just to be okay with that sometimes. So I'm going to focus on high probability setups, levels. I'm a counter trend trader, as everyone knows, so I'm going to be looking for those potential reversals when I do see them. I just need to find a way to capitalize them. But yeah, aside from that, I think that's what I want to do. I want to try to go a little bit bigger on those opportunities and kind of almost remove everything else in between. That usually it's not maybe I'm still profitable on those, but it's more of the time consuming that is taking me is staring at the charts, and I want to try to remove that a little bit,
minimize it, right? Okay.
Yeah, that's a little bit, especially in terms of removing the time. I get way too I spend too much time, and when I'm just staring at the charts, I may have some things to do, even for the Fivers, even for the Portuguese community or something else, but I'm not really focused on those if I'm just staring at the charts. I prefer actually maybe to go some other place, bring my laptop and do some work instead of just staring here. Okay, it's really hard to focus. My best times of focus is either Sundays, where the market is closed and where I can do a lot of work, or maybe Friday afternoon where I'm basically already switched off from the market as well, and I can just do some work. But from that, it's hard during the week, because if the market is open, I'm just constantly looking or trying to find opportunities, and how to try to. It's more of that than anything else.
100%.
That's my
the
point.
idea of capitalizing on the time that you have instead of extending the time, but making whatever time you have, make it quality. I just wanted to mention one thing. We do have unemployment claims for the US dollar coming out in the next 20 minutes or so. So in the next 20 minutes, we will have unemployment claims on the dollar. So that means that for all of you guys trading the high stakes program, 2 minutes before and 2 minutes after that high impact red folder news, cannot open up a new trade. But holding a trade through that news, if you've already entered it or it's already in place, should not be a problem at all. So just remember, all of the US pairs, so it's for all of the majors, so US connected, and you probably see some volatility on some of the indices as well. US 30, the NAS 100 and so on should also see some volatility, and then gold as well should see some volatility as well. Unemployment claims is generally a big market mover, so please trade with caution around that time. So I just wanted to make sure that went through.
I just want to say thank you to Unbiased Trader for the comment and kind of saying good things about my smile. To me, sometimes it is reciprocal, kind of not reciprocal, reactive. Like when someone's smiling, kind of the other person tends to smile as well. Thank you. it's not on purpose. It's kind of just natural. Yeah, it's just natural.
Okay. You would always smile when I'm doing my silly faces, or I'm like, so. I would like to say thank you to myself for making Pedro smile.
It's not. Welcome, Jay. Richard, how is everything? How is your trading? More intraday, as we know. Did you manage to capitalize on anything this week or today? What have you been looking at?
I'm pretty much in a trade every single day. So whether they go in my way or not is a completely different story. I had a very quick 1-to-1 trade over here on NAS. So I you know me, I'd like to trade the 5 and the 15 minute, and I do like when a specific area, or at least let's rather say a new structure is formed. In this case, down here we had a little bit of consolidation, just like uninspiring price action during Tokyo session. Then we had to end of Tokyo a very nice attempt to try and push price higher. We then immediately entered into consolidation, but this consolidation was a higher consolidation than the previous one. So to me, it was a signifier that there's a potential for price to go higher. We had this very nice wick over here and another attempt to try and push price lower, and it just failed. And then I just entered my very, very typical, very boring rally base rally entry. And that is my one little trade for today. I did take a trade last night, a nice little sell, but I got wicked out on it, unfortunately. But that's how it goes sometimes. You're not going to win all of the trades that you enter. So, yeah.
You got your gut back today.
Nothing else.
Why was your target in there? Just that small one? Don't want
this one. So my entry was 25,567.9, and I was targeting 40 or 400 points, so $40 on NAS. So I was targeting 25,607.9, and then my stop loss, this was a 1-to-1, was just 25,527.9.
But any specific, just because you usually look for 1-to-1s, or was there any technical that decided for you to target in that moment?
London session, I always target a 1-to-1.
Okay.
Just purely because London session tends to have less, or it takes longer to reach the same kind of like volume or movements as the New York session would have. So my back-tested data has shown that a 1-to-1 here with a 400 points, or in this case 40 pips. Is it 40 pips? Actually, I'm actually not sure if it is like 40 pips or not, because I usually work it in points, and it's 4,000 points if I have a stop loss. So it's 4,000 points on, so that would be about 40 pips. Yeah, so it's just 4,000 points on MetaTrader. And I've just found that this works the best for that. So I'm a very much a mechanical trader. So New York would be 1 to 1.5 R or a 1 to 2 R trade.
Okay.
Yeah.
Okay. Yeah, just trying to understand if there was anything technical or not, but it was more of a base rule.
Very much.
Yeah, because sometimes what we have seen recently, I mean, something that there's even maybe recent months as well. On us, sometimes you do have these moves where around the US session price just goes down and then kind of recovers the next morning, almost to the same point where it was during the US session, and then maybe US session starts again and maybe another move down, and then sometimes you get into the cycles of almost 2-3 days in a row with the same type of behavior, which is basically something negative comes up on around maybe US session or either news events or whatever, price drops, but then somehow during the night and during the London session it recovers, and then here we go again. And so that's why I was asking, because maybe in these situations, maybe it's since you actually managed to get into a nice price point, you could maybe even extend. I just realized now that actually around your entry point, it was still that previous trend line, the big trend line, kind of the triangle. Maybe I can just show mine quickly, just to see. So if you remember, like last week, price was kind of stuck within this big level,
and then kind of stuck to it, and then
basically your entry, if you just extended this one, your entry was around here. So basically, it was actually in the moment that it went again above that zone, which is interesting. Who knows if this structure is still valid or not?
I actually just drew the line now. Yeah, crazy. I just noticed now. Wow, this was actually a like retest and then reject.
Exactly. You can even see it on this kind of like the week above retested and it just continued.
I might just be a NAS genius.
No, so sometimes, like if you extend, sometimes when you see the levels being broken, we tend kind of maybe to delete them from our charts, and you think that maybe those levels don't matter anymore. But sometimes if you do start or keep extending them to the right, sometimes you do see then price in the future bouncing them again. Kind of they're going to kind of go up and down eventually, kind of fake out the level, but then eventually there's still opportunities around those levels. It's the same thing with the support resistance. Like if you just draw a horizontal line, you see price still touching the same line several times in the future. But that's just a coincidence of your entry. Let's see what's going to happen.
Anything else? I did definitely not look for that. I did remember that we had the break, but it's not usually something that I bring into my trading. I take knowledge, account of it before the trade, but I don't use it during the trade or like as I'm about to enter.
It's a nice trade though, Richard. It played nicely. It went for more than 1 hour even. And it's still going up, so it was a nice trade. But I feel like right now NAS has gone up like too much for us to get a good New York session. I feel like it's just gonna slow down, but we do have news, so you never know with this pair. Sometimes it just keeps going up, right? Same with gold, it just keeps taking all-time highs. Like even if I have a bearish bias on gold, I can't really trust it because it just keeps going up, right? So I have to take note of as well, just the technicals aren't going to always do it, especially for gold. Like it clearly keeps going up, and obviously you can say it's going up, so I'm going to buy it. That's not how we trade, right? But it is just continuously taking the high, all-time highs. So why would you keep trying to sell it at all-time highs, right? But yeah, it's a nice NASDAQ trade. I've been trading NASDAQ a lot recently as well. And it's been going well. I think the one mistake I've been making though is trying to catch a reversal too much. For example, my charts are showing. Okay, perfect.
Yes. it's
So
showing.
yesterday, I had a trade marked out for sells here. So off this entry area, so this is where I would enter. I'd look for a push lower, and we got that, as you can see. But I didn't really trust it because NASDAQ just tends to push up a lot of times, and it ended up playing. So I feel like I need to trade what I see more with these pairs, rather than just, you know, thinking and then sticking to that. I feel like that is the reason I sit out on trades that win a lot. So that's a mistake I'm still making when I trade NASDAQ and gold, especially on futures, is that I don't trust the trade enough yet because I'm not used to trading it, right? But one of the trades I did take was, let me see. I took a very nice trade yesterday. I got very lucky, to be honest. So I entered off a breaker zone here. Okay. So this is obviously very huge. I didn't enter at the top, whatever. I looked for a very deep entry. So I got my fib out and I tried to get a good entry around. I got an entry around here, and price ended up pushing back up all the way up here and like at the bottom of the tick, and it hit my TP. I made about 400 on the live account, and then it instantly dumped. So I got very lucky yesterday. My entry basically saved me yesterday. It was a very nice trade. I was in it for 2 minutes, but if my entry was a little bit worse, I would have lost that trade. So these pairs are very tricky to me. You know, they just move like in one direction so quickly. Like,
I was about to tell you that if you want like a little bit of like an insight on NAS,
yeah,
you will notice you can go and do the back testing on this. You can go and check. NAS is one of those like assets where it chooses a direction.
Yeah.
And it kind of like sits in that direction, and then it's just on you to like figure out what is the direction first of all, and secondly, generally how long is it going to stay there.
Yeah.
And like Pedro said as well, you will notice that in general, if you have a very hypothetically bullish New York session, there might be a bit of a take back on the follow up London and Tokyo session, where it kind of like takes back a little bit of what it had.
Yeah.
But the follow-up bullish momentum might be a little bit stronger, but the bearish momentum would still try and so it's a very, very slow upward ticking as an example, and then it chooses a direction and it stays in that direction.
Exactly.
It's kind of need to like pick up where to get in, and then it's generally running pretty well.
Yeah.
My trading style is very much I'm a trend following in general, but I also do have reversal patterns that I also like trading as well.
Right.
But in general, NAS does give you quite a few reversal points, and it also does like trending as well. So
yeah, it's a difficult one because, for example, I don't know if my chart is still on, but
it's still on. Yes.
Yeah. Okay. So like this was my entry-ish around here, and it went up to like here and I TP'd for 1 hour. I don't really remember where my stop was. But as you can see, these are 1 minute candles, by the way. I entered 2 minutes later, I hit my TP, and then I was wrong for the rest of the day. Like my direction was completely wrong. It just dumped. So I feel like obviously the trade played. I won the trade, good trade. But if you don't pick the right direction and you don't get that little 1 minute reversal, you're gonna lose most of the trade. So I think I need to figure out more how to find the direction on NASDAQ during the volatile times, because it manipulates so many times, right? You see when it opens, like here for bearish candle, and it just ends up going up. It always does this. It always manipulates and then ends up going higher.
Yeah.
And then yesterday, for example, you'd expect the same, right? Because it's done that for the last how many days. And then it ended up manipulating up a bit during the volatile moments, and then it just dumped continuously. So it's a very tricky pair, you know, because I'm used to trading EU, GU, all these slow pairs. I've had a lot of setups on these pairs as well that have been playing this week, but I just don't have any Forex accounts to trade at the moment. So
yeah, with that's an interesting one, and maybe I think we may be a little bit similar, especially for someone that is more advanced.
yeah,
That has been trading for a while, and all of a sudden wants to start exploring new asset classes. We don't go through again to do back testing on all those classes, on those pairs, right? You just start basically kind of forward testing. Forward testing by analyzing the market, and then it goes in a bit of that indecision that you mentioned before, which is you still kind of don't trust yet the pair or the asset or the type of price action. So you may hesitate a little bit, you may second guess in some opportunities, and then again I think it's just reps, more repetition, more days, and then you eventually are going to start getting kind of more comfort on the way you are trading those assets and trusting yourself. Because again, it's true, our strategy or most strategies may work almost in all asset classes, but each asset class has their own dynamics and price movements, especially in specific times of the day. And NASDAQ is one of those. Like it may go slowly during kind of until the US Open, and all of a sudden it starts to move on top of the volatility that goes with it. Another point is, since you mentioned about bias, do you usually kind of try to do the analysis more in the lower time frame, or kind of you try to zoom out a little bit, try to see where price is in the bigger picture to get the correct bias?
Well, I zoom out. I use a higher time frame. I use my 12-hour bias like always, because I know my strategy works on NASDAQ, but I also use my lower time frame model to trade it. I don't trade my higher time frame model only on it. So it is a little more inconsistent, but I use the higher time frame to get my bias, my targets, and then I'll drop down to the 1 hour. And I'll look for something off the 1 hour.
If you go to, you are on Euro dollar now. If you go to NASDAQ, if you do that now, let's maybe try to predict what you can expect for today.
So for today, honestly, I just have a bullish bias, right? Why? Because we swept this 12-hour low, and we pushed up, and we got the bullish close. Now, before this candle, I'd already be bullish. Okay, so I was already bullish here, but obviously I wasn't awake during Asia because it was about 3 to 4 a.m. And we got a push up. Which my bias played, but now I'm still bullish technically, but I could see a reason for it to sell off too now, right? Why? Because we went up so much right now, and we're kind of just stuck here for the last 3-4 hours, so it could start rejecting here, but I'm obviously going to stick to my technical bias, right? Not the bias of I think it's going to go down because it went up, because that doesn't make sense. So here I'm still bullish. But if I was looking to get into buys, I'd look for a little move down, and then, like for example, a push to the market structure low, sweep that 1 hour low, and then look for a little lower time frame setup for buys, get involved, and see a push back up to these highs, for example, take them out, something like that. So I wouldn't just look for buys here, where we are now.
I mean, right now, in the next 2 minutes or so, we're going to have the unemployment claims. So if that does move the market in your direction,
right,
and then you start seeing either a slowdown, or like you said, on a lower time frame, you start seeing a shift towards the opposite direction, then that's viable. That's a very viable trade. My opinion is also that even though we've broken the lows of like a few days ago, I'm still of the opinion that NAS is still quite, or preparing at least, let's rather say, to be more bullishly going into the rest of the month. I would say. So I'm not a predictive trader. I am a reactive trader. And the way that I see the market is that, yes, we're changing structures on the lower time frame, and it makes sense. On the higher time frame, it's still bullish.
Right.
And then I'm still seeing NASDAQ potentially moving higher. But I'm agreeing with you in the sense that we might need to pull back a little bit, gather up a little bit more confidence in pushing the price higher, because we've had this converging flag pattern basically. So lower high, lower high, lower high, but higher low, higher low, higher low as well on the higher time frame if you go over to the daily. So you had the same concept, but now we're showing that idea of wanting to be more bullish, I think. So I think your bullish bias is correct.
Yeah, thank you. No, we'll see what it brings. If I don't find a trade today, I'm not gonna take it. Obviously, there's no need to force anything. I just definitely I don't like it when, like, you've seen what NASDAQ has done today so far. It's gone up so much. It's done such a huge move already, when usually it tends to happen about in an hour. I know you're open. That's when the usual move happens. So when a asset has moved that much, I don't really want to get involved anymore, right? Because I feel like the move is done. So I don't think I'm gonna trade NASDAQ today. Maybe gold. Maybe gold. I mean, I'm seeing something on gold now. I'm seeing a good buy setup, but like there's also a sell setup against my trade. So I don't want to get involved. Also, we have news now.
Yeah, it's coming out now.
It's doing it now. It's not really done much on gold.
There we go. The news is out. Unemployment claim, not unemployment, the Empire State Manufacturing Index is 7.7. It's come out above forecast, and then the Philly Fed Manufacturing Index has also come out above forecast. We're still just waiting for the last little bit of unemployment claims to play out. On Forex Factory, at least, the information isn't quite out yet. And if we have a look at indices and we go to the DXY, we drop down to the 1 minute for argument's sake, then we can maybe see if there's anything moving. We do have this candle over here already, so it seems as though we've already reacted on the Dixie at least, or at least started to react on the Dixie. So in theory, we should start seeing everything else react as well. NAS is not really reacting all that much right now. On the 1 minute at least, gold has dropped lower. This was Will's trade, by the way.
Oh wow.
Yeah, this was Will's trade that he had. If he stayed in, which I doubt he would have, he probably would have been stopped out now.
Yeah.
Let's look at Euro as an example. Euro is absolutely dropping off on the 1 minute. So yeah, news was probably quite good. So what was the unemployment claim?
It's below 200.
Yeah, below 200. So slightly better than forecast. So yeah, that's why we're seeing this little bit of a move here now. On this is Euro, so just seeing this a little bit over here, looking good. Anyway, guys, I am going to love and leave you guys. I am done for today, I think. I'll see you guys next week, Monday. Yep. Yeah, Monday, new you, that kind of like thing. I'll see everybody next week, Monday. Everybody else in chat, thank you very much for joining us today. If you haven't already, please drop us a like, and we would really appreciate it if you could also subscribe to the channel. We're trying to get to 100,000 subscribers. We're trying to get that silver play button from YouTube, which would be lovely. And then on top of that, we have the Fivers having a 10-year anniversary, let's say. Our 10th birthday in the prop sphere, established in 2016, coming up very soon as well. For everybody that was asking about the futures as well, soon, guys, it's soon. How soon, we don't know yet though, but it's soon. So just a little bit of patience. The futures is coming. It's just a little bit delayed. All right, Pedro and Aaron, you guys have yourself a great day. I'll see you guys next week. Enjoy your weekend. Richard. Don't do anything I can do.
Thank you, Richard. Enjoy.
It's a very short list. It's a very short list, the stuff that I wouldn't do, but still. Don't do.
Take care.
All right, everybody. Cheers. Have a great one. Remy as well. Have a great weekend, my friend. Cheers.
Thank you, Richard. All right. We had one comment here. Sweet Rolf. First of all, welcome to the live stream. Okay, welcome to the community. We are one among 100k, almost 100k followers. So don't forget to subscribe to the channel and keep on following us. We go live from Monday to Thursday, all the way from 9:30 a.m. until 3 p.m. UK time. So it's basically 6 hours of live stream, or 6 hours and a half. So welcome. Now, in terms of strategy, that was your question, right? What do we use, or what strategy do we follow? Eric, what strategy do you follow? Aaron, sorry. Which strategy do you follow?
At the moment, I trade ICT, but it's kind of like I also just use swing highs and swing lows, and just higher time frame targets. So it's a bit of like just pure price action and then mixed up with a bit of ICT. So mine is kind of like hard to explain with one word, but I lean towards ICT. I definitely don't use supply and demand or anything else. I don't know how you trade, Pedro. I think you don't trade ICT, right? You trade patterns.
It's price action as well, naked chart, whatever. Looking for some levels of support resistance. I do use some supply demands, but above all as well, it includes liquidity, as most of these strategies looking for, like always, to look for the sweep, for the liquidity. What is the liquidity in the market, and trying to either target after the liquidity is taken or aim for a target to take the liquidity. So it ends up being a little bit similar, and then of course depending on execution and the way you like actually to enter in the market, it may differ. But and then my style, I'm a counter trend trader. Richard was a trend continuation trader. Aaron, how do you classify yourself? More a counter trend, more a trend forward? What is it?
To be honest, I don't really look at the trend, honestly. So I'd lean towards a reversal trader as well, counter trend. But if the trend is there, I do like it, right? I do add that as a confluence. So if I do see that the dollar has been bullish, for example, and you've been bearish the whole time, then I will like to have a bearish bias. And if I get that, then I'll definitely look for a sell, right? But I don't rely on the trend at all. So I'd lean towards counter trend.
All right. So thank you very much for the question. And guys, you can also just share on the chat if you want us to take a look at a specific asset for the rest 90 minutes of the live stream, and also in anticipation for the US Open. We have here Andre. Andre, I think, is definitely one of our Portuguese followers on the Portuguese live stream. I think Andre, even myself as well, we're looking for shorts all the way through the week on the pound, and actually those shorts actually started from last week. And there you go, we can see that the pound is actually selling off, just the way that the dollar is moving up. We have the pound moving to the downside. I think yesterday we were looking, even when price created this moving here, this is a great manipulation, then price just retested. But the trigger for me, it was actually that price had already broken these lows, showing indication that it wanted to go further down on it. I think it can maybe go all the way to close to 133.10. Andre is mentioning 133.5, which is maybe a little bit higher than that. I could even see it going a little bit more, getting closer to this range in here. Where pound is reacting, again, I think this is a level that I already mentioned the week before. Pound was reacting from a good level, and who knows if this is not actually the beginning for eventually the pound to actually go all the way, maybe back to this 130, okay, maybe all the way close. We'll see. We'll see what kind of behavior or kind of reaction may have around this level, or at least maybe the 50%, which is something that some of you guys use in terms of Fibonacci, which is more or less around this level as well. For me, I actually been waiting a little bit higher, so price never really went to the levels that I wanted. It was just a little bit higher where I was looking for, close to this 136. Price decided to go and to move a little bit before that. But there you go. We have definitely the dollar moving. We have the pound moving down. We have the dollar moving up, which was also a little bit of the bias that we also had shared as well on the live stream. And it's going to be interesting to see how eventually the dollar, first of all, I still like this survivor price is reacting right now, but I think eventually the dollar could even start aiming towards the close to the 100 mark as well. But for now, let's see how price may react. And just to finalize on with the euro index, in my opinion, euro index is also interested in moving to the downside. This has been a little bit more of my target. And with that being said, then I'm expecting also the euro potentially to continue to move to the downside. So this is actually a nice continuation pattern. Okay, it's kind of a quasi-modo as a continuation, not as a reversal setup, where you kind of create a little bit of structure, you start breaking some lows, you create a fake out, and then price just continues. It's a way to create liquidity in the middle of a range when you are not really reacting from a previous range, neither up or down. You are indeed creating your range, manipulating people because you start breaking highs, people start thinking about longs, and all of a sudden price actually just continues on the same direction, which is basically now, do I look at it, I think price can go eventually close to these levels in here, if not even further down. So I could even anticipate more bearishness on the euro dollar as well. Could go there. There you go. So you mentioned that you are not looking at. Are you still looking at FX, or you just literally don't have an account to trade FX, so you're just focused on
no,
NASDAQ?
I do still look at FX 100%. I still trade Forex mainly. My point was just that my live accounts have a payout ready, so I don't want to trade them.
Okay.
I don't wait to request them, and then I don't really have a challenge right now to trade.
Okay.
So yeah, that's why really. But a lot of trades played for me, so it's unfortunate that I don't have an account. But we got to pay out, you know. We're just gonna wait, test it, and meanwhile trade our futures and see how it goes, right? But these sells played very nicely today, man. I had a
your chart now. Explain to us what we're looking for.
So I was looking for a sell off this morning actually, off this zone. I would just enter off it and just look for a push to this low here.
Yeah.
Because it's a 12-hour low, so those are my targets, right? And as you can see, played so nicely. But yeah, I don't have anything to trade on, so how am I gonna take it, right? But technically, my bias was bearish because of this close here. It was a bearish candle. I know it's nothing special. But then let's go to the dollar. We also had a bullish bias still, and I want to see this high get taken at least, which we just did. So if I was in a trade, I'd probably just go break even or just take profit. I mean, I am a one-to-one trader normally, so I would already have hit TP here, unless I wanted to go for more, which I don't really know. I'm not in the trade, so I can't say. But on the higher time frame, I am a one-to-one trader. With futures, I'm trading a lower time frame model, so I will look for more than 1 hour. I'll look for a good amount, like 1 to 2, 1 to 3s. And obviously,
how exactly would you have entered? Like if you had traded this short opportunity, where would be your entry? On the pound.
Well, it would probably just be either. I mean, it's quite a big stop loss, so I'd look for a deeper entry. So if I was to look for a deeper entry on this, I probably wouldn't have even been in this trade right now, right? So maybe I would have said I'll enter off. I like to use my fib. I enter off this green box here, like equilibrium they call it. I'm not really into it much. It's just I like to look for a better entry, right? But it is a higher time frame, so you could consider taking it at the initial area, which is just here. And the stop is about 26 pips. That's not bad for my higher time frame trading. Like I would do this, especially because I have a clear target, right?
Yes.
When I have a clear target, I'll just take it anyway. If my target brings me a 1 hour at least, I'll take it, because then all I need is my target to hit, and I'll hit TP for my 1 hour. So I don't really care about my entry then. But if I don't have a clear target, I definitely want to get a better entry, which if I was to look for a better entry here, I would not have been in. So technically, I was in at the start of the box, down here at this low.
So you wait for price to break. So price is retracing. You wait for price to break down again. You wait for the candle to close. Like, what is the process?
Okay. So here I'll wait for a sweep of a swing high.
Okay.
As you can see, this high swept this swing high. And then this is the last low that formed, the last swing low that formed before the sweep. Now I would look for a candle to break below it, which we got here. Obviously, I need the candle to close, right? I don't need it to show me going past it and then end up closing differently. So I need this candle to close below it, which we got as well. And then I will just mark my sweep to my low, and that is my entry area. And then I'll just wait for a tag back in and enter. That's it.
Okay, so simple as that. Okay, that's good. Especially if you do have that then 12-hour target that you're aiming for.
Yeah, exactly. That's what made this trade, for example, high probability. I like to have clear targets. When I have a clear target, my trades tend to play out. So for example, here I had a weak candle close. It's not really clear, but because we have a nice target, I'd still lean towards selling off, right? I'd still like these sells. So yeah, it's all these confluences that you add up, you know, you got to weigh them in a bit and see if you want to take the risk, right? So yeah, it's kind of, that's how I trade.
Yeah, I like that. I like that you mentioned that when you do have a clear target, kind of you feel that there's a high probability of your trade conclude. Because there was one time last year, I think I brought the topic of what is more important, kind of, is it the entry or the target? Okay, many people focus that the entry is the most important, but for you, but based on your comment, it looks like when you do have a clear target, you feel more confident on the trade, and the entry, as you mentioned, doesn't even need to go as high. We just literally find a place to place the entry, and that's it. Which is interesting.
I don't know how you feel about that. I assume you also.
I like the target. My target is, because for me target is because you could have a beautiful, for example, on the example that you gave out the trade on NASDAQ, your entry actually math, because actually you find a really precise entry. That's why you still managed to have a winning trade, even though price then went completely against you. But if you're actually looking for shorts, even with a bad entry, there is a high probability then you're actually looking, or the trade will play out regardless, because then it goes into the being moving in your direction. But yeah, for me, target is more important, and then comes the entry, because I need spice. I trade a lot. I trade based on spice. Is kind of where do I think that price still has ability to go or to move towards to, and if I don't see the spice, then I don't trade it.
Yeah, I definitely agree with that. The thing is as well, you have to know how you want to trade which account, right? So for my live Forex accounts, I will just look for my higher time frame plays. I'll look for I won't look for many trades on my live accounts, because all I want is a payout of 1 to 3%, and just have my trade win and wait for the payout, and then go again, right? So on my Forex live accounts, I'll trade like twice a month, you know? And if I want to take 2 trades a month, they need to be good, right? I can't be trading, I can't be looking for bad trades if I'm going to trade twice. So on the live accounts, you have to be like this. That's how you get consistent payouts. But on my challenges, I will take risks. I will look for a trade that is very aggressive. I will look for that extra move. I will look for that weird target that maybe shouldn't get hit, right? Because I'm on the challenge phase, right? But on the live account, you want to compound, right? You want to make payouts consistently. So what you do there is you just target a payout, get it, and repeat it. And by the way you do that is by getting the right trades. Now, obviously, you're going to lose those trades sometimes. But if you don't take the right trades on live accounts, you're not going to get consistent payouts. So my approach is very slow on live accounts, and then on challenges, I'm very aggressive.
Yeah, that's interesting, but it's good also to have the self-awareness that you are doing that.
Yeah.
Because sometimes the mistake is that the trader brings the same behavior that they are doing on the challenges towards the funded account, and then there's the consistency, and yes, they do pass the challenges and they get funded, but then there is no consistency on getting payouts, and then they keep repeating the same process all the time. Which is not the best. Someone is asking about the dollar yen. Just before I go into dollar yen, because Abdullah is kind of one of our dollar yen specialists. So Abdullah, I don't know if you are still watching us or not, but if you are, I would love to know your take on dollar yen. What are you looking for? What is your bias? Are we ready to sell off or not? Or price is still going to move to the upside? And also your take on potential BOG intervention, or what's going on in Japan. So yes, I'm just going to wait a couple of seconds or minutes until Abdullah potentially replies to our comment, and then we can reply to the comment that someone asked about dollar yen, which was, one second, where am I? Okay, I need to go all the way down. It was Benedict that asked about dollar yen. So just give us a second. I will definitely analyze dollar yen with you, because it's a pair that I'm also interested. Maybe we can go. Do you want to analyze euro dollar? I think someone also Nick, I think also asked euro dollar.
I just want to go over real quick. I just want to show you guys what just happened, right? So I was looking for a potential buy on gold earlier, right? I told Richard, I don't know if you were here. Now I didn't take it. Why? because we have a 1 hour setup for sells against me. The 12-hour candle closed bearish, but this is on my futures account, right? It's on my live account. Now, I just avoided a loss. You're not gonna see it yet, but on the futures chart, we've already tagged this low, so my stop loss would have been hit. Now, why did I not take this trade? It's because I have so many technicals against me, right? So it is not worth taking a risky trade on a live account. And that is what I've just done. I didn't take it. Why? Because I had a setup against me. So it can go up, it can go down technically. So why would I trade, right? So I just saved a loss literally by just not doing anything. So I just want to show you guys that if you have the skill of doing nothing when you shouldn't do anything, you're going to get very consistent at trading. If I just took this trade, I would have risked about 500 on my live account there. I would only be up 300 now instead of 800. So obviously, I need 2 more profitable days on that account. I don't know if you know how futures prop firms work, Pedro. I assume you do. But
not entirely. I think I'm going to get more. Going to learn more about it once the Fiverr also reviews them.
Yeah. It's just you need like 5 profitable days of 150 USD. So you need to be up 150 for 5 days in a row, and then you can request your payout. So I need 2 more of those days, right? But if I was to enter this trade, I would not have seen an ounce of profit. So I think it's important that people know how to not trade also, you know? Everyone's always talking about how to trade, but if you know how not to trade, you're gonna see profitability, honestly.
That goes, just to conclude on that one, that goes again into another topic that I also kind of asked last year.
Yeah.
Which was between kind of an offensive trader versus a defensive trader. Okay, so an offensive is basically someone that is more aggressive or more willing to always look for the next opportunity. Yeah. Maybe think about football in football terms. Maybe have kind of a Guardiola or Mourinho type of different styles.
Yeah.
And then a defensive trader is someone that's maybe a little bit more conservative or kind of looks at exactly the scenario that you mentioned on gold, and is going to be able to, no, I don't think this is the right moment for me to kind of attack or kind of execute. Let me wait a little bit more until maybe better conditions are going to play to look at kind of to show before I take the trades. Basically, someone that likes to maybe filter out a little bit more the trades, be more selective on what is or not they are doing, maybe focus more a little bit on quality and not so much on quantity. But on the other side as well, sometimes it can be as a weakness, because maybe sometimes the trader also may needs to kind of go harder or kind of put more allocate more risk or something like that, but maybe the traders still are a little bit conservative. So again, regardless if you are more towards an offensive or defensive trader, there is strengths and weaknesses in both scenarios, and there's something that you can evolve on both scenarios as well. But that's a good point. Like when not to do anything. It's a really important point in trading. As well. Yes, I think there was just to concluding here on GN, about the exit exactly. But then you have a comment from Afsi, which was Afki, when you mentioned that you are waiting for the kind of close, is which time frame are you looking for?
That was the 1 hour that we were on.
Okay,
that was the 1 hour. Because I trade the higher time frame more. On my live accounts especially, so I'd wait for a whole hour for the candle to close, right? So you can just do nothing. Like you said, you don't like being on the charts a lot, right, Pedro?
I'm trying to remove it.
You're trying to minimize it, right?
Exactly.
The way I've managed to do that is literally because of the way I trade. Because trading is like, I have to wait, right? I have to wait for the candle close. So if there's an hour left and I need to wait until the candle closes as a sweep or a break, what's the point of staring at it, right? Like there's nothing you can do. So that's what I really like about my trading, is that it kind of helps me with that. I don't know about you. What time frame do you trade usually, Pedro? When you look for entries?
That's maybe the problem a little bit, is because I do like to look to do my analysis on a higher time frame and to identify the levels that I'm interested on a higher time frame. But then I do go into the lower time frames to look for price action, to confirmation, to see actually that if the buyers or sellers are losing control basically, and if there is actually kind of a shift on who's in control eventually for me to take the trade.
Yeah.
That's why I'm not just waiting for the hourly candle to close, because I don't really trade based on hourly or 50 minutes. I don't even trade based on closing of the candles.
Right.
I trade based more on breaks of structure to give me the trigger that this is kind of a break of structure. Maybe I want to take a trade in there. So that's where what I'm going to try to do. What I'm doing already is literally to place alerts around those levels, and when price gets there, then I need to kind of shift my mindset to focus on the opportunity. On one point, before you maybe go into the euro dollar that someone asked, and someone else is asking about, kind of mentioning some levels on the pound trade, for example, that you mentioned you were just looking for the for that low, or the 12 hours low.
Yeah.
Is there any other chance where you could actually try to extend your target further than just closing it?
Holding
it a little bit more.
I would leave it if I am on an account that is not that important to me. Meaning that if it's not a live 50k, for example, I won't want to get greedy, right? I'll take my 2R. But if I'm on a challenge and my target is 10% and I'm up 4% at like floating 4%, why not just go break even and let it go a bit more, right? Especially after a news event where the direction is like at the moment is quite clear that it's going to keep like dumping. I mean, now it's gone down so much, so you never know, right? But the point is, like, it hit the target and it still dumped about 25 pips. So technically I would probably just go break even and just hold it for an extra amount. I'd done this before, so I was in a GU buy like a month ago, right? On 3 accounts. Okay, so one was on a challenge, one, and the 2 other accounts were live accounts. Okay, now one of the live accounts was I don't know what size it was smaller size than my 50k live, and I was in on my 50k live as well. Now on my 50k live, if I hit a 1-to-1, I closed the trade. Now on the challenge and the other live account, I went break even and I targeted a 2.5R and it hit my TP.
Okay.
Now why did I do that? Because if I don't hit TP on my live account of that small, I don't really mind, because I already made how much, I don't remember how much it was, but I already hit TP on my 50k live, so I've already got a good payout secured. And the challenge is a challenge, right? So if it hits stop loss or TP, I'm not going to get paid regardless if it hits TP. So why not try and pass it quicker, right? To get to that stage where I can get payouts. So if those hit break even, I'm fine. But if my 50k was to come back down because I got greedy and not get me a payout, I'll be a little annoyed, I'll get frustrated, because according to my rules, I should have just taken the payout, right? On at least one account. So that's how I manage my trading.
Okay, so interesting, because my initial question was towards something technical in terms of the charts. If there is something that you could see that, okay, there's maybe more potential, maybe we can identify that the pound is literally now in a bearish trend. I think it just broke for the second time a low, so it's kind of starting to make lower lows and kind of lower highs. So that was a little bit more of my question, but the point that you raised is also quite interesting, which is you have maybe different accounts. One of them is going to be the conservative one, and you may make sure that you get that target and payouts on that one, and maybe you can have another account. In this case it was a test, but maybe eventually even as a funded account where you can actually play a little bit more into, okay, let's just try to go and maximize more the profits from this trade in case actually goes, like, so basically kind of diversify a little bit your approach towards the accounts, which it ends up being interesting. That this is not all the same, and maybe in some good months that one that you actually extended a little bit more is going to give you maybe a better payout on that specific month. But at least you have your consistent approach, consistent trade that is always giving you more or less the same performance on a monthly basis.
That's kind of how I approach it. There's not much technicality to it in that case, because once my target is hit, I shouldn't look for a bigger move. Technically, I should just TP there, right?
And you place your target underneath the low, correct, or just by the low?
Just at the low. Sometimes I'll put it a little above the low as well.
Oh, okay. Because again, that's the thing with many ICT traders and everything else, or SMC traders, whatever, is that they like to actually place the target just literally underneath the low or slightly above where the liquidity is in theory. But sometimes you end up with a double top or a double bottom, and price never really managed to even take the low or the high, and then eventually comes back out the way to break even. On another circumstance, when price does indeed take the low or the high, then it can actually rally much more, and now you are closing your trade way too early, right? Because in this circumstance, yes, price broke the low and kind of reversed. Okay, so it was maybe a good thing to maybe close your trade straight away after maybe it takes it. But there are maybe some other opportunities where you can actually look for price to actually just extend and continue.
Yeah.
Now, why was this maybe the first time that price actually take the low and reverse? Because it's maybe the first important low that price is taking. So there's maybe a lot of liquidity underneath these lows, because price was still in a swing in here. Finally break a proper low, and maybe usually after that low, price tends to retrace. That's how eventually quasi-models are formed as well. Okay, but what I'm looking usually is that now when price doesn't indeed manage to break this one, there's usually more momentum in here, and now price maybe end up filling whatever space is available all the way through. So yes, maybe after taking this one, just close the trade whatever it is. Maybe you can even try to find some, because at this point there's still people looking for longs as well. Sweep the low, let's try to look for longs, and maybe people are still looking at this momentum. Okay, many are still thinking bullish at this point, but at this point, because it's already kind of the second time that it breaks, it's already retraced a little bit, maybe even touched the 50%, I'm not really sure, but maybe actually touched the 50% retracement, which is another level that many people look at. It eventually crossed the 50%. Now looks like more of a continuation. Another point is maybe you can look at the correlation in the market. Okay, yes, we can definitely see that the dollar is quite strong. We can see also that the euro is also falling. Most likely is also moving to the downside. Maybe we can even look at maybe dollar yen is moving up. So you can see that is actually kind of a correlation across main assets at this point. And maybe this is not just a one-off or one isolated pair moving like this. No, it's actually a dollar move, and maybe this is actually momentum, and there's space for price to move longer. And it's how we eventually can the same entry, some kind of analysis, but now you can maybe try to take advantage of a longer or
more of a target, right? More of a move, right?
More of a bigger target.
No, I definitely get that. I mean, sometimes you do just have to look for a bigger move. You know, if you have good weeks, you need to capitalize off it, right? To cover for the bad weeks. So it's definitely a good idea to try and maximize your profits when you can, right? In this situation, for example, with that trade that I could have potentially taken, it was definitely a good idea, right? But sometimes, you know, when it doesn't play out, you do get frustrated. So that's why I always like to go break even if I do look for extra move. Because then there's not much risk on the table, right?
Yeah, break even would be, you can even take some portion and then just let the rest run.
Yeah, exactly.
In this particular case. Because what usually tends to happen as well, like, so again, this is a little bit just a theory and price action. So usually we have, whenever you create a high, and then eventually price starts, not get this terrible high, eventually you create a high, and then we eventually, when price starts moving, usually it's kind of a fair value gap. Okay, that's eventually in the future it's going to be picked up. Maybe fair value gap is here now, whatever. At this point, at least based on this price action, we haven't really left any fair value gap open. The price moved, okay. But this move from today may end up being that a fair value gap for the future. Maybe price now is going to retrace a little bit eventually, not really this structure, and just follow through. And now we have more momentum that initiates a potential new trend. Just something similar to what you had in here.
Right.
And you can find those some other like across many examples. Okay, for example, this one as well, where price just creates this big momentum, retraces, never really goes out the way, and kind of leaves fair value gap, with then price in the future kind of goes there to react from. So if again, this is kind of already a reverse engineer of a potential move that can happen in the future. So if you're already thinking that usually when price reverses and if this is the beginning of the cycle, in theory there's a fair value gap happening somewhere around though, kind of between the top and the next big phase of the move. And if that fair value gap hasn't happened yet, eventually it's going to happen. And this looks like a potential scenario for that, which means that maybe price can even just retrace a little bit, maybe just touch this level and not really go all the way there,
re-hit it,
and then just continue.
Yeah, I like that analysis. Honestly, that's kind of how I look at it as well, especially on the high time frame. I like to look for a fair value gap to form, get a tag in and go back down, and it plays nicely a lot of times when everything is in line, right? So it's definitely a good way to maximize your profits, honestly. What do you target, Pedro? What's your like usual risk to reward? Do you just ignore risk to reward and just go for your target?
I look at least for like 2.5 minimum. Like, so when I mentioned that I look for that space, I like at least to see like a 2.5 risk reward. But then I usually tend to I can take partials. Yeah. In this situation, I would have already maybe take some partials and then just let the
rest run. Right.
Just let the trade run. If I don't really see that there is much space available, I might just close the trade. But honestly, the move on the pound, it looks like that maybe we are kind of getting into this cycle. Again, I was looking for price to go a little bit higher in here, but a little bit more of a proper Quasimodo price getting closer to the left shoulder. Never really got there. It was a good manipulation here. I was looking a little bit higher. But that would be the case, and then I'll just let the rest run, and sometimes goes into 7, 5, whatever, 10, a little bit more. It depends on the cycle where we are. Because in here, honestly, again, it depends. We'll see how price eventually may react from here. But it could have the potential that price could start aiming all the way down. Because if you're actually looking then in the bigger picture on the pound, price already kind of broke this structure. We have all this that was already manipulated in there. It's basically close where price was. This is a good compression in here.
Yeah.
The price moved. Where you start literally breaking. This could actually end up being a move that could push price. Who knows? At least maybe to that level again. Take these lows, at least get into this fair value gap that you have in there. I wouldn't be surprised if price ends up going all the way.
I mean, I definitely think it can keep pushing down right now. But it's moved. I mean, today's market has been crazy, man. What is this? What a move. I mean, GU has moved down how many pips now? About 80 pips almost. EU has gone down like 50 pips. 50-ish pips. We're getting very good price action, I feel like, this start of the year. I like it, honestly. The yen pairs have been kind of bad in my opinion. They haven't really been doing much. They've just been going up. But I'm really liking EU and GU recently. They're moving very nicely. So hopefully we keep getting moves like this, right? I mean, we've had so many days where it just, especially in 2025, it was very dry, you know? A lot of days were just dry. Like, you wouldn't really get many pips a day, right? It'll be like always in between 20 to 30, like, and sometimes like on my higher time frame trades, it takes longer, right? It takes very long to sit in a trade on a higher time frame. Like, it can take 7 hours. So when you don't get that move and market closes and you don't want to hold a trade at night because of the spreads, you know, it's just, I want to keep seeing this, man. I want to keep seeing this price action.
Yeah, it's finally moving a little bit. We'll see. Unfortunately, for example, on the euro, the price action happened, or at least the top happened around Christmas, like on 24th, 25th, and I was not trading in that moment.
Yeah, neither. Honestly, I feel like we all kind of just forgot about trading for 2 weeks, right?
Yeah, that's basically what I did as well.
Yeah.
There's an interesting question here from DJ. Pedro, do you think that monthly fair value gap tap on the EU? Okay, maybe we can do the analysis and then I'll look at mine as well.
Yeah, I'll have a look real quick. I'll do the analysis and then I have to go. Okay, Pedro, I'm gonna have to leave you.
No problem.
Let me have a look. Do you think that monthly fair value gap tap on EU followed by a monthly bearish order block was the last straw forwards? I assume he's talking about this fair value gap and then this order block. Okay. Honestly, I don't really think this has anything to do with why price went down personally. I don't know if I'm marking out the wrong confluences. If I am, excuse me. But I don't think a monthly fair value gap and a monthly order block is why price went down today. You know, so I think there's a lot more to it and more fundamentals than just monthly technicals. You know, I mean, I personally don't really care about what the monthly does if I'm day trading, right? I know everyone has their different trading styles, but I don't really agree with that myself. I think you're reaching a bit too far there, especially if you are a day trader, right? I mean, what's the monthly gonna say to you? You know, we don't want to sit in trades for 6 months to make 1% on a challenge, right? So it's kind of, I personally don't think the monthly is important. But if you are like a swing trader that trades once a year and holds a trade for 6 months, then it could help you. But I don't think it has any relevance, man. Most I do is look for the weekly, right? Look for like a week sweep of a nice target. For example, here we swept it and then we never really went back up there. But I think looking for monthly order blocks from 2021 and stuff isn't really going to help you. So yeah, I'm going to leave it at that now, Pedro. I'm going to have to leave you. It's very nice talking to you again. I hope you've had a great year so far. And I hope you catch some good trades.
Thank you, man. Likewise, for sure. And yeah, as soon as that payout comes, for sure we're going to carry on with more.
Yes, man. Yes, we're going to get some more, right, Pedro? All right. Have a good day, guys. Take care. See you again, man. Peace.
Thank you, man. Bye-bye. All right. So how do we do this? Okay. I hope it's everything okay. Yeah, so answering your question, and guys, keep on sharing your charts with me so we can do more analysis as well. So, do you think that monthly fair value gap tap on you followed by a monthly bearish order block was the last straw? Yeah, to be honest, we don't really look much at the monthly candle, at the monthly time frame. But okay, maybe you saw price maybe going a little bit above this level. Price is actually looking at the monthly time frame. Price is literally getting close to the lows from December, so that's going to be an interesting level to see how price actually is going to react from here. It's basically the beginning of December, so let's see if price does manage to go below this structure and potentially maybe continue to the downside or not. So that's actually, thank you for making me look at the daily, at the monthly time frame. But then you mentioned also the daily, because I think you're mentioning about this daily order block, if I'm not mistaken. Maybe this is the way you look at the order blocks. This one for me was not that relevant anymore, and that's something that we need to at least myself, I need to be aware of the order blocks or demand zones or supply levels that are created in the middle. Okay, so basically, if you're looking at the extremes of this move, and price is now leaving an order block in the middle. So what will be kind of the extreme in here? It will be this one, which is basically the last one that created this top, and then maybe all the way back in here. Okay, maybe all the way to the lows. Anything in between, it can be a level where price just react a little bit before it just continues to move to the downside. What would be the situation where maybe this order block would have been quite valid to look for a trade? Maybe if price hasn't really reacted or hadn't really moved all the way until these tops in here. Okay, for example, if price had already moved a little bit in here, retraced, the order block is already created, and now you look for a continuation setup. This maybe would have been a much better long opportunity to trade from this order block, opposite to the price already making all the way this move to the upside, coming all the way back to the stops, which could be a valid target for anyone that was long at around this level. And from here, maybe we started a new bearish cycle. So if this order block is still fresh, we may expect some reaction, and we had that initial reaction even from this week, if not mistaken, and then a little bit deeper into this level. But as you can see, price never really managed to break anything relevant to the upside. Basically, it just retraced, came back all the way to the previous structure, and it just continues to move to the downside. And that's basically the opportunity. So what I wanted also to mention is, if you're about to trade this order box in the middle, I'll try to trade them the first time that price is touching them, and not exactly the second time. Okay, so for example, maybe today, let's just remove some of these drawings, sorry guys. For example, maybe today you would have still expect maybe price to react from this level, which is maybe another order block potentially on the 4-hour time frame. I wouldn't be that eager to look for a trade maybe from this level, maybe because these lows in here are still reacting from that level, and that was already the first time touch. Price retraced, came back into this previous level, and now is basically just falling through. So I'll be quite cautious trying to trade now from this level. This is not exactly a relevant low for me. Now I know that many people just look at the charts like this, so basically they are looking at the most recent price action, and they don't tend to look left. That's why for them they see this, maybe they saw the price breaking this structure and they think that price is ready to move to the upside, but that's not exactly the way I look at it. This is sometimes one way to potentially filter some of these less quality levels that it still looks like a good order block, but maybe not as good as some other potential levels that either are being touched for the first time or they are maybe at the extremes of the zones. Yeah, so we'll see what will happen now. Again, we'll see. As we just noticed, this is basically the beginning of December's month, so we'll see price has the power to actually go below the December candle. So for that I actually say thank you for forcing me to look at the monthly, which is usually something that I don't tend to do. So I'm actually curious to see if there's enough strength or weakness on the euro to go below this level. Otherwise maybe you can actually find some potential buying pressure now that we also took this liquidity from below these lows. So that's going to be an interesting one, and for some reason I have this rectangle in here, which I don't remember why, but I do have this rectangle marked in here. Yeah, I have no idea why I had that. Yeah, maybe there's still a level of quasi-mod of the month zone that was still valid at around that level. But yeah, I hope that helped, DJ. Sorry, yeah, last potentials. Yeah, that for me, for example, the bearish or the sellers, they kind of started to be in control once we break below this low. Okay, this for me would be potentially based on where price was reacting. That was already a good level potential to start looking for shorts. Maybe below this level we can look for price to fill this space. Below this level now we can look for price to fill this space in there. But yeah, let's see now. Okay, now the reality is that price now has moved quite a lot to the downside. Again, maybe you are already reacting from this 50 or 6-8%. Yeah, that's where personally for me it becomes a bit tricky, because I'm not a trend continuation trader, and at this point I still don't see any relevant reversal setup to try to aim for a long neither. So I'll be just waiting on the situation on the euro, and most likely on the dollar. I'll be just waiting to see what may happen. Oh, Rafael, long time, man. Happy New Year. Happy 2023 Zanov, my friend. So glad to see you here. I hope you are back with trading. I know that you kind of paused for a second. I hope you are back, or at least your life kind of allows you to come back into trading. You are kind of hitting those 10K challenges, so I hope you definitely are back. But most importantly, Happy New Year. I hope everything goes well, and 2026 is it's a great year for all of us. All right, this is the skill of trader, is to know when the market is moving and is liquidity. That's true. That's exactly true. Now, it's good to have some kind of rules around that, okay? Because otherwise it's going to be always subjective, and there's going to be a lot of frustration, because maybe you are going to feel that the days that you think that you are going to hold your trades for longer, the trade is not going to go like that, and price just reverses. And the days that you close the trade, price actually tends to move. Like, I think everyone has been on that position. Myself, I've been definitely on those positions where anytime you close a trade, price just continues to move, and when I don't close the trade, price then reverses all the way. But yeah, that's why it's important to try to either use some kind of price action analysis to help us to see where there is a likelihood that maybe price can move further or not, or also looking at the fundamentals. Maybe there's news that could create that volatility and that liquidity to push price in that direction. But yeah. All right. Pedro, I'm back now, mixing full-time work with trading. How is the experience going, Rafa? Rafael, how is the experience? Any new adjustments that you did on your approach, on your routine? Tell us, let us know. Even on your trading as well. Kind of, did you change slightly the time frame? Are you still looking at the same thing? I know that you used to trade the London Open quite a lot. Let us know. Any other assets, guys? What you guys are looking at? So let's look at a little bit at US indices, okay? Because as you guys recall, at least anyone that has been watching the live stream while I was when I'm here, I've been trying to look for sales on the NASDAQ, okay? And I've been always looking a little bit closer to the 26 mark, kind of a little bit above this level, definitely above this top. So we did have that move 2 days ago with the CPI, if not mistaken. Unfortunately, I didn't really manage to catch anything, and I'm still curious to see how price may eventually react from here. Now, yesterday, price did manage to break some... price did manage to break some lows. However, it ended up still reacting from what could have been still a good level that could still push price to the upside. So I may wait to see how price may react. Actually, still maybe take this top, or maybe some kind of price action around here. So we'll see. For sure, taking these stops. That's one thing that I'll be looking definitely for price to do. And then we'll see how price move around this level. But to be honest, I still prefer to see price going slightly above these highs, and maybe a little bit closer into this kind of supply level around here. I think price reacted from this level. I would love to see price maybe going a little bit higher into the next one. So yeah, that's where I have my alert as well. So we'll see. It can also happen, of course. Maybe price can bounce, can react, then can maybe just react from this level, and maybe can continue to the upside if that's the idea. But yeah, again, I'm going to continue to look a little bit more for shorts. That's my tendency, what I usually look for. It's good to see that price show some bearishness yesterday. Let me just take a look at VIX, because I'm curious the way maybe from around this level VIX could react as well. VIX end up taking the top, which is interesting. Yeah, let's see if the VIX does something like this. If the VIX does something like this, then they're going to have another bearish eventually we're going to have more selling pressure on the US indices. And then we have also S&P. S&P end up taking slightly these lows. Okay, maybe haven't really gotten into here. Maybe that's a fair value gap for some of you. Do I see it left a little bit of space, which is nice. And we'll see also price may react from around this level. Maybe it can even take a new high, and then maybe can continue to have some selling pressure as well. Definitely a little bit more bullish than the NASDAQ with new all-time highs. So yeah, let me know, guys, what you are looking at US indices. Does anyone trade US indices in the year? And what is your bias for NASDAQ, S&P, or maybe even the Dow as well? Yeah, Dow came all the way back, respected now this low, and I want to see if price does manage to break below it as well, kind of go a little bit more to the downside to start opening space to go down, and that can start shifting a little bit more into bearish around this level. But then you still have this one around here. The Dow that is really close to the 50,000 mark, which is going to be crazy, to be honest. DAX was another one. DAX. Yeah, DAX managed to break it a little bit. I'm still curious. I'm actually going to push now this one a little bit more to downside. I'm curious to see if there is a chance that DAX could also continue to drop as well. Yeah, or if it wants, you can maybe just eventually take this liquidity one more time. Yeah, I would like to see actually at this point, I would like to see maybe a new low being created. Something like this would be a little bit more confident for me to short, or eventually take this and then short it even more to go towards this maybe 25 or around this level. But I would like to see a new low being created. I don't like to see this double bottom. It makes it a bit bullish, and price may actually end up taking new highs. yeah, this one, nothing going on there. Okay. I think working and trading is way much better for men. For me, it's maybe for me now than before when I was full-time trading. It's a relief on my psychology, and I can hold trades, and I can hold my trades better. Rafa, that's a really good statement, and it's something that many should hear. Okay, many should pay attention to the comment that you just did. Sometimes we do have the ambition and the dream to become full-time traders as soon as possible. Okay, it can be for different or several reasons. Maybe we hate the job that we are doing. Maybe we think that by having the freedom of trading full-time 24 hours per day is going to give us more income, more income from trading, which may not be the case, because also when you do have more time, you also, as human, we do tend to do more mistakes. And then while you have a part-time or while you are working at the same time that you are trading, it's exactly as you mentioned. You feel less pressure, okay? And all of a sudden, you stop having that urgency to make money from trading, and because actually you remove that urgency to make money from trading, you actually somehow, that's how the universe works with trading, you actually potentially start making more money from trading because you don't need it anymore. Okay, so when we do need a lot something regarding trading, that's usually when you do make more mistakes. We have more pressures, we have FOMO, we have revenge trading, and any loss that we take, it has a much higher weight on our shoulders, opposite to the opposite scenario where you may have another source of income to trade, or kind of to at least pay your bills. At least you know that you are safe on that aspect, and everything else is a plus from trading. Even yesterday during the live stream on the Portuguese channel, by the way, if you guys still don't follow the Portuguese channel, I would recommend, even if you don't speak Portuguese, you can also give us a subscribe, and I'll appreciate a lot. We are on the road to 5,000 subs, okay, and by the end of the year, at least we want to reach 10,000. But during the live stream yesterday in the Portuguese community, basically the session was about the different phases of a journey of a trader. Okay, maybe we end up calling it phase 1, phase 2, phase 3, phase 4, but in reality, initially we kind of call it based on the years of experience. For example, someone that started trading across 0 to 1 year. Okay, so basically less than 1 year into trading, then basically 1 to 2 years, and then maybe 2 to 5, and then 5 plus. Okay, and basically what each one of these traders, depending on the trajectory, and of course it can vary the level of experience that the trader has, but what should this trader be focusing on their journey? Okay, and sometimes the mistake that many do is, for example, this trader starts focusing on what this trader should be working on, and is trying to run before even understands how to walk, which is a big mistake, and then kind of it keeps falling without really making any proper progress in this case. Okay, and then also kind of focus on basically we had a conversation to see what each one of these traders should be doing, mistakes that they should avoid, struggles that they'll be facing on each one of these journeys, on each of these phases, and so on and so forth. And one of the main things is that definitely these traders, they should be working full-time. Okay, these guys, they should be working full-time, and they should be trading part-time. Okay, basically the full-time salary should be funding their learning into trading. Okay, that's important. If you try to go full-time way too quickly, especially in this phase, we are still not, maybe we haven't even developed your edge yet, and everything that you need to actually eventually be consistent into the market. But yeah. All right, where were we? That NAS move a lot, Davey. Huge opportunity in day trading. Yeah, that's an interesting thing as well. Like, so for example, when you are moving, when you are literally you are a few seconds away from the opening, which is 45 seconds, it's important to understand also a little bit the cycles of the move. of the market, basically. Okay, sometimes the cycles intraday is going to be like this. Okay, it's going to be just a move from here to here to here to here to here, but then all of a sudden, so basically this size, but all of a sudden this move starts expanding. Okay, and all of a sudden it keeps expanding, and all of a sudden you have these corrections. Okay, so we need to understand that sometimes this is the only opportunity we have, then sometimes it starts expanding like this, and all of a sudden you have a bigger, much bigger move to actually trade from. And this is why sometimes when you can adjust even the targets that you're looking for, and so on. Like if you continue to look for big targets within this level, maybe you are having break-evens or having losses. In this case, if you are just looking for a small target, you are going to feel that you didn't really manage to capitalize in the bigger move. Okay, so basically is what we have in here. So understanding those different phases as well can be important on the way you adjust your own setup. This is basically where we are now. Like it was moves like this, and all of a sudden we have it's kind of a band. Like when you it's short, but if you extend it too much, then kind of the moves are going to be reciprocal into that. If gold, okay, let's take a look at gold. If gold holds below 4602 or flexible bearish, I still keep. Okay, if gold holds below, okay, below 4602. Okay, you are still going to think about bearish. Alvin, is that your take? Is that basically, well, this point is already 46, so it's already higher. But basically, I think you're mentioning price kind of stays below this level. We are still going to be thinking about a bearish move. Basically, gold end up respecting the lows again. Like this is a good example. Okay, there is these expansions, and now there is this. Okay, so there you go. If someone is trying to always short, expecting maybe price is going to break below these levels, or maybe going long, expecting maybe price is going to just break and continue, maybe at this point it's a bit tricky. Okay, maybe try to trade what you see in the market right now, which is basically a ranging market on gold. When it expands and when it breaks, then you can adapt to the next move. But for now, this is the expansion. Maybe you're going to just take liquidity from the stops eventually and then go back again. Exactly what you did yesterday. Okay, just took slightly this liquidity and moved down again. Keep respecting these lows. So trade what you see at this point within this level until eventually that breaks. But it's a good example of just what I just mentioned. Okay, it's a different move like this, different thing just to trade this. Okay. I trade T-Bail. I trade as and as. What is your take now? Well, actually, the market just opened. Let me see what's going on in here. Let's just see what's going on in here, because price actually is still holding that level. Okay, price is holding it. Nas actually went a little bit higher. Okay. Only when I pass a few 100k challenges and I become consistent, I will consider full-time trading. Also, I made sure that when I was full-time trading, I actually gave it all to learn and develop. That's important as well. Like at least maximize as much as possible the time you have. Okay, don't just pretend that kind of you are doing something. That's also really important, Rafael. And thank you for sharing. Okay, what else, guys? What are you looking at? What are you guys looking at? So we can see that NASDAQ, sorry, S&P. I'm going to be looking for price to go a little bit higher. And something that I can see at this point is that we haven't really managed to break any lows so far. Okay, so price at this point is still holding. So there's no low being broken at this point. Does price wants to go all the way and take this top, or is it enough to just to take this one in here and maybe start moving to the downside? And if price by any chance has any kind of bearish move right now, where can we potentially look for another long if that will be the case? I'll be more interested in looking a little bit more into this level. Actually, let me set up an alert. Yeah, I'll be looking more into this. NAS, okay, NAS, yeah. NAS basically just took out the structure. So NAS has all this reaction. For some, this could be even a potential Quasimodo pattern. Okay, this could be looking like a Quasimodo pattern at this point. For sure, if Victor was a key with us, maybe that's something that you would look at. I'm not sure if then you would have one of his order blocks in here or not. Maybe not. I'm not sure. But this could look like one of those interesting Quasimodos. And price features just took liquidity from here, and it could start moving. Now we have the base of these levels as well. Maybe I can go into 1 minute just to see what's going on in there. Because you do have this one. Price dropped. Continue to drop. Maybe this is one of the last attempts to go higher, and then price cut and the FT supply. Price basically reacted from there. So that's maybe where price actually end up going to. I'm looking at this specific kind of in here. But it was already kind of reacted from there, so yeah, so price just went a little bit higher. There you go. We are having a little bit of selling pressure, just similar to what happened yesterday. Selling pressure during the US Open on the NAS. I think price could try to get a little bit closer to these levels at least, and then we'll see, and then maybe bounces to the upside again. Google. Google, that's interesting. Google is basically at the all-time highs, right? This is $334. And by trader, are you mentioning Google? Did I read correctly? Is it Google? Or gold? Must not be Google. Is it Google that's running? Are you trading with trade the pool? One second. Ah, yeah, okay. You're using trade the pool. Okay, got it. Got it. Thanks for being on this stream as well. Got it. Actually, I should try trade the pool as well. But I think it will require a little bit of learning from my side, just even to get used to the software. Yeah, it's a tricky one. Like it's all-time highs. I was actually hoping eventually for price to move down, but it's more into potential investment opportunity. Yeah, it could. Who knows? It could, as long as it kind of keep respecting the structure to already hold it. It could push higher, maybe to target the all-time highs again. Yeah, so who knows? That could eventually play out. When is the earnings? When are the earnings? On the 4th of February. So it still takes like 3 weeks until then. Okay. Yeah, I was hoping that price could drop in here. There are a few of those that are dropping for the Microsoft. It has been really bullish all the way until summer, and then start moving downside. You created this big double top, and price moving down. Potentially, we may go and come all the way to this gap. So that's going to be an interesting one. That's going to require already good sell-off opportunity, kind of a good push down. Even if it goes there, it's already 23%. If it goes there, we are close to 28 to 29, 30% retracement. That could be interesting to aim for a trade. We even left behind now this structure. So that's a really strong structure. So even if price comes back up, you can take this liquidity and you can even continue to move to downside. That could be a good approach. We just broke this low as well. So yeah, price could eventually aim towards this level. This is a great double top. in there. Meta as well is kind of moving down. Another one that can keep respecting double tops and now potentially moving downside. We'll see if price comes back into this close to $500 mark. Yeah, there are a few in the higher time frame, which is nice to see it as well because can help with the bias for NAS in the bigger picture at least. But we'll see. Like and subscribe, exatamente. Come on guys, continue to smash that like button and the subscribe button. We are on the way to 100k guys, 100k. That's a great achievement. You are short on NQ at 2594. Oh, that was yesterday. How did you get there? To find it, that must be futures, no? Yeah, that must be futures. DJ, welcome. Welcome. That again, the most important point on that analysis that I did about the euro dollar is to go study the kind of the order blocks that are created in the middle of kind of a swing, kind of a bullish trend or a bearish trend, whatever, and go see how often those middle order blocks are respected after price turns. Okay, not on the way that price is still moving to the upside. When price is still moving to the upside, usually those order blocks are, of course, great levels to potentially continue to look for longs. But eventually, when you do see that the top is being created, and you can just again go back into the past and see some examples and see what type of behavior usually price tends to have in there, and because that can help filtering out some opportunity, some kind of losses, and when to trade those levels. Because that was one of the biggest mistakes I was doing. I was treating every single demand or supply, regardless of where they were, almost the same way. And then some of them price would just break through, some others would react from, and then I think and then kind of trade the second reaction from the level, and then price would just again break through. So yeah, that's gonna be nice. It's not doing much neither. Yeah. So that looks like it's a bit more indecisive at this point. We opened like 12 minutes ago. I'm still looking a little bit more to the upside. Someone asked the yen pairs. So we never talked about the yen pairs, correct? So what do they have? We finally had the move to the upside on the yen pairs yesterday. On the yen index, sorry. And basically the sell-off on the yen pairs. Which unfortunately I didn't manage to capitalize on anything. This was a little bit too early for me, and I'm curious to see what's going to happen eventually when price comes back into this level. Okay, so again, what usually we have on the index is that we do have the moves. Price does tend to react to the upside, but then more often than not, price tends to come back at least back into this structure, or at least to respect a close to double bottom. Even if this by any chance is about to be a bottom and price is ready to go to the moon, most likely price will still at least try to get close to this level again, or price can even end up creating new lows, which means that maybe euro yen, dollar yen, and so on may still end up creating new highs. But the reality is that we are getting close to important levels. Okay, again, as we are getting close to this 160 mark on dollar yen, as you could see as well, there is starting to be more talks and conversations with it's either the BOG or the finance minister in Japan or whatever it may be. There's going to be pressure definitely for the yen not to continue to just rally and go to the moon, correct? Because that definitely has a direct impact on the Japanese economy. So we may start seeing a little bit of a selling pressure. The price basically took a little bit of to the moves that we had on Aussie dollar and pound dollar last week that I mentioned. Is exactly the same structure. So that's an interesting one. Now price just came back. There you go. That was the space available. Okay, this was the space available. Price had already broken the structure, so it basically opened a little bit more. As soon as you start breaking, that was the space available. Unfortunately, price just moved all the way to the downside without any retracement, so I didn't manage to capitalize on anything. But price reached the target that I was looking for. So now, if price continues to hold these levels, I'm not really going to be shorting anything in here. I'm just going to let price eventually continue, because at this point it looks like the price is about to just do maybe something like this. If by any chance we do manage to break below this level, then potentially this could be things for a short, unless I do have some kind of move like this, and then there's maybe some break, and then maybe I can try to trade it. But at this point, I still don't really see any bearishness on this dollar yen. It's a bit different on the other yen pairs. For example, if we go into Aussie yen, that was another one that we were looking for. Good reaction from this supply level on the left. And 1 second. And at this point, potentially price can even go a little bit lower. Maybe price already reacted from this last high. Yeah, got close to that level, but I could see could still see more bearishness on this Aussie yen, and I'm going to be curious to see how price may react from around this level. Even if you do have a new fake out in here, I'm going to be still looking for shorts. So I want to see eventually how price may react at the level. Pound yen, as you can see, is already making even new lows. Reacted, range, new lows. Again, that goes in alignment with the pound, and one of the targets it will be definitely close to this level. Where are we in the weekly? Yeah, we're still trading within this top. And then the euro yen as well, unfortunately. Euro yen, we are still trading within this monthly, basically supply. I've been talking about this for months now. Price already had a few reactions from within this level. And now we continue. And this could actually start looking quite nice as a potential top being created. It still misses some kind of proper break of structure. For example, this one kept respecting this level. So, for example, if you do break this level, maybe this can actually end up being a potential top in here. For a bigger move to downside, who knows, maybe could come all the way back to this level. But for now, that price just broke this structure. I think, 1 second. I think we may be within this range. Yeah, I think we could be trading within this level, which means that maybe could eventually aim for targets closer to this structure in here. But you do have a little bit of this parallel gap, so attention to something here. But honestly, I think price could go down, and if price by any chance decides to go higher, I think there's maybe still opportunity to look for a move to downside. And who knows if this now is going to end up becoming an interesting, you guys already know, quasi-model for the future, for then price to do something like this. Okay, and this eventually is how you can trade what could be eventually the head of a quasi-model pattern. In here, again, it was slightly too early for me yesterday, and I didn't manage to trade it. So that was actually the end pairs were the main focus for this week, at least the beginning of the week for me, which unfortunately didn't do anything with it. All right. Pedro, do you mean when price makes a U-turn, U-shape, then violate those order blocks? Thanks. Yeah, basically, so when price, so we have the bottom being created, and now price starts moving. Okay, so when price starts moving, eventually it's going to potentially leave some order blocks behind to see if price eventually touch them and continue. Okay, and then eventually, let's pretend that this was maybe the previous important top or whatever. Now we can look at this maybe monthly time frame, whatever it may be, and on the daily price keeps on moving. Leaves this one, now new order block in here, now price touch it, eventually now new order block. As you can see, we just left our fair value gap in there. Okay, and all of a sudden maybe now this order block is left behind, it's never touched, and price just continues and now starts touching these ones. There you go. So maybe let's pretend that you have an order block in here. These ones will basically touch on the way up. And then you have maybe the next one in there, okay? And all of a sudden you have, this is the last basically order block, the last low, relevant low that is created. And you have price reacting from here. And now it breaks, okay? It's basically similar to what we had in here. And now eventually we are expecting, or for some people, they are still looking at this valid order block, thinking that price now from here is going to potentially, whatever, it's going to go all the way. So it's after price potentially shifts after reacting from a valid level on the left side, which maybe can be the beginning of this type of a move. Be careful trading these ones. You may be able to trade it the first time around. It's actually quite similar to what we just had on Euro, but maybe this move is just it's just for price to retrace to this level and now continue. So you may still be able to trade this level one time, okay, first time it touches, but be careful trading. Be careful trading this one. This is the one that is going to be most likely this type of move. It's basically what we had actually on the euro dollar right now. So that's what I mean. So be careful trading a little bit of you can trade them, but be careful thinking that price is just ready to go, especially if this stop is already in a good structure. Maybe the likelihood is eventually, yes, you can have some ranging market in here. Price is going to be bouncing in between, but the probability is that maybe price wants to now to go into this level. Next. Now this can take this can be 5 minutes time frame chart, and this can happen in 30 minutes, or this can be a daily, weekly time frame chart, and it can take 2-3 months to evolve. I hope I managed to answer the question. But good questions, DJ. Thank you. All right. So what do we have more? So yeah, that was on the euro yen and the yen pairs. In my opinion, I think there's still good opportunities. So how I'm wishing for is for price eventually to retrace back close to the top, which potentially could be in a moment where this yen index would come back closer to this range, and from there, hopefully, we're going to have the move, and that could represent eventually that not exactly on this one, but that could eventually represent. Maybe on this one another, but yeah, somewhere around here to short it. Oh, somewhere around here eventually to short it. That's my wishful thought on the ends. So what are you doing with US indices? Okay, we are moving down. Yeah, these levels are good. These zones are good. Basically to the pipette memory of let's not say memory of Victor. Looks like he's not here. But yeah, like Victor likes to say. Yeah. Yeah, I was looking again, still a little bit high, incredible. What about NASDAQ? Yeah, NASDAQ now is coming back into this level. So we took the liquidity. It's a little bit similar to what we mentioned when Richard was still here, that sometimes price tends to recover during the night or the London session, and then during the US we do have those moments where selling pressure just comes in, and maybe then tomorrow it's going to be the same. But this was the initial reaction, so I'm curious to see how price may react from here, because if there is any type of continuation setup, I would like to see it happening from around this level and not to go much further down. That, in my opinion, could start actually opening a space for price to go even lower. Pedro, I see. So price potentially, after finally turning around, use those order blocks as a liquidity pools. Yeah, more or less. And you can, again, my recommendation is go look for examples. Okay, go for examples to see how usually price tends to react from them. In those mid-range structures, as price eventually is going to move in that direction. Okay. Any other charts, guys, that you are looking at? What is gold doing? Yeah, gold is kind of going back. What is gold doing actually? Oil, again, I'm missing my levels by a little bit. So oil did a great move, coming all the way back into basically filling this price. Okay, so as soon as we broke this level, I was actually looking for a potential long at around here, but price missed my level by a little bit. Because literally I was looking for price to fill out this compression and come back into this top. But I was actually looking for price to go slightly higher or even take the stop, and after that to look for a short, basically to get really close to this $63 mark. But there you go, price didn't really got there, just got a little bit closer to here. Maybe if I do actually look at this level in the lower time frame, maybe I actually can see where price reacted from. So 15 minutes. Okay, this is the beginning of that. That was one that's too big. It's the beginning of that zone. And then we also have a little bit of a battle between buyers and sellers around this level. And you have a decision point around here. So that one is already touched as well. And then price goes. This one is already touched as well. But you may have left a little bit of a Quasimodo in there. And you can see that this is maybe one of the last ones that was left behind. And maybe we can even consider this one as well, which was basically the opening of a gap. Okay, so if you do extend this to the right side, where is price actually reacted? This is just an exercise, something that I like to do, and you can see, okay, that's actually price reacted, and it can be more precise to see exactly where oil ended up reacting. To 50 minutes, I think that's where we were. Okay, so as you can see, it came all the way to the extreme of this level. Basically, this is a Quasimodo that was created in here within this flag. Okay, yeah, it's not about level where oil actually reacted, the top reacted, but for some reason I was looking for price actually to go slightly higher to take this double top, and after that looking for potential short. So I was looking for price already to take these highs, which didn't happen. So oil is stuck into this range once again. Yeah, that's an interesting one on oil. Dollar yen. Okay, there's no need to. Yeah, there's definitely no need to spam. Bitcoin. Okay, good luck with your crypto. Dollar yen. What is your take, HB? What is your take on dollar yen? What are you looking for? Are you looking for longs? What do you think that's going to happen? Let me know in the comments. As we are approaching the end of the live stream, so time flies, guys. Honestly, time flies. Anytime I'm doing this live stream on a Thursday, that's when I realize that it's Thursday. Okay, and I realize basically the week is almost over. It's when I finish this live stream. Yeah, basically by the end of this live stream, I realized, okay, basically the week is almost finished. But yeah, let me know in the comments, at least HB, let me know what you are looking for on dollar yen. Are you looking for long shorts? Personally, I still see this level as an interesting level for potential shorts. Okay, however, as I mentioned, price reacted nicely from this demand zone, which also on the daily time frame, as you can see, was the previous daily candle. So this is Tuesday, this is Wednesday, price respected the level and it didn't break it. So I'll be much more confident in looking for shorts if at least this dollar yen had managed to break at least below this low, okay, got a little bit closer into this level. And because that didn't happen, I'm still a bit cautious on looking for more shorts. If price by any chance now starts breaking below this level, now this becomes interesting. Okay, when I'm looking left, where did price reacted? Okay, so when I'm looking left, we can see that price came all the way back to the extreme of this compression. Now, I know that on the 1 minute time frame or 5 minutes time frame, there's a little bit of there's a few more candles going on in here. Okay, this is actually not the extreme. In this case, it looks like the price broke, retest, and went, but that's not the case. Okay, in 1 time frame, there's something like this going on. Okay, so there's maybe another level a little bit higher. That is actually the extreme after the big sell-off. But there you go. In the higher time frame, again, similar to what we mentioned last week on Aussie and the pound, when price finally feels a big level of a compression, tends to have some reaction. Okay, it's exactly the same level on the Aussie and on the pound. now what am I trying to answer with this analysis is this makes sense to be the top, or I could see dollar yen still continue to go a little bit higher for a potential turn. Yes, definitely dollar yen could still eventually go higher. It's a good level to have some reaction, but price may still want to create new highs. Another interesting part is that yes, we do have liquidity with the stop, which makes it a bit more attractive to trade, because we just literally took the liquidity from the top, and you could have a little bit of a bigger reaction. But that's a bit of what I want to see. I'd like to see first these lows, this structure being taken, and then look for the short. All right. Pedro Fess, thank you. DJ, thank you very much. Thank you as well for the comments and the questions that you ask. I think it's impossible for us to have a good session here if you guys are not asking also interesting questions and sparking some conversation with you guys during the live stream and on the chat. So that's me. Thank you, all of you, for joining us on a daily basis our live stream. Without you guys, this wouldn't be possible, as you can imagine, and we are this close, as you guys know, to 100k. So continue to share this live stream with everyone that you know that is also a trader or that wants to learn how to trade. Let's help the channel to get to 100k, which is going to be a really important mark for all of us, okay? Because we have been putting also a lot of hours. We share a lot with all of you in this on a daily basis. And yeah, and it's great. It's great for all of us as well that are part as a host, at least to also communicate and speak with the other hosts and with all of you. So yes, we got to the end of the live stream. So for me, thank you very much once again. We are going to resume with the live streams next week. Okay, we are going to have another session from Monday to Thursday. As always, you know where to find us. For the Portuguese community, we're still going to have another live stream in 2 hours time. So if you, by any chance, you want to learn Portuguese, if you want to, or if you're ready to speak Portuguese, I'm going to be there. So join us, subscribe to our channel as well. And then tomorrow, actually still today, we are going to have another session on Discord. Or maybe it's going to be Richard, if not mistaken. And then tomorrow we have another 2 sessions on Discord. So if you also are not part of our Discord, I would also recommend you guys to join us on our Discord community, because it's another place where we share a lot of knowledge with all of you. And it's great, above all, to see all you guys achieving your success and being profitable and making money with the Fivers. Thank you very much, guys. I'll see you on Monday. Bye bye.